What is up, people? How are we doing?
Yo, good morning.
Good morrow, sir. How is thy people of the fivers? Let me put...
I got my merchandise. I got
Got
my
me
merch.
merch.
I got me
Got me
merch.
merch.
I was in the gym this
I
morning
got
with
my...
my Fivers hoodie. Represent.
Yeah, I usually wear it... Well, I'll go into the gym with it. I don't know where my hoodie... I think it's hanging up. I usually go into the gym like with just a vest. It's so hot here, so I'll run to the gym just to exercise and get that sort of warm up, and then I'll jump into the shower after the gym, walk out in like full Fivers merch, and I'm like, yeah.
Look at me, boy. Anyway, how are you this morning, mate?
Good, mate. I'm feeling 100% up there. Fantastic. I felt a bit weak today in the gym, but I've been ill last week, so if you don't
To be
use it, you
expected.
lose it, and it was just my body's slowly recovering over the weekend. My sleeping's still not quite there, but bro, I am feeling good. I'm ready to smash the market. I've just entered a long on Euro, hoping that hits TP because that will continue my fantastic mood throughout the day.
Yeah, dude.
What about you?
I did not sleep well. I had, I think, 6 hours of sleep, but it was very disrupted. Woke up a lot. Don't know why.
That's
So I was a
that is
bit tired
super
this
well.
morning. Went to the gym. Also felt weak, but did my best. I tried, did all of the exercises, struggled through each one of them, no problem. Came home, had a coffee, took a trade, 1.5% locked up, decided I'm in a good mood today, all of a sudden. So,
Beautiful. I just
so
all of a sudden, I'm now
all of a sudden, I
happy.
don't know why. Yeah, I don't know why. I just feel good. Um, yeah. So had some breakfast. Well, it's not really breakfast, but it's like I don't know if you can. Let me put it next to my face, maybe, or in front of
And
my
put in
face.
front of, yeah, there you go. All I'm looking at is Chinese symbols that I can't read yet.
Yeah. So this.
Milk.
No, it's yogurt.
Oh, fair. Oh,
Yeah, it's we have a very lovely Chinese takeaway close to us, and they have a bunch of products there. So we got ourselves some Kewpie mayo and
nice.
and then this, and I had this a little bit of it this morning, and yeah, feeling good, feeling good. Weekend
Nice one.
was weekend was fairly decent. We did not have electricity yesterday. We were D&Ding in the morning, role playing, and then midway through our D&D session, power just went, and then we didn't have power for the rest of the day. Came back. So if the power does go out here today, you're just gonna have to take over for a little while, mate, so I can get the generator up and running, and then I'll hop back in. Just
Dim
so that you are aware.
problem.
Yeah, just in case.
Dude, I've just had like a really bad sort of pressure build up in the back of my eyes. How random is that? I think it's my ring light. I think it's because I haven't had the ring light on all weekend. But now that I got the ring light, I'm like, so bright.
Dude, you said you're in an EU trade. Do you want
I
to
am.
show us? You want to show
Let's
us what's going
absolutely
on?
do that. Let's bring forth the trade of the euro.
The
I need
trade
to
of the
actually have
day.
the trade of the day. There we go.
I'm
Really
just
nice reaction.
while you're doing this, mate. I'm listening, but I'm going to mark up some stuff from the trade that I took this
Awesome.
morning as well. So you do.
Yeah, I was. That's basically what I was doing. Like as we were getting ready to come through onto stream, I thought, you know what? I can't enter a trade until we go live. So I was like, I'm seeing something here. I was like, come on, let's just mark it all up. So hence why you can see a pile of markings already on screen, because I was really looking forward to this becoming a valid trade entry. GU hasn't given me an opportunity to enter in just yet. GU looks beautiful. Mon chéri, it looking very nice. So if we can What am I looking for on GU for an entry? Probably somewhere around here. Yeah, nice. Confluence stacking at its finest. You know, we got break, close, hopefully a retest, consolidation, or sorry, I say consolidation, sorry, high. We've also got this fair value gap or imbalance here. We've also got the center line, which is the equilibrium of the sort of zone that I've marked out, and we've also bang on in the middle of my golden zone as well. So, you know, potentially GU to, you know, enter into here, but I don't think we're going to get it. I think we're going to move and hit higher highs before. I don't think we're going to get that GU trade. However, EU, magnifique if we can get this. I'm up about $82 at the moment. So if we can get this trade to continue that trajectory up, I'm a little bit nervous about this area here. I'll be honest. We've got a consolidation zone here. And it's a potential point of continuation when it comes to the downtrend. So what I am looking at is we've got Asia highs, but I'm not going to use Asia highs. I'm going to use the highs just prior to Asia, which I suppose is technically Sydney highs. So I'm just going to keep an eye on that, which is, so we got these highs yesterday. Well, no, it wouldn't be yesterday. It would have been Friday. So Friday highs or Sunday morning, I suppose. So just going to keep an eye on that. We have got really nice area where we have swept below the Asia lows, Asia low consolidation, moved higher, put in a high, put in a higher low, put in a new higher high, put in a higher low, put in a higher high. So the only time I'm going to look at this as an invalid trade, and it would be very annoying if so, because this is like that perfect channel to the upside. Like I said, I am a bit concerned about this as we have tapped into it and moved off in a really nice bearish direction. So I am going to keep an eye out. If we do break and close below this low here, then we would have put in a lower low, and therefore the trend is switching to bearish. So that'll be a little bit worrying. If it does that, so be it. You know, it's just how the cookie crumbles sometimes. But if we can, I'd like to see us, even if we chop around and consolidate here and then slowly move higher and then take out the previous highs. So that would be really nice. I think that's my my lowest hanging fruit. I suppose technically low hanging fruits are these highs here. Next low hanging fruit would be this consolidation, these highs, and then these highs here. But EU seems to just be absolutely tanking, so never mind. Maybe we won't even get the opportunity to take out low-hanging fruit, profit. But we'll see. Yeah, maybe we won't catch a profit. Who knows? GU is coming down. I will be interested in entering in on GU as well. We have disrespected this consolidation, this potential point of rejection, reversal, or, you know, I'm looking at an uptrend trade, so this to me is a potential point of reversal. So we have disrespected that by breaking and closing above it, as we can see here. So a pullback into this zone and a continuation up looks like it could be rather sweet, if I am honest. I'm just hoping EU can hold this zone if GU wants to drop. The Dixie, let's have a look at the Dixie. It's okay. It's quite literally the opposite price action to EU. So you know what? I don't hate it. Wrong one. Let's try again. Let's use this one here. There we go. There we go. So we are in this downwards channel on the DXY. So I'm not hating that right now. Gold is looking bullish. I do want to be trading gold. I would like, in all honesty, I'd prefer to see a bit more of a consolidation, then a breakout, retest, continuation, and then I'll be targeting either this consolidation area here or these prior highs up here. We got Asia high up here, but I don't think I'm going to target Asia high. I'm just going to go a little bit low and target these low-hanging fruit highs over here. So that's going to be an area of interest for me also. I am going to be wanting to buy gold today, I believe. You know, we'll see how it goes, because we are very bearish at the moment as well. So you know, you just got to be very careful when trading in this bearish trend. So potential point of continuation for me is here. So in an ideal world, I'd like to buy up to this zone here and take out. But we'll see how it goes. No, we're looking okay on euro. You know, it's not too bad. Pound. Oh, I've just seen he's Rich has dropped out. His power's just tripped. Tragic. Okay. So yeah, euro it's looking okay. It's dropping, but it's holding nicely, and it's trying to reject this zone here. So it's rejecting this zone here now. Yeah, I don't want to trade gold at the moment. It's just looking a bit crap. EU finally just moved back up into profit. Like I said, there we go. You know, GU. I meant EU. Sorry, GU. I didn't think we were going to come down that deep. It would have been nice if we did, but I couldn't see us coming down that deep. Oh God, no! Come back. I hate it when I do that. There you go. So price coming back down, boom, up, do something like that. But I didn't think we were going to come down that low. If anything, I'm hoping that we're going to move higher from here and put in that new higher high. So we'll see how that goes. You know, we're currently in this range at the moment, so it's looking quite nice for that continuation higher. Euro looking quite nice as well. No reason to be concerned, no reason to take out, no reason to get out early. We've actually now put in another higher low, which has been here, which is fantastic. So we've now got this range low here. So now if we can move something a little bit like this, if we can move up higher, pull back, continuation, that would be textbook trading in my eyes. But again, it's not how the cookie crumbles. Price never moves perfectly. Sometimes it does, but you know, those days are lucky days. So we're just gonna have to battle the storm. You know, maybe some rough weather's coming our way. It's just time to batten down the hatches and get ready to smash out the markets and see who can come out on top. Right, that is my trade analysis, guys. So let me know who's in chat today. Let me know who's trading what and who's saying what, and then I'll have a bit of a catch up with chat. So we've got Atukan saying, hello everyone. How are you doing, brother? How you doing? What is good? Daily facts. Good morning, sir. Good morning to you. Caleb saying, sup. What's good, my friend? How you doing? Gentle Storytime Official. I don't know what that means, but good morning to you. Greetings, MGN Thalent here. How is you? How you doing, my friend? Some more strangeness going on. Gentle Storytime. I have no idea what you're talking about, my friend. Ty Keith. Good morning, good morning, guys. Good morning, Ty Keith. How you doing, broski? What's good, my man? Henry, good evening, good morning, good afternoon, good evening to each and everyone globally at the moment. Henry, good evening to Down Under. Astral, what is good, my friend? Good morning, how you doing? Stashen, good morning, everyone. Good luck. Luck might not be the main thing, but definitely helps. 100%, my friend. People say to me all the time, you know, when I say, oh, good luck with this, good luck with that, I don't need luck. It's all about discipline, consistency, etc. Facts. It is 100% all about consistency and discipline, sticking to a plan. However, I'm not going to say no to a little bit of luck. So good luck to each and every single one of you out there trading the markets today. Theola, good morning. Richard and William, lovely shirts. Good morning, everyone. I hope you have an amazing week. Absolutely. I hope each and every single one of you have the most productive week possible. And thank you. We do like our shirts. As I'm just caressing my my pectoral. New week, new opportunities. Yes, Remy, absolutely, my friend. New week and new opportunities. Every day is a new day to be thankful, grateful, and motivated and disciplined to be a better version. A better version of yourself. It's better. Back to it. Some interesting numbers on Trading Star when I checked last night. I'm not sure what you're on about, my friend. Hi bro, good afternoon from Indian. What is good, my man? Good morning or good afternoon to you guys over in India. How you doing? To my fantastic Indian friends. Caleb, what was the plan today? Plan today, my friend, is hope that EU sticks to my trade analysis and it sticks to my plan as much as I'm going to, and hopefully we get a massive TP, a full 2.5 hour TP, but at the moment it's looking like it's trying to wick and push down, so I'm not sure, we'll see. We're currently at a low, sorry, at a higher low. GU's putting in a three wick rejection as well. Oh, we don't look bad. We don't look bad at all, guys. I'm okay with this. I'm still confident in this. It's not too bad. So let's see how it goes. 2.5 hour on the line today. So that's the plan. Plan is just to hold through, stick to it, and hopefully have a full TP, not a stop loss. Are all of you ready to smash this week? Drop your energy in the chat. Yes, but before you drop your energy, make sure you drop us a like, make sure you drop us a subscribe to the channel, and then make sure you drop the energy into the chat. Let's bring up this Monday morning trading session together. Good morning, guys. Good morning, SSBT. What is good, my friend? 100. Yes, my friend. Feeling good this week. Yes, awesome. So am I. I'm feeling super good. Even though I haven't rested as well, I still feel really good. Smashed the gym out. Also, some great food. You know, I had 3 I think they were Taiwan sausages. I don't know, but they were whatever they were fantastic. Had some eggs. I sort of like semi-scrambled the eggs. It wasn't like milk and all that garbage. It was literally just fry an egg and just scramble it on the heat. So that tasted amazing with a little bit of pepper on, and then an avocado. So I'm feeling good. I'm well fueled. I'm well exercised, and I have got some fantastic company in chat with me today. So hopefully the trade, like I said, hopefully the trade analysis can also back my idea of being lovely, which at the moment it seems to be doing quite well. So, you know, it seems to be okay. We're sitting around just above break even. You know, it's not awful. We're not in the slump, so it's good. Only one yellow news today. Crazy. I'll tell you what. I'll check out the news in just a bit. Let me have a catch up with chat, and then I will indeed check the news for you guys. There we go. But yeah, in fact, you know what? Let me just bring up the news now. Let me just go on Forex Factory. Oh, the Wi-Fi seems to be doing okay as well today, which is nice. It's very nice. So I don't have yellow folder news ticked. I don't like seeing yellow folder news. So what I do, I go into this top right button here. You can see this little green button on the right, top right. It's a filter. I have it filtered, so I can see. I was only having the pound, the euro, and the dollar ticked. But due to the fact that, you know, I'm streaming now, you guys ask to see some assets, some pairs out there. So I do have all the currency ticked now. But I don't tick the grey folder, I don't tick the yellow folder, just orange and red folder news I have ticked. And yes, today we only have at 8 PM tonight. This is GMT as well. I have changed it and filtered it over back to GMT. So 8 p.m. UK time, we've got New Zealand dollar, where we have got Gov Bremen speaking. But yeah, oh no, euro. What happened? What happened there? Yeah, so we have not got much news out today. This should be a good day for trading. I apologise for saying so, but I have a feeling your stop loss might be hit before reaching your take profit level in EU. Dude, quite possibly. Yeah, you know, it seems like it is moving down. But if it is the case, that's absolutely fine. You know, we've hit my entry criteria, we've hit my trade plan, and I'm going to execute according. Hopefully that we see it hit TP. If it doesn't, it's just going to go into my journal, and you know, who cares? In fact, actually, what are we looking at for the month? Because I believe I've had an okay month. It's been about break even, but it's not been a bad month, you know. So let me just get my history. Custom history, let me go. Oh, I hate it when it does this. January 1979. Why would it even suggest? Oh yeah, let's have a default of back in the 70s. No. Right, bear with me. 2026. We are in March, and I'm going to go from the 1st. I am up a whopping $246. Okay, it's not as good as hoped. It's not a great month, but it's not a losing month. So we're only up $200, but up is up. So we'll see how it goes. How are you approaching the week? Aggressive, cautious, let's hear it. Absolutely, guys. Drop down in chat how you're feeling for this week. Drop down in chat how you want to approach the market and what your thoughts are. John Essex saying, good morning, guys. What is good? John, how you doing, my friend? Good morning, William. I also have the same long trade as you. Raphael, you absolute legend, my friend. It is looking okay at the moment. We had a beautiful wick rejection just now, so hopefully we can close that in 2 minutes time as a very nice wick rejection and a continuation to the upside. So let's see how it goes. My payout request was approved since last week. I still have not received. How long must I wait? What day did you have it approved? If you had it approved last Thursday, then the fivers don't operate on Friday, Saturday. Friday, Saturday, I think it is, and then they start opening up on Sunday. So just be patient, and if there are any issues, like if it's been a week or two, then you know, go check out the support team, ask them, and go see what the situation is with that. But well done, and big congratulations, Julius, on getting your payout approved, my friend. Big congratulations on you, you absolute legend. Awesome. Hello, I'm already in a gold and silver long. Lovely stuff. Let's have a look. Okay, let's have a look. Let's start on the hourly. So maybe let's go to the 4 hour. I can't see a reason to be buying this on the hourly, the 4 hourly, or the 15-minute right now. The only time I'd buy this is probably the 5-minute. And it would be a very high risk reward trade. Oh, sorry, not sorry, high risk reward, high risk trade. And it would be based on the break and close above this consolidation. I'd want to put my stops down here, but I think I'd have to put my stops at the lower the consolidation. Could I get a 1 to? I couldn't even get a 1 to 2. I think I'd have to be targeting around push a 1 to 1, and I think even then that's brave. We're very, very bearish. However, you know, there's definitely a room for a pullback. There's definitely reasons to be buying on. Oh wow, quite the opposite just happened on. You know, we had that massive wick rejection. Now we had that very opposite wick rejection to the upside. EU can't decide what it wants to do. Yeah, I think we're in a very bearish market on gold, so we'd be very brave to buy it right now. However, I think there's definitely buying. I think there's definitely buying opportunities for gold. Especially given such a drop. Ami saying, "Hi William, I'm from India in Euro. I am bearish for the intraday. Can you please check again?" I can check as many times as you want, my friend, but I'm always going to be bullish because that's what my plan is saying. However, do not change your plan, my friend. If you are bearish and you are shorting, then good luck to you, because I am currently in drawdown on Euro. So it doesn't mean that I am correct. It doesn't mean that I'm more right or more correct or better than you. It just means that this is what my strategy is showing me. This is what my plan is saying. And this is what I'm going to execute according to. However, if we do get a break and close under this low here, like I told you, we had this area here. This is now the new low. If we get a break and close under this low, I'll be considering taking out of the trade. So it'd be a break and close under the previous newer low. So yeah, potentially Euro still bullish. Maybe I'm a bit early. Maybe it's just not ready to buy up yet. But you gotta stick to your plan.
Hello.
Yo, Richard. What's good, my friend?
Sorry about that. My power went out. We're on the
Here's
generator
what it is,
now.
my friend. Do not stress.
Yeah. So apologies to everybody in chat. I'm trying to. I was telling Will earlier that if my power were to go out, mate, I'm sorry. Just like, please forgive me. Just
Great.
Carry on without me. Carry on without me until I can get back.
The show must go on.
Yeah.
Yeah. No
Anyway.
problem, man. Don't stress. So, have you been in any trades this morning, Rich?
I have. I just had to like remark everything because it. Obviously, as I was busy marking everything, the power trip, so it didn't save. Didn't save the layout. But yeah, you can bring my screen up, and then I'll show you what I had done.
I was about to say, let's have a look on your screen. Let's have a look on your charts, see what you have been trading, because I believe you've had some nice trades today.
Yeah. So, where do I start? Okay, I'll start with this. So on Friday and Saturday, I'd been doing quite a bit of backtesting, and it's basically on the idea of what LJ and I were talking about a while ago, well, somewhere in last week. We were talking about why don't I let some of my trades run, and why don't I just take a bit of profit, move it to break even, and then kind of like see what I can do from there. And I've been mulling this over the whole of last week since we had the discussion. I then came to the conclusion that I was like, no, I should stick to what I know. And then I did some backtesting. I didn't get some time to do backtesting in the week. I got to do it on Friday because obviously we're not streaming on Fridays. And I got to do some backtesting on Saturday. Very interesting what I found. And the back testing that I had done was basically over the last 6 months worth of trades that I had taken. I just took every trade that I took, I marked everyone up, and then kind of like just how would it have played out. So here's what I came to. I have a 66% win rate with a 1 to 2. That is in general. So that's my general win rate with a 1 to 2. A 1 to 1 is closer to 80% with 1 to 1s, but it makes sense. It's just I choose to take one trade here and there. 80% win rate on a 1 to 1 is good, I think. 1 to 3, it drops lower than 50%, and 1 to 4 is lower than 40%. It's about 38% of the trades that I have marked would have gone to TP4. So what I decided was I was going to, today for a trade, I was going to split my trade up into 4 trades effectively. So with the position sizer that I have, the free one, that is the earnforex.com one, you can go and exactly mark it out. So let me just show you here. So okay, this is my 5K stream account. So here's basically what it's lined up. So you can, on the position sizer on the main tab, you can go and add TPs, as many as you want. So regular TP 1, 2, 3, and 4. Okay, so I can remove them. So TP4 is away, TP3 is away, and then I can just add them back again. All right. And on the trading tab, you can go and select what percentage of the current risk needs to be closed at which take profit point. So in my case, I selected all of them as 25. Okay. So I take 0.25% off every take profit point. So take profit 1, 2, 3, and 4. Simple, straightforward. All right. So basically then I entered a trade this morning on NAS. We were slowly pushing lower. I remember we had a discussion on Friday night during our poker session that I thought that NAS was going to gap lower and push lower. And that's exactly what we had. We had a gap this morning. It consolidated, didn't really try and push lower than the, let's say, the opening candle of the day, until we eventually got to this point over here, and then we started pushing lower. So we broke through the low of the day, which had 1, 2, effectively 3 tests, and then a break and a retest. So it just missed the Tokyo low on this movement here. But when we printed this bearish candle, I'd already prepped everything. I was already ready for a sell. Just decided I'm going to put in my sell and I'm going to trade this. So the idea of the trade was exactly the same as I normally would have. We have a established area. We have a break. So you already have the low of the day, which already got tested once, semi-tested a second time, and then over here got tested a third time. So you have establishment, and you have a reaction on the establishment. The establishment reaction was this push lower. Okay, so with the push lower, we started going lower. So we dropped. We had a singular base and then another drop. But I did not like this. I wanted it to come back down and kind of test this 50 EMA and this 20 EMA that I had. I just wanted to see it pull back a little bit and at least come and test the lows of Tokyo. And it almost tested it. Just missed the low with this bullish candle over here. And then we started to print a bearish candle, ready, triggered, took the sell. So initially, I had the 4 take profit points. So if I did this, you can see this is a 1 to 4. So a 1 to 1, that was where my first TP was. My 1 to 2 was down here. My 1 to 3 was down there. And then my 1 to 4 was all the way down here. Now, so what happened was TP1 got hit relatively quickly. At TP2, the close of this 5-minute candle, it struggled. It just missed my TP2. And then on the second candle, it pushed up a little bit, and then it came back down, and then it closed. It closed my TP2 point. So I'd already locked up. So it was a 1% trade. So the first TP1 was 0.25% locked up. TP2 was 0.5% locked up. So I've already locked up 0.75% in profit. And I decided then, okay, what I'm going to do is if I hit TP2, I will move my stop loss to break even on the remaining portion of the trade. So I did that, moved my stop loss to break even just a little bit lower just to account for spread. But then my intention was I wanted to wait for it to continue pushing lower, taking TP3, TP4. That was kind of like what I wanted. But then I started seeing that we were really struggling over here to try and push lower. And more wicks above and below. And then on this candle, we had just closed, or we were just about to close bullishly, and I decided, you know what, let me just close the two two remaining. It's a single order that gets split up, but I closed the remaining 0.5% of risk, even though there was no more risk on the table because it was break even. Closed it, and then this ended up being TP3 and TP4 ended up being 0.375% roughly. So I ended up locking up 1.5% on this trade. Yes, it was a 1% risk that I'd put up, and that if I had closed the whole trade at 1 to 2, it would have been 2%, which is what I normally would have looked for. But I decided with this, if I tested this and it works out, I don't mind taking off a little bit less with every trade, but knowing that some of the trades, less than 40% of them, will eventually reach TP4, which is a 1% gain. So if every single one of these TPs had been hit, the first one was 0.25% locked up, second TP is 0.5%, 3/4, and then 1%. It would have been a total of 2.5% locked up, which is only 0.5% more than my regular 1 to 2s. But I am reducing my risk every time I reach TP2. So the back testing that I had done, my expectancy picked up across all 4 of the trades put together. So the average between them, my expectancy picked up. So in the end of the day, it is more profitable for me to have a strategy like this when compared to my 1 to 2 set and forget. So that was my trade for this morning, locked up 1.5%. Up 4% on my new account as well as on the stream account as well. So not bad, I think. Not a bad trade, in my opinion.
Yeah, dude, happy days. Yeah, really nice trade, man. You know, I like that method that you're using now as well, because had you not done what you've done now, you would have just hit a stop loss.
Yeah.
So
I mean,
what you've done now is you've
I would have hit
some bag.
Yeah, I would have hit TP2 and it would have been a 2% winner. However, I want to test this. Well, I've back tested it. I didn't have any time over the weekend to test it on a. Yeah, I want to implement this because the expectancy is better, and I'm not changing much overall. So yeah, I'm just gonna kind of like stick with this idea for a while, and then let's just see. Let's just see how it goes. Let's just put it like that.
Yeah, nice. Yeah, nice, man. Just want to update everyone as well. I've closed out on Euro. It wasn't going how I wanted to. It broke and closed under what I had as a prior low or as a new low. So therefore, it was an identification shift and trend. So I've lost 0.5%. Doesn't bother me. It's not that bad. $500 is $500. Well, I think it was actually $450 I closed out on, so it's recoverable. You know, that's not too bad. So, bit of a negative start to a Monday, but I'd rather a negative start to a Monday when I'm following my plan than a negative start to a Monday by breaking my plan. So I'm still in a great mood.
I'm happy for that. The fact that the power went out dampened my mood ever so slightly, and yeah, but it's still a Monday. It's still a Monday, mate. I'm not gonna allow like these small little things to destroy my whole day or my whole week.
Is he gone again, or is it me?
No. Oh, is it both of us?
Yeah, no, exactly. Oh, possibly. But yeah, exactly, man. You know, it's a Monday. Don't let a simple trade on a Monday ruin your entire mood, especially given the fact that, look, you know, you could hit a 1 to 2, 1 to 3, 1 to 4, 1 to 5, 1 to 10 R trade tomorrow, and next minute you've recovered your entire monthly losses. You know, you can recover everything back very quickly as long as your risk management is correct.
Yep. Yeah, agreed. Don't really have anything to add to that. Tendry Stephen is asking, what's the name of the automatic tool on MetaTrader 5? So this is a position sizer. It's not a bot in that sense. It is just a literally just that a position sizer. You still need to manually enter all of the trades yourself, but this just helps with managing the trade and having specific risk tolerances and whatnot. It's called earnforex.com position sizer EA. You get one for MetaTrader 4 and then you get one for MetaTrader 5. This is for MetaTrader 5, obviously. It's a free to download, free to use. It gets updated regularly as you would think. Yeah, it's very good. I personally recommend using let's call them expert advisors, but in this case, assistants, let's rather say. I'm going to call it an expert assistant, not an advisor. I would really say go and have a look at it. We do have a link for it if Remy can just post it in chat. I think he's got it. And then you can just go and follow. Just follow the link, download it, install it, follow the prompts, read on the website exactly how you're supposed to install it, and then there you go. And then you can play around with it. I would suggest play around with it first on a demo account. So get yourself a demo account. There we go. Thanks, Remy. Appreciate. So go to www.earnforex.com, MetaTrader Expert Advisor Position Sizer. Free to use, free to download. Just all of the information is there on the website. You can just have a read there exactly how it works. But like I was saying, test it on a demo account first. Make sure that you understand how it works, and then go ahead. Yeah. The nice thing is it's drag and it automatically updates the information. So this is the risk to reward ratio. It's a 1. So each one of these profit points is going to be a 1R movement. So you'll see here that it's 1R, then a 2R, then a 3R, and then down here it is a 4R movement. So if I move this, it'll stay to that same R value. It will just be in relation to the risk. Now, if I change it to 1.5 as an example, you'll see that it moves to 1.5, 3, 4.5, and 6R. It's lovely. It just works. And then under the trading tab, you can go and select the share that each trade needs to close. You can have it whatever, like, let's say 50%, 50%, 25%, 12.5, 12.5, that kind of like thing. And it will close each one of these profit points based on this. So it'll close the amount of lots. You see in this case 0.1, 0.1, 0.1, 0.1. If I change this to 50, this one to 12.5, and this one to 12. Okay, well, it can't go 12.5. But you'll see that the first one then closes 50%, which is 0.22. So if I go to the main one, you'll see, go on. You'll see that the total position size is 0.43, 0.44. So if I close half of it, 0.22, quarter of it, 0.11, and then 0.5 and 0.5 will be closed at each one of these take profit points. So I think it's pretty groovy. I do like it. I'm going to carry on using it like this until I... There we go. Simple.
Nice. For those who were buying gold and silver earlier, just to let you know, I did say that it's going to be a very high or low probability, but a very high risk potential trade setup on gold. I have looked on MetaTrader on MT, and I have literally just bought gold as well. So like I said though, stop loss will be on the low of the consolidation. It is a... Oh, that's not... Ooh,
did you just double? Did you just double up, mate? Did you enter 2 trades?
No, I haven't doubled up. I've over-risked more than I wanted to.
Z Trader, here is the link. If you just scroll up a little bit in chat, here is the link for that position sizer. It's free to download, so yes, it's free. It's free to use. Once again, use at your own risk. Always test it on a demo account first before you go and put it into live trading. Make sure you understand what it is that you're using before you just implement it. Okay. Ooh. Good morning, Martin. I see Martin is saying, Rich, my sell is basically now until we are under the 200 EMA on the 5. Okay, so 200 EMA on the 5 minute. I will keep my sell when one candle close above exit. Okay. However, my 1450 shows change in trend. I keep the sell. All right, cool. Sounds good. Where did you enter, by the way? If you're selling right now, your stop loss is going to be just above the 200 EMA, or are you already in one from, let's say, from Friday? Unless you've already posted it in the Discord, in which case I will go and have a look.
Yeah, I've taken out of gold. I put 0.15 lots on because I know that's what I used to put on, but I should have put on a little bit less, maybe 0.10. I was risking $1,000, so I've just taken out at about $140 up. Yeah, I was risking a little bit more. Too much. I don't mind risking $1,000 on gold because the price fluctuation is so great that I know I can recover $1,000 loss pretty quickly when it comes to gold. I have a little bit more risk tolerance with gold. However, with this particular trade, I didn't like it as much. Did not like it as much. So, and I did tell you that at the start, guys. I did say, look, you know, I think we'd even struggle for a 1-to-1 here. So I wasn't willing to be risking $1,000. It was a bit rich for my blood. So I've taken out. I'm no longer in this trade. It is still moving higher. I'd probably be about 250 up right now. My TP would have been about $1,000. Honestly, I'd rather take out $140 profit than try and wait for a $1,000 TP that I was never 100% certain if we were going to get. Low probability trade, very high risk, with a little bit of too much risk on the table for me as well. So for that exact reason, just like they say in Dragon's Den, I'm out.
Nice. What news have we got today? Very, very little.
Nothing. We've got New Zealand, so we got the New Zealand dollar out at 8 p.m. tonight. Other than that,
so nothing for today. Tomorrow we have flash manufacturing and flash services PMI for the euro as well as for the pound. So this is GMT plus 2, so that would be 8:30 GMT as well as 9:30 GMT. And then we have flash and services, flash manufacturing PMI on the US as well, which is 1:45 p.m. Wednesday we have CPI month-on-month, year-on-year, and trimmed mean on the AUD, as well as CPI year-on-year on the pound. And on Thursday we have unemployment claims on the dollar, as well as retail home sales. Oh, this is Friday. And on pound we have retail home sales. Interesting. Oh, also wanted to take note of this. The last week, so the 29th, we have daylight savings time shift. So if you guys are trading the opening of the London session, do know that it's going to shift by 1 hour. So 1 hour earlier as of the 29th of March. Okay, so we'll daylight savings time shift again. Yes, so that's on Sunday. That's on Sunday. So yeah. Right. We have on NASDAQ, we have the options expiry at 23.99 or 909, which is basically the open of the day so far. plus a little bit of the gap. We can potentially come and fill this gap, which is all the way basically from there to there. We've almost halfway filled it. If we were to come back and test this gapped area on NAS, then the option expiry would be there as well. So that's bound to be interesting. We'll see whether or not that happens. Very bearish of last week Friday, like very, very bearish. And then we've had a continuation. We've come a little bit deeper now with this pullback into this Tokyo session of this morning. There we go. A little bit deeper than anticipated. Came into this little area over here, this little base area, which was basically, it's not really much of a base because this is not a drop. This was all consolidation. This whole segment here was basically consolidation because we had the high of the day as well as the low of the day that kept being respected. We eventually got the break, the retest. We'll see whether or not the retest respects it and wants to continue pushing price lower. However, we have a 50 EMA that can assist us here, like kind of respected in the short term. However, the options expiry is above that. So we could be pushing a little bit. We can come and test it, maybe push a little bit lower, retest it during the New York session, and then we'll see what happens from there. I wanted to have a look at the VIX. The VIX gapped as well, so the volatility index for the S&P 500 gapped. We made a nice bullish candle and then a bearish attempt. So this bearish attempt that we have here is basically this bullish movement that we have here. So we'll see whether or not that continues. Not UK, where am I? DXY. DXY is pushing a little bit more bullish. When was this? This was Thursday. No more drinks. From this dip that we had on Thursday, Friday basically was bullish, and then we've seen a continuation of that bullish movement, trying to push price up higher. First and foremost, area to test is this area down here. So like this. Say the first area, we have a wick reaction, breakthrough, retest, push lower. And this also happens to be a base as well. So we can see whether or not the price is going to, on the dollar, the DXY index, is going to respect this area. If it does not respect it and starts pushing through, we'll see whether or not we can get to these high points, this double high that we had last week, Wednesday. Yeah. Wednesday and Thursday actually, not Wednesday, Thursday. However, if it does respect it, comes into it and then starts going lower, we need to see whether or not we can break past these low points over here. This one being a little bit stronger, I would say. Strong volumetric push up and then a retest, a secondary retest, a tertiary retest of last week Friday's New York session low for us to push lower on the DXY. But as of right now, still showing a little bit more bullish momentum on the DXY. So the dollar index itself, a little bit more bullish. It's kind of why we're seeing more of this potentially.
Yeah, Euro's just completely tanked. So I mean, it makes sense. It was at an area which it could have, like I said, it was a potential point of reversal for my trade, and sometimes potential points of reversal are exactly what they are. They've been labeled that for a reason because there's a potential price reverse from them. Now this was a guaranteed point of reversal.
Yeah. So on the 5 minute we had this area of consolidation on Euro. We had the break, we've retested, and we volumetrically pushed lower, but it wasn't that clear, I would say. It wasn't that clear of a reaction, because we had the low, the lower low, a higher low, a high, a higher high, and so on and so forth. And it was showing the potential want to push higher. So it makes sense that you try to get a buy in.
Yeah. It was exactly as my EU strategy plans out. So therefore, you know, I executed the trade, and truth be told, I'd still execute that if I saw the exact same price tomorrow. So.
Yeah, no, I don't blame you for that move, mate. It did look like it wanted to attempt to push lower. What does the 4 hourly look like? Okay, maybe the 4 hourly candle would have indicated a little bit more willingness to try and push lower, because there's not really much that it reacted upon apart from a fair value gap imbalance. Yeah. On the hourly,
hourly looked quite nice. Yeah, it did react off that. So the hourly did look quite nice.
Yeah.
Yeah, the 4 hourly week.
It's the 4 hourly that, you know, with this bearish candle here, closing much lower than the previous candle low, previous 4 hour candle low, as well as the low of the previous day. So it wicked it, didn't close though.
Indeed.
Yeah, I don't blame you, mate. Good trade, didn't go in your way.
Yeah.
It's good that you realized it. It's good that you realized it and decided to go. AFK trader, don't be like that, mate. Yeah, let's not start a Monday like this. We're gonna go through everybody's chat. Have patience, mate. So the giveaway is for the TikTok. So it's not a live. Well, we were going to have it today, but we've decided to give it another week, and we will give the giveaway next week Monday, just to give it a little bit more chance to get more entrants. And so in that case, if you guys haven't already, please, in the description box below, we do have all of our socials. Go to our TikTok, our Instagram, go and follow us, and then also join the giveaway as well. And then the giveaway link is also in the description box as well. So go and join that, and then, yeah, win yourself some accounts.
Indeed. You got to be in it to win it. And if you're not in it, you're definitely not going to win it. Just looking at the charts now. I think I'm done for the morning on these charts. I'm not really seeing much now.
I'm just seeing bearish action on GU and EU at the moment.
Literally.
GU does look a little bit more favorable.
GU does, to be fair. Yeah, GU does. Gold looks like it may want to come down. May want to come down to that area before heading up a little bit. I don't know. I feel like gold would be very risky at the moment.
Yeah.
If you look at gold on the 5 minute, we've got that sort of break and close above consolidation. Yeah, on the 5.
Oh, on the 5.
Break and close above consolidation, slight pullback. Could you have the break and retest continuation? I don't know. Maybe it's. I think it's a little bit risky for my blood. You know, I didn't mind entering in on that trade. I thought I could scalp a couple of pips out.
Yo.
What's up, LJ?
How you doing? I just got stuck in my elevator for 20 minutes.
Actually, oh yeah, you didn't have power either. Yeah.
Yeah, it went out. Yeah, they've been. They're meant to be finalising. They said that I think 6 months ago. Some of the works down the end of the street. And yeah, my partner just dropped me back. And then, oh, dude, came up, went out. There was like 5 of us. Like, everyone's coming home from work at this time. And we're just like, oh, again? So
Nah,
we were just
Aren't we the
sitting in
lucky
a dark
few?
elevator, yeah, for a while. So, yeah, fun. But how's markets? Dude, this stuff's bonkers right now.
Gold
How you guys,
selling. Gold was selling nicely this morning coming out of rollover, and then now has decided it wants to kind of like stop around this 4,100 point and started pushing up ever so slightly. We'll see whether or not there's going to be a continuation to push up higher, or whether this is that short form push up to try and just gather up a little bit more orders to try and push it lower. EU is selling off, GU is selling off, NAS was trying to sell off, came back up a little bit, and now is reacting nicely.
Yeah.
Yeah.
Naz is acting really nicely at the moment.
Yeah. Came back into the Tokyo low and then just wicked around a little bit, and now is having some volumetric movement now, which looks kind of good. But I've already had my trade today, so I'm done.
Yeah, nice.
Yeah, it's wild. We've had some big sort of developments, sort of escalation kind of thing, where people are now starting to get, okay, this is really getting worrying since Friday. So yeah, obviously gold getting smashed. So you guys, like, you were just talking about this bounce. We've got the 200-day moving average right here. So that's sort of where we came down to, and then, you know, I mean, dude, we've been getting pummeled all day.
Give me a second.
Plus last Friday as well. So no surprise, yeah, you eventually find that, you know, that pause point, liquidation point, eventually people willing to step back in. But yeah, absolutely smashed, because we did get that bounce last week and looking for that to sort of hold near term. But yeah, coming into Friday, you got hit again with headlines. Same with over the weekend, and market open has been chaos.
Absolutely crazy. Yeah. No, I know, literally that.
So all commodity markets last week got absolutely annihilated. So it wasn't just, it was gold, silver, copper, iron ore, you know, everything.
The whole shebang.
So yeah, it all comes down to that inflation impact. Obviously that, you know, that potentially destroys demand, plus the cost of holding this stuff, plus you've got shipping all tied up right now, whether it's oil, whether it's everything gets disrupted. So we're seeing that bite coming through. Yeah, if you guys want to trade gold today, like, obviously it's pretty active. We got some massive ranges, but definitely reduce that lot size, because this is
there's some wacky trading coming through on gold at the moment.
Yeah, so you'll be able to pick up, you know, plenty of return just from that smaller size. Don't go to your typical, you know, lot size as you would day to day. When we're swinging, you know, $500 an ounce.
Literally,
one wrong move and you'll get caught out. Like, you might like capture a big candle like this on like a 30-minute, 1 hour. You're like, yeah, awesome, and then you'll capture the wrong one and just get obliterated. So.
Yeah, and literally that. I just took a quick scalp long on gold. And then I put in a standard risk that I would take on a standard trading day. And I looked at it and I thought, oh no, I've completely over-risked. I was risking about $1,000 on a scalp long on gold during these markets, and it was counter trend. I thought, oh, no, I'm not holding this. I took out luckily for about 140-ish bucks. I was like, yep, that's me. I was like, I'm done. No more.
Yeah, I'm reduced about 10x on gold lot size right now.
Yeah,
so it's too much. So at certain key points, when we get those levels, I might go reduce by 5x, but not 10, right? Sorry, but not 1-to-1. So
yeah, it's crazy trading at the moment. I said this last week, guys. I was like, you know, I'm not in the markets right now to make money, which sounds ironic and contradicting, given that's the whole reason why we're in the markets. I am in the markets right now just to survive and break even and get out at the other end. That's my plan with the markets right now. Once all this sort of fizzles, then I think I'll be back in. And I'll put my foot on the pedal again, on the gas.
Yeah, well, trading defensively is also, that's a position in markets. You're not 100%. Always on attack, exactly. Right?
Yeah,
The same thing like if you're playing sport like rugby or soccer or something, like sometimes you got to play defensive, or basketball or anything. So this is more defensive, and then you're trying to pick up small wins, small points. Maybe you're not, shooting threes the whole time, basketball or something. You get a couple steals and a dunk here and there, a few points. You're just trying to get through until you get that break, and then you can take advantage. So yeah, it's definitely smart. It's definitely smart to play that sort of calm side right now. Because same thing today, I've been trying to work through everything. And I did a little bit over the weekend. I had my birthday on the weekend, so I didn't have as much time.
Happy birthday, LJ.
Thank you, guys. Thank you. And thank you to a bunch of guys in the Discord that said happy birthday as well. So, but yeah, I've been trying to go through all this, and right now it's very hard to get a proper outlook. There's so many pathways just at this very moment. So I've kind of got like this week and maybe early into next week. And if we don't start seeing like de-escalation, now I think the market will start to actually freak out.
Yeah.
Yeah. Because now we're getting into that long end of the tail. It hasn't really come to a stop. We've seen escalations the whole way, more infrastructure sort of being destroyed or being disrupted, and that's still going to take a huge amount of time to get fixed up and back online. Thanks, Shay. Yeah, it was my 21st yesterday, guys. There you go.
15 years of experience in the market, 21 years old.
Yeah, I started when I was 6. Yeah, that's it. But yeah, so I think this week's going to be a bit topsy-turvy, pretty wild. Very much headline week. We'll see some of the inflation data this week, but I don't know how much input that will actually have, because obviously things have changed and that's not going to flow through quite yet. So yeah, very much a headline-driven week. Overall, I mean, Trump's trying to now set in some of these deadlines. Let's see how it plays. So yeah, just be careful overall is what I'm trying to say this week, guys, because we could have snapbacks both ways, right? So we could have some good headlines. You see gold run another 200 points back up towards open, only to come off another 200. So
yeah, I think this is closer to the reactions that we thought we were going to have when the escalation started. Like we were talking about this, it's very simplistic, yes, but the idea was that the market was freaking out, then it calmed down, and it seems as though the market wants to start freaking out again. So volatility now, I think, is going to inflate a little bit more, because we had volatility in the beginning, but it was short-lived, and it was calmer, let's put it like that, than anticipated. And now it seems as though maybe, like you're saying, it's they're like, okay, is this going to be a 4-month to a 2-year-long thing? What's going on here, Okay, maybe we should start positioning ourselves now for some movements. So yeah, no, I get what you're saying. Don't understand all of it, but I get what you're saying.
Yeah, no, I've got a bunch more to go over. I'll wait until Dirk turns up and we can cover it all. But yeah, because a lot of moving parts right now. So
yeah, very much.
Either way, we'll go back to text and stuff right now. Just give me 1 second. I just got to turn my aircon back on after the power went out.
Yeah, I literally just turned mine on. I'm sweating.
Yeah, I just had to close the door quickly when I jumped off because it started pelting with rain all of a sudden. And now It's like, dude, 4 seasons, mate. 4 seasons.
Yeah, standard procedure, man. Standard procedure.
Let's have a little gander and see who is saying what for us to kind of like address. Questions.
Yeah, glad I didn't take that gold. It was not looking too nice. Like I said, guys, the markets are just crazy volatile at the moment.
Okay, so Shane, here is a lovely thing that you can do. So don't the folder directory that they suggest is it's just kind of like based on their direction. So what you can do is you can, in your MetaTrader 5, you go to File, and then you say Open Data Folder. You can also do, if you have Windows, it's Control-Shift-D, but you just click here, then it will open up your data folder, and then from there on, just follow the next steps. Okay, so you don't have to follow their exact one. It just depends on where you installed it. So start here, open data folder, and then from there you follow the next steps. It goes into this folder, this information, and so on. So just follow that. That's the fastest way that you can do that.
But yeah, appreciate it, guys. Thank you very much.
Yeah.
All the birthday
Birthday
wishes.
boy.
Actually, you guys can guess in chat how old I am. Some of you will know.
That's easy.
Some of you already know from the past. But,
easy. LJ is 6
12.
years. Yeah.
Don't know.
LJ is 6 years younger than I am.
So what, you're like 74, so
Yeah.
I'm 68.
Yeah. And Will over
wizards.
here is the oldest out of all of us. He's 88.
Yeah, Will is oldest.
Yeah.
That's why this
We've
guy's
got one guess. 31.
unbiased trader. I feel like you
Anyone.
should know this already.
Happy birthday and good luck for another year.
Thank you. Yeah. That's good, Paulie. That's good. It's right. I'm already bridging over the move to another planetary system. Right, we're on the brink of collapse, and we're getting the rockets ready. So don't worry.
Oh, dude, where's Astro Trader? We need him to tell you which planets are aligned.
He's already left.
Move.
He's already left. He's on his way to Planet Profits.
27.
So good.
You've only had one answer be close. So
Yeah.
yeah. Alger, I took a lovely trade this morning on NASDAQ based on a discussion that you and I had last week about letting some of them run.
Okay.
So I did some backtesting on Friday and Saturday, and I found something quite interesting. If I kept to my regular 1 to 2, I have a 66% win rate across the trades that I have taken in the last 3 months. So last 3 months worth of backtesting, a 66% win rate. So I went on that idea, and then I basically took every single trade again, but I marked them for 4 TP points. So TP 1, 2, 3, and 4, and each one of them is effectively 1R. So this is a 4R trade. So TP1 is a 1R, TP2 is 2R, and so on and so forth. Tested all of them, and my 1-to-1 win rate is 80% on the trades that I had taken. So roughly 20% of them just kind of like didn't even reach TP1 and just went to stop loss, that kind of like thing. But TP2 was 66%. TP3 was lower than 50%. TP4 was slightly lower than 40%. So 38% of the time of all of the trades that actually went into profit, didn't hit me out on stop loss, went to TP4. And I was like, okay, this is interesting.
Yeah.
I went and tested.
Then the math comes in, right? Yeah.
Yes. And then I started looking at the expectancy value of each one of them. And it increased across the 3 months. If I had just taken my 1 to 2s with a 66% win rate, that was great. But it picked up enough that the expectancy picked up enough that it made me wonder, is this going to be more profitable? And had a look at everything, and it's quite a bit more profitable doing it like this.
Yeah.
So how I'm going to do the trading, and I tested it by taking a trade this morning, is I have a 0.25% that gets taken off every profit point. So profit TP1, 0.25% gets removed, TP2, so on and so forth. When it reaches TP2, I move my stop loss to break even, and then I just let it play out. So this morning it went to TP1 easily, no problem. Went to TP2 on the second candle. So first candle only took TP1, second candle took TP2, and then it slowed down heavily. And then we started pushing these upward candle wicks, and I thought, I wonder if this is going to come all the way back to try and test the Tokyo low. And then on the close of this bullish candle, I decided, you know what? I'm just going to close out the remainder of the position, which was 0.5% risk, even though it was break even. But half of the trade was still open in lots. And I locked up a 1.5% trade by doing that. So TP1 was a 0.25% in profit. TP2 was 0.5%. And then these two, the TP3 and TP4 effectively was like 3.37%.
Okay.
So yeah.
So were the TP3 and 4, were they, because they're higher, were they like an inverse trade? Did you reverse it?
No. So they were supposed to be down here. So TP3 would have been down there, and TP4 would have been down there. Yeah. So I had half of the position still open with a break-even stop loss, but because it was struggling, and I thought, you know what, this is probably going to come up and like hit my break-even point, and I was sure of it. I was sure about the movement that we were having, and I was like, this is not the follow-up that I want. I'm just going to lock up the extra 0.75% in profit, and then be done trading for the day, and then carry on. Maybe later look for another position. So I closed these ones early instead of letting them run. It would have been a 0.75 if I had just left it, but ended up being a 1.5%. So yeah, happy with that.
Yeah, fair. Oh, okay, I see. You mean so more like relative terms, because you didn't, because you closed out the whole thing. Okay, I see.
If I had left it to run in its entirety, and it did eventually,
then you would have got stopped out on the others, and
so each TP point would have been struck, but it would have been a 2.5 R trade. So it would have been 2.5%, and I got 1.5%, which is effectively as if I had hit TP3. So I'm happy with that. Happy with the result. However, had I not had the TP1, TP2, TP3, and just gone my regular 1 to 2, this would have been a 1 to 2, and I would have gotten my 2%.
Yeah.
But I do like this, because when I went and did the math over the weekend, it made sense. I was like, the amount of times that I went into drawdown and got stopped out in drawdown is still 1%. It's still 1 R drawdown. If I hit TP2 and it does come back, then it's a break even stop loss, and I'm not losing anything. And that actually reduced the amount of times that I go into drawdown. So my drawdown curve slightly picked up, because I'm taking partials as well. So even though it goes to stop loss, let's say it hit TP1, I remove 1/4 of the percent of trade, the 1/4% risk. The other 0.75% risk is still on the table. It's not a full 1 R loss. It's 0.75 R loss.
Yeah.
So And then on top of that, if I add the 0.25% to that loss, it drops it down to half an R in loss for the day instead of a full R loss. So the curve itself that I had was a little bit sharper compared compared to the new one. It was a little bit sharper of a downturn, where this one is more shallow, and then the pickup was nicer. So I was like, okay, this makes sense. This makes a lot more sense. So yeah, I'm thanks for the advice, mate. I'm like, yeah. Like you said, all you need to do is just get the math. Just get the math to make sense, and then you just follow that. And the math made sense, and I was like, oh, this is NAS. This is NAS.
Exactly. Yeah, and then especially when you compound it, you're like, okay.
Yeah.
Here we go. Right.
Yep.
And so yeah, it's similar how I always have the sort of like 0.5, 1, 2, 3, 4, right?
Yeah.
Very similar deal. And then when you do see, just like how you identified there that the market was turning up, then yeah, you can scrap the trade, which is similar to what I do. I go like, okay, we've met the sort of areas, but we aren't quite kicking on, so I scrap it, or sometimes scrap half. And then if you see market coming to follow through, then you can run the full way. That, or if say you had like the 1.5 or 2 to 1, but like the market's charging, just go straight to the 4, you know?
Yeah.
And then it does give you that coverage. And yeah, you spend less time in drawdown, and then thus, because you identified a quality trade, that sort of top tier setup, you also got the top tier payout from it. Because otherwise, if you don't get the full payout expectation from that trade, it's not a quality payout, because you've changed the risk reward dynamic, like the payout profile, right? So once you get that, it also then allows you to have more playroom with other trades as well. So yeah, I like it. Good to see. I'm glad.
Yeah, I enjoyed this. Hello, Dirk. How are you?
Good morning.
I
I was thinking of putting on my Grim Reaper costume this morning, but I thought maybe that's a little bit too cynical for what
Thinking the same
in terms of development and the sheer, I have to phrase it like this, stupidity of this orange guy over the weekend. It's insane. I really getting more and more convinced that we live in some weird kind of simulated experimental reality now.
Okay, everybody, get your tinfoil hats ready on the head. I want to add something to that. I watched a video this week now, obviously, or this weekend now, obviously. Take it for what it is. It's a video, all right? It could mean nothing. But it was basically a guy, Jimmy Fallon, who's a talk show host and a comedian, who pointed out Trump's, let's call it, him falling over his own tongue, basically. Struggling to say certain words and whatnot. And I don't know if you guys remembered a while ago, there was basically, Trump tweeted his IQ was so high, and then when they had a look at it, they realized there was actually a Alzheimer's test that they had done. So, I'm not saying that I think that he has some deficiencies mentally. However, I am saying that he's got some mental deficiencies currently.
Yeah, I mean, there's this one guy on Instagram who's like a physician or whatever, and he says that Lump has this, what is it, temporal lobe dementia, and he has like 6 months to live. He has been saying this for a year now, so the 6 months are kind of a rolling forward moving average, as it seems. And but for me, it's like when I see what. Not only Trump, I mean, he needs the administration to back this up as well, no? It's like fair. This, it reminds me so much of those stupid bullies at school, you know? It's always scare tactic. If you don't do that, I'm going to do that. But they never really follow through, you know? That's the problem. That's like the worst spot he maneuvered himself into. Now they have to pull through this. The deadline is tonight. And if they don't do, well, then we have what Trump always does, threaten, but, you know, when it comes to to reality, then he kind of chickens out or changes his opinion. And
Yeah.
this is the one thing where he cannot, because he already handed almost all the, ironically, Trumps over to Iran. I'm talking about card game now. And he's left with nothing. And also that he's like getting so insanely angry at Europe now, because Europe doesn't want to join his war. It's like, what did you expect? You've been bullying us and the rest of the world for such a long time now, and now
Yeah.
you want us to come to your aid.
It's
I-
funny because
Yeah.
he's done the whole tariff thing, and he's said to everybody, you all have been like treating America like crap, and you've been walking over us. And then the moment he gets into a fight outside the schoolyard, he's like, why aren't you guys assisting me? And it's just like, you remember a few months ago you said these things. Maybe he forgot because he might have, some dementia or early onset, or I don't know. He's like, how old is Trump? He's like in his 80s, isn't he?
I think like 80s.
I think he's like. It's either I know he's like in his like
79 or
late
something?
78, 79. I thought.
Yeah.
Yeah, I think he's
Somewhere around
79.
there.
I have
Yeah.
that.
Yeah, Taco Trump always
Yeah,
chickens out.
79.
But that's
79,
the thing. Yeah, but that's
Yeah.
the thing. It's just like, we've been saying this for a while. He's a schoolyard bully.
Yeah.
And
Exactly.
the thing is, people react to it because fear. So if he says something, when the Trump tweets come out, it's like, the world's gonna end. And then he does something half-assed almost. He brings out the tariffs, and then it gets stopped, and then it gets reinitiated, then it gets stopped again, and it's just like, oh, but he's doing something, and it's just like, yeah, dude, like, even a bully is gonna, from time to time, dip your head into a toilet. It's gonna happen. But
I mean, maybe the world should do, what I always tell my daughter. I always tell her, when somebody's bullying you, just ignore them. Like, don't, ignore them, don't even talk to them, just pretend they are not there, thin air. It's going to make things worse in the beginning, obviously, because they'll get angry at you, but eventually their interest in you is going to fade away. And I think maybe that's exactly what the world has to do. Just not react anymore. Let that old guy, rumble and say weird things, and we're just going to ignore it. I mean, I know, I'm like, you cannot do that, obviously, with what's supposed to be the mightiest person in the world, but I really don't know what to say anymore. I mean, it's typical from a trading perspective, I have to say. That one time I entered a gold long last week, this happens. I got stopped out earlier. I re-entered, by the way, this morning. When we hit the -4 sigma average, I opened a long because that was a pretty sweet turnaround point. But who knows where's that going?
Yeah.
I think if you guys out there still believe in that we are sooner or later this whole thing is going to fade away, it's more escalated than I anticipated. Really, I remember LJ and me. We were talking about this a lot.
Everyone has.
But I think these are prices to buy then long term. I'm not talking about your swing trading position for 2 weeks, but long term, these are pretty sweet prices in my opinion. I said the same last week.
Yeah,
So maybe don't listen to me. But
As an investor, I could imagine over the next couple of months are going to be some really nice trading conditions for a long-term investor. For someone who wants to get in, get out, get in, get out, get in, get out, no. Maybe even for a swing trader, no. But someone who's willing to sit on it, hold it, and even potentially take dividends from it, I think this could potentially be some good prices coming in. But guys, on that note, I'm going to have to shoot off and love you and leave you. So I'll see you in about 2 hours' time. So guys, thank you very much, and I shall see you in a bit. Peace.
take care.
Before I hop out, this was the moment Trump sent out his little tweety tweet. Bitcoin was like, no. So I was giggling at this.
But Bitcoin amongst the ones recovering quite nicely this morning again. Is it? Or
Yeah.
is it down?
Yeah. So
Oh, yeah, that's
Yeah, I was just giggling at this when I saw the tweet come out and Bitcoin was like, no, we don't like this. Let's.
I just saw like the price dumping, and I my first thought was like, okay, it's like the orange guy has tweeted something again.
Yeah, I mean, any time that happens, but I'm actually quite chuffed about this, but I was telling the guys on Friday night with Friday Night Poker, which we started somewhere around here. We started playing poker here. And before this move even like completely pushed all the way down, I told the guys, Nasdaq's going to gap.
Good one, man.
Yeah, so it came back, and some of the guys were still in their trades, and then they closed it out. And I was like, you should have held it, mate. It was going to gap over in the morning, and then try and push lower. I mean, it's good like, that they closed it, but like it did gap.
You should have played with like with 1 to 500x leverage, like in YOLO all in bet with $1,000. You know, you would have been. $100 this morning.
That guy that just shoots the dollar bills all over the place.
Poly market bet.
Oh yeah, I probably would have gotten flagged for, you know.
Yeah, not on your funded account, man.
Yeah. Anyway, guys, I'm also going to hop out. Before I go, though, however, in the description box, there is a link for a giveaway. The giveaway is going to be next week, Monday. So next week, Monday, we're going to have the TikTok exclusive giveaway. So you have another week or so to get yourselves to follow the Fiverr's TikTok as well as the Fiverr's Instagram. And then there are some accounts to be won there. They are going to be nice high stakes accounts. So yeah, that will be next week, Monday. And I believe the giveaway will be done via TikTok. So it won't be on the live stream, but it will be via TikTok. So you guys can just go and follow there. And then, yeah, I'll see you guys a little bit later. I'll be joining you just after your own session. Have fun. Enjoy. Good luck. GG.
Thank you.
Catch you later, Richard. Thank you. So I've got to ask the obvious question, LJ. Have you been shorting the hell out of this move?
So
because you look so happy. And
yeah,
same expression you had last time you shorted gold like crazy.
Yeah. So through here, yes. Through today, yes, absolutely.
Nice.
Been smashing this lower. So after the Friday, because I mean, last week we were talking about potentially finding some of these. So we had this like the sort of general, very loose sort of channel through here that might have, you know, we had that teeing up with that cross section with the prior candle closes here, that old gap, and some of those sort of paused highs through there back in mid-Jan, right? So that was potentially the point for us to pick up near term. Right, for a bit of a rally, things were escalating. You would then expect Trump to come in and sort of put the foot down, and that becomes like a bit of a, not quite a de-escalation, but a more of a control management type situation.
Yeah.
On Friday, he didn't do that. So I got out of that stuff quick smart, and then just sat and waited for Friday. And then seeing the headlines over the weekend, coming into Monday, I was like, this is going to be havoc, right? This is going to absolutely be havoc. Now, I would have thought NASDAQ might have actually, and the S&P, like stocks in general, might have actually dropped a bit more. They're pretty tame, all considered.
I agree.
So gold getting smashed, silver getting smashed, commodities all last week into the end of the week got hit. So copper, iron ore, literally everything, right? And I think there's actually a fair chance now that silver potentially ends back below 50 towards the end of the year, if this now continues. I think gold will eventually have a rebound, because then we get into that later part of financial engineering with central banks having to come in. We get some kind of recession type stuff, money printing, etc. But we are very much into this sort of kill zone cluster that we also highlighted last week for silver. That this is sort of the dead zone, right? This is make or break, right, in between here.
That's
So
the thing. I don't know if unbiased traders with us today. I would be interested if he's still holding on to his silver ETF shorts.
I think he did get out, unfortunately.
That would be too bad.
Yeah.
That's nice. I mean, interestingly, like one of the reasons I was in a gold trade last week, long when we dipped under the 8 weeks moving average, but I got out of this one obviously because I had a fixed stop loss. I bought then a little bit when we dipped to the bull market support bands, and then this morning I had an order and it got executed because we exactly touched the -4 sigma on the standard deviation channel, 250 length, and then started going up again. This is on a daily chart, obviously. So I think that's like really, really exaggerated to the downside. It's like kind of reminds me, of these phases here, but in an even worse way. I mean, how much was the move like in total there actually this morning?
What's your bull market support set at? I thought it was a 200 moving average.
No, the bull market support bands 20 weeks simple moving average and 21 weeks exponential moving average. Blue one. Actually, in this setting, I don't look at the 200 EMA. You could add it potentially, or SMA actually, because everybody looks at it.
SMA, yeah.
And for sure. One thing that worked very well for me was my euro-dollar trade. So the one I entered down here. I had a target of 116.30 to 50, but ended up getting out at 160.19. So almost at the swing top. That was a very nice one, highly profitable one. But I wanted to get out of it on Friday because I also was like, what is going to happen over the weekend? I had also this weird feeling like, if they are going to say something, if he's going to say something, Trump, he's going to do this probably again on Sunday. So I didn't want the exposure there really. Nonetheless, nice trade. Dollar yen didn't do that much, no? Like still we had this 160 zone up there, struggling up there.
I think that's what helped spur the euro rally on top of the central bank sort of commentary.
But
like been saying, like that 160 level is key. Right?
It is.
And so we failed again to really make ground. And then once we came off, we couldn't really pick up. And then it started just liquidating. Then we got euro running the back of that. And but that was definitely an overextension. So you were very good on taking TP at the tops there.
Yeah.
I think I mapped out also we had some structures on the Dixie that looked like we were going to break through.
That's what I had in the back of my mind as well. Exactly. One thing that's concerning are the yields, especially the US yields, back up on the 10-year to over 4.4, as a matter of fact, right now. Kind of a weird reaction overall. No? We see yields jumping up, which is, of course, like a risk-off move. The Japanese 10-year yield is lagging behind it a little bit. Thus, maybe also why we see dollar yen somewhere, more at 160 than we see it at 155 at the moment. Very interesting move. Very difficult week, guys. Honestly speaking, I mean, today is going to be make it or break it day. And I've thought this morning, like, okay, what is going to happen tonight if we see the USA really pulling through with this? Then, in my opinion, we have kind of like a scenario where this whole thing could massively escalate. Because remember when we had I think 3 weeks ago when the war started, we were talking about, I had this graphic, and actually you can see if I still have it lying around, where I said, in my opinion, like the only thing that can make this escalate even further is if they attack infrastructure. Which is the case now. Now we are in that phase of a war where the US is threatening. Iran is saying we're going to retaliate. We're going to blow up the water purifying infrastructure for our evil neighbors, energy, and so on and so forth. You don't want to live in a city like Dubai or Doha at the moment, maybe. And so this is interesting. This is also interesting if we see how China maybe is going to react to this whole thing. I mean, the USA are only consuming 2.5% of their demand in oil from Iran. So for them, it doesn't really matter if the Strait of Hormuz is closed. When it comes to oil, fertilizer, sulfur, a whole different story. You pointed that out a number of times as well. But like China, India, they are like quite dependent on oil out of Iran. They have those long-term contracts of like 10, 20, 30 years. And I wonder when the point comes that China, is going to pick up the phone. Maybe they have already, Xi Jinping, and is calling Donald Trump and telling him, hey, you know what? This has to stop now. We can do this in a diplomatic way, or you can see things escalating with us as well. And it's funny enough, that in this kind of situation, you see China as the ones being more moderate. At the diplomacy level, having the more moderate wording, when in the past it was the other way around, because they are now arguing from a position of power.
Yeah. Position of power, but not enough power just yet. Right? That's
Luckily,
where they're in
it's
this
in
like,
equilibrium.
little medium.
I mean, we don't want it tipping to.
There's no
either
win
side.
on either side. Yeah, for them. No win either side. But yeah, exactly. So we're talking. Everyone was looking at this as this is too much of a dire potential outcome. That yes, everything will have to come together. Now the Iran playbook is pretty much just to cause as much chaos. Like they can't get a full win, but to cause as much chaos and disruption for as long as they can, that it eventually forces everyone out. Oh, nice. See, yeah. I thought Unbiased Trader came out of it.
Yeah, but smart
Nice.
move. Smart move.
But still holding the WTI. That's good. Yeah, I closed out my oil trades towards the start of this, but I'm happy with that. That was plenty. So, within this though, yeah. So it's very difficult. So yeah, it's basically similarly, you were saying like today, tomorrow as kind of the crux point. I've still got sort of towards the end of the week. Obviously today, tomorrow, very in focus, but I think the market would be like, okay, it's sort of the next couple days. But I definitely agree if we don't have some kind of, not exactly de-escalation, but yeah, like some kind of control element that sort of stabilizes things over the next week, or potentially an indication at the end of the week, that'll happen in the start of next week or over the weekend, I think we'll start to see, a bit of a bloodbath coming through.
Latest on Friday.
Everyone's going to be, starting to price in, okay, this is completely done. We had the indications from central banks last week that they kind of were like, we'd probably up rates, which is absolutely insane in an energy supply shock like this. This is the same thing we had in like 2008. And you just kill everything. Okay, we got the Strait over here, which is closed. We got oil, can't come through. Let's raise rates.
Yeah, exactly.
Is that going to help? No, it's going to destroy everything else. When you already have that input shock, which is effectively a rate hike in itself from demand destruction coming through. So you get like a double up of that. It was the same argument with, again, Australia raised rates at the last meeting last week. So, we did have a very split decision. It was 5-4, which we did see the Aussie sort of spike and then come off because of that. And the other portion of them were saying, like, I don't know if we should do it right now. They still wanted to raise rates at some point. But we've already got oil, all this energy shock coming through. That's basically the equivalent of 80 to 85% of a rate hike in itself. So essentially we're upping it by almost 50 basis points right now. So if we actually get this going through with all the major central banks, we're completely done. Because then we've got the private credit thing in the background. We see refinancing completely collapse. Withdrawals for private credit will just go through the roof. They'll have to close the gates. People start freaking out if they close the gates over here. They got to sell liquid assets, which goes into markets, which goes into everything else. It's a full cascade, and then we're done. And on top of that, then we have with central banks trying to control rates. Like obviously, they only control the short end of the yield curve, right? And so we've seen the long end just doing its own thing, and that's going to be where it's really hard, because then I don't know how effective QE is going to be. My expectation is that the US will just have to go straight to yield curve control, right? And then they'll have to see that the rest of the other majors, so like the EU, the UK, everyone else, joins them in that, so that the whole thing doesn't unravel and fall apart. Because right now, this seems very much around the petrodollar situation. That's the only thing I can put it down to, really, at the end of the day. Right, same with every other escalation or Middle East war, or even the trade war with China. It's all an after effect of someone trying to price oil in anything other than dollars, right?
Yeah.
Brazil, Venezuela, all of it. So I think they might have just misjudged this one, though. And especially after putting offside other countries with the trade war situation, it almost seems like that might have been like sort of a test to see like how like on board can we get away with this, or some weird thing. And now you've actually put them offside, and no one wants to join in.
But that's
So-
I don't think Trump that smart, you know, to play like
No,
a
this is-
4D chess game.
And this is where, like you guys were just talking about whilst Rich was here, it feels very reminiscent of the Bush era, right?
Yeah, but on
Like,
steroids.
yeah, so like who is Dick Cheney right now?
Yeah.
You know? Who exactly is it? Who precisely is it?
By the way, an
That's what it feels
awesome
like.
film, you guys, if you haven't seen that one. I don't remember
Vice?
the title. Vice, yeah, thank you.
Yeah.
That's one of my favorite movies of all time. It's just funny, but
Very-
in a not funny way.
Yeah, it's a really good movie, very underrated. It's kind of in the style of like The Big Short-esque.
yeah.
Um,
But on
and
a
it's
more,
really good.
it's
Yeah.
more difficult to understand than the Big Short. you
Yeah,
know,
of course.
in
Yeah,
my
yeah,
opinion,
yeah. There's more bits and pieces. But if you guys are trading, if you have some financial knowledge, you should understand a bit better. And so that's also a good movie to go and watch through this week if you want. So it's called Vice. It came out in 2018.
Yeah.
So yeah.
I sometimes have a feeling, you know, it's like I get the scenario in my head where I see like Donald Trump, he's like sitting with, you know, his cabinet or whatever, and when you have like people whispering like things into his ear to get him like riled up, you know, that he jumps to Twitter and makes like very, how is it called? Like not rational decisions, but emotional decisions, like reactionary decisions instead of, you know, sitting down, thinking about things first. Kind of like you would maybe get your little kid riled up about something, you know. It seems like that is very easy. I want to quickly touch base. And by the way, when it comes to central bank, I think you're absolutely right on that, but wouldn't be that kind of an awesome sign now if you have, like, for example, the US central bank coming out saying like, yeah, we see like inflation obviously is probably going to tick up a little bit because of, you know, long-term effects from fertilizer shortage, although I don't know how much there's on stock, you know, and stuff like this. Don't know much about the sulfur market, for example. But we are going to stimulate the economy by lowering interest rates. Maybe that's kind of it. That would be kind of a turnkey, you know, to get out of a situation.
Yeah, this is exactly the next thing. We were having a small discussion with a couple of guys in Discord as well with this today. And I was basically saying, okay, but this produces that exact 2008 situation where, you know, we get rates going up. It doesn't end anything. We've still got longer input prices for consumers and businesses. Demand absolutely gets crushed. Jobs are already kind of a bit iffy right now, both in the US, the EU, everywhere. They're stable. They're not bad, but they're iffy, right? There's a question mark around it, and so we get that collapsing. You know, the situation continues. Rates go up, refinancing collapses, credit withdrawals from private credit hit peaks. Oh, did you come back? You disappeared for a second.
I disappeared? Okay.
Yeah, just blacked out.
You were a little bit cut off just now.
Okay, it might have been the platform then. But yeah, so we see withdrawals hit like peaks. They got to put safeguards on it. People run for the gates with equities, liquid assets, that kind of stuff. Housing. that's a whole separate thing. We'll leave that one for now. But that causes everything to just tumble and we see a full U-turn, rates up, rates all the way down,
Yeah.
right? And QE and probably yield curve control. My question is, with where things are now, with all of that, and we've got the refinancing cliff for the US, is that going to play out the same as far as the dollar, where typically you'd see the dollar run hot with that? Given the current situation, I think treasuries keep getting sold off. No one wants it because they know the yields are going to go way higher first before you get in there. Then when they pump the QE, all that kind of stuff, yield curve control, then it plummets. But then do people actually still want the dollar? So then the question is there enough demand for those treasuries? Which then this goes back to sort of what I was talking about, their potentials back in, I don't know, like October or something last year, where they dump all that onto insurance companies, pension funds, banks, open up their mandates for essential assets that they have to hold on their balance sheet. And that's how they kind of shuffle it through, where they do have some kind of capital, depending on how exposed to private credit they are already, is the trouble factor. And then that's how they shoehorn it all through. And then it all kind of works out. I'm not sure how the dollar plays out this time, though. It seems a little bit weird. And then from there, the only asset that I can see is actually any good would then be gold.
Yeah,
ultimately.
absolutely.
Like, that's it.
Kind of surprising that gold overreacted in such a way. It shows like how much of a leveraged risk-on asset it has become really over the last 2 years. A bit crazy. Like 20 years ago, you would have seen the opposite reaction than this. For me, like one more outlandish thing I'm thinking about, this is like there's maybe a 2% chance that this is going to become reality. But if I look at the private credit sector, which is like so deep underwater at the moment, and you have all these, not really startups, but like companies that you need like 10 million or 50 million or 100 million in loans, to scale up, especially when it comes to AI, to catch up and so on and so forth, who are, of course, very much in trouble at the moment because it gets harder and harder to get these credit lines and loans because of the private credit sector being underwater. So like, maybe I see kind of like a slight off chance that this is something a central bank could engage in as well, like in kind of a lower volume scenario that we saw in 2008, where the central banks were buying up basically bad corporate debt bonds, and guaranteeing, it's worth 70% on the market, but we are going to value it at 100%. So you as a bank can stay liquid. After this, the banks didn't want, all those loans anymore that the private credit sector is engaging in. But what if I do that at a smaller scale now with the private credit sector, just with the aim to to ensure that there is still a landscape of growing companies for especially the technology sector in the USA. That would be kind of I don't think necessarily it's going to happen, but if I were within the Fed, this is actually something I would be thinking about, because this is where stimulation of the economy comes from. It doesn't come probably so much anymore from making sure that the Walmarts in the world, although they're always going to be around, are going to profit the most. It's more like, you need these companies that are on the brink of technological achievements to ensure that you stay head-to-head in the race to China, especially.
Yes, and this is where it gets weird, even with the China thing, where they're kind of getting hit now as well. Like we saw some of the helium disruption that did talk about last week, and then that ended up happening after. So if more of that sort of infrastructure gets hit, then very much that's on the table. The question is then, with those players, because we also talked about how that's been a majority portion of like GDP right now. So if you subtract that, like GDP is way negative on its own, plus demand, crunch, plus unemployment, all that, we go massively negative. The numbers would almost look like COVID, so hence it'd be a full GFC 2.0 type thing. And then, yes, that also goes back to how we've talked about in the past, how even though central banks and government, they're kind of in cahoots, right? I've talked about this before. They're still separate, but like when we saw the banking stuff prior, we had the thing with what's it called? Swiss Bank, Credit Suisse.
Credit Suisse, yeah, exactly.
Yeah. And then we saw further play-ons with some of the regional banks in the US and that kind of thing. The Fed kind of wrapped it up pretty quick and sort of just like, yep, here you go, here's some money, like, chill out. So I think that's exactly how this all comes together, where the central bank and the government almost come to one. And we're already seeing that with what Trump wants to do as far as the next Fed chair. It's sort of it's all aligning, right? And I don't know how good that is, because this is the stuff where it's almost too out in the open that either we get the kind of 2008 type situation where we pumped out all that money, but everyone's like, yeah, this is kind of breaks economics and it's kind of the wrong thing to do, but it's saving our portfolios and everything works. So like, oh well. Or if this time people go, this is a step too far, and we get a freak out about the dollar altogether, or maybe it has massive whipsaw but before it settles. I think this time definitely has a bit more tangential risk with that. I don't think they're going to get as much of a clean shoot right the way through. So
Probably not. But you know what, for me, is like also different this time than any time we had in the history. We have now companies that are worth more and have revenue streams that are larger than the GDP of some smaller countries in this world. So for me, this is more like a cyberpunk kind of situation, or if you've seen Blade Runner back then, which obviously for film always paints us in a very negative picture, where you have corporations that are like slightly under or equal to the state power. Where you have something like Nvidia, Amazon, Apple, I don't know about Meta necessarily with the 80 billion they just wasted on the stupid metaverse, but that's peanuts, and in the grand scheme of things. But where they
get a tax deduction.
Yeah, of course.
Tax deduction.
Lucky them. I want that too. An 80 billion tax deduction. And I also take an 8 million tax deduction, by the way, happily.
Yeah.
And but where we have that the head of the state or the Senate cannot ignore what those companies want anymore. And they've been building up to this through lobbying anyway since, the early 80s, since latest the Reagan era, that the influence of companies to politics, where it was subtle in the beginning, it's now quite obvious. Because, if they don't do what they want, it has a large economic impact. You can easily lose something like 0.1% of your GDP, for example. And thus, my thinking also, what if somebody in the ECB, and not ECB, that comes maybe later too, but in the Fed picks up on something like this, hey, we can't just give quantitative easing to the banks. We need to include this large private loan sector, private mortgage sector, and it's kind of scary, but interesting at the same time.
Straight cash handouts to people, which they already did in COVID, once again. That puts cash in the hands of people to actually pay these bills. Because if you give them money, but they've got no business activity, everything still grinds to a halt. So, again, it's one of those steps closer to the whole universal basic income thing of, distributions. Probably already going to see that with some countries with windfall profits from gas and oil companies. The countries will tax that, redistribute it to consumers in the form of either a rebate or else direct cash. Either way. So it's very, very interesting with that.
Yeah. Russell, this is already my favorite comment of the week. Nothing can beat this anymore. if you understand this comment, you're also very high on my list.
I was going to say, also with the yeah, certain companies having more revenue than countries as well. Interesting dynamic as well in Australia, where we've got like South Australia. They've now taken over the Nordics as far as renewable energy. So it's like over 75%. And they're on target for 100% by about 2028, 2027. And so the single state, they tried and thought they'd make a profit of like 20 to 30 mil. They made a profit of 480 million. Which is a single state in Australia, and it's one of the lesser states. It doesn't have Brisbane, doesn't have Sydney, doesn't have Melbourne. It's not one of the major states or whatever. But they are cleaning up because of this now, and that was before this whole situation, right? So you get a lot of weird dynamics with this going on. Also with renewables, obviously.
I mean, if there's one country in this world that should profit off renewables, it's Australia.
Yeah.
A lot of sun, like crazy amount of space everywhere.
I think we're at like 40 to 50% now of total country energy supply is renewable. I think it will be 60 to 65 by 2028, 29. And then they're trying after 2030 to be roughly 80, 85. The excess is still going to be like, oil, fuel, like the normal, like diesel, that kind of stuff, which sort of you can't quite get rid of. But yeah, we're definitely on track for that. So
yeah, Germany was too, but now not anymore. Now we want to turn on the nuclear power plants again, mine more coal, and do all the stupid things. We have a lot of wind energy and solar energy in the south, wind energy more in the north, but we don't have the infrastructure to support it. So I think I told the story, like a neighbor of my brother's who lives like in a very rural area in northern Germany. He has like plastered his fields with solar panels, produces quite a lot of energy, but he gets paid for it, but it doesn't go into the energy grid. Because it's like subsidized, but it doesn't go into the energy grid, so it's kind of wasted. Thus, he got this idea, actually, why don't I just mine Bitcoin or do something else with it? Which he also is not allowed to do, because then he doesn't get subsidized anymore, which of course makes sense in a way, but now they want to get rid totally of of subsidizing this industry in terms of if you have a solar panel on your roof and you got a couple of cents per kilowatt hour of if you put it into the energy grid of compensation, or you could save it for yourself, power your electric car with it. And now they're getting like totally rid of it. Like they're going back to, no, let's go how it was in the year 2000 or 1990 and make Germany great again. Oh, that has a special flavor when I say it. I didn't mean it like it came over, really. Round two.
But yeah, no, I that is one of the problems where some people that have this stuff can't actually put it back to the grid because the grid's already at like max capacity for that, so it does end up getting wasted. So that's where the whole battery tech thing, which no one's quite got through as far as storage, whether you just do more volume, but then that it's very difficult overall.
BYD does it.
Yeah.
No? Does it now? They have they're releasing their new car series, like 1,000 kilometers of guaranteed range, I think, under ideal conditions, so minus 20 or 30%. But those are becoming immensely popular in Germany as well.
But still small use case, not quite like large.
Yeah, of course.
Commercial set. But definitely, step in the right direction.
But we are getting there. Like it's just a matter of production cost, I think, when it comes to solid state batteries now.
Exactly. Henry, we're still net coal, but it's only a fine margin now. We're coming up to, very close. So, which is good. That's it's all the stuff that Labor's done since they've come in and they blew out, the previous election. So they've got this, I forget what the plan is called, like Made in Australia, something, whatever, over the next number of years. But it's going very well, I must say. So The only thing we need now is to get more royalties from gas, especially in this current time. So
Yeah, you should stop just burning it
Yeah.
away, you know. And
Well, we just give it all away. We send it overseas and then we buy it back at high prices.
it's like the 4D
And we
chess
don't
move.
take any tax on it prior. You know, it's like 2% tax. It's ridiculous. But yeah, we'll jump back into some of the technicals now as well. So with all that said, so EU, obviously today we've had a bit of a decline, especially coming through here, just end of Asia, pre-London. We've seen this further drop through here. We had that peak basically around where you took profit last week, which was definitely a bit of an overextension. Like we had a massive run last week through there. Chop through here, obviously the gap down at open today. We zoom in a little bit. We then close the gap and we've just trailed off since. The key level, and I think you must have, I guess, worked off this last week as well, Dirk, is basically around that 114.
Yeah, exactly.
20-ish line in the sand, right, for me. So below there, we go pretty much down to 112 very quick. And then basically the situation is if infrastructure gets further hit, we knock out more oil, gas, helium, all of it in general. And we get this kind of increase in rates from central banks across the board. We're going to get demand destruction plus the increase in rates for financing, cost of carry, all of that. I think from there, we'd see a pretty quick drop from 112 right down back into the 107s and then potentially 105 or so beyond that. Once this stuff really starts kicking off. That would be in a full crisis scenario. We're heading towards recession collapse type situation to punch below that 112. But given the escalation right now, I think 112 is starting to become more on the cards. Right? If we don't get something sorted out this week, this next period. What are your thoughts on that?
Yeah, no, absolutely. I absolutely agree. And that can be very quickly, for me, like you said, also like kind of two things we need to keep an eye on. Immediate reaction, of course, tonight. This is going to be very interesting, really, like because the USA are with their back to the wall now. How are they going to react to this? You know, are they pulling through? God forbid, you know, with what they threatened, which kind of is probably the way to further escalation, but let's see. And then Friday night, especially, I think, kind of the last 3-4 hours of a trading session are going to be especially interesting. So should we see like a road to further escalation and not that much reaction, this is for me the obvious short, you know, on Friday. Maybe, you know, once New York opens or shortly before that, to really short the heck out of risk on assets then, and then close shortly before the session is over. On another note, we see, of course, the WIX like being above 30 today. I'm just trying to look up actually how is the average WIX for. So the average since the year 2000 sits between 19 and 20. That would have been my educated guess. So we're massively elevated when it comes to that as well.
What's that? S&P. Yeah, that's
what
I was wondering. Yeah.
So and for me, that's always, as an option trader, a good gauge. You know, what is that to do? So if this is the average, everything that is above that were times of crisis to some sort. Everything that is above 25, even worse. But eventually, we, like you can see, as scary as it is, these levels usually do not stay elevated for a very long time. It can get very scary up to 83 we saw during the first reaction of COVID. But eventually things normalized again, you know, so you want to be there at the side of buying risk on assets, which, by the way, is also the reason why I'm planning today on buying some more NVIDIA, because pre-market we are around $171. I want to buy this, not with everything I have, obviously, you know, but add a little bit again to my portfolio there. It's scary sometimes in times like this to invest, because the immediate reaction that we get also from the media is always, everything is going to shit. This is the end of the world. And I'm sitting here, same as you, LJ, thinking, if it is the end of the world, it doesn't matter anyway, Then hunting Forex or I don't know, selling bottle caps, if you allow me the Fallout metaphor, is more important.
I was about to say Fallout.
Yeah. and love that series, by the way, and also the games behind it. And so that one more important. But if the world will eventually recover from this, then this is the time, to throw cash at something like this. Not all at once, but slowly scale. And of course, I don't know either, are we going to bottom out for gold at the levels we are right now, or are we going further down to 4,000 again, or 3,500 or something? I've seen some comments earlier calling for 3,000. But guys, this is typical again, we have that move suddenly, and then it's I want to get in, but we're going lower. It's the typical fear, uncertainty, and doubt. I want to buy it, but I don't dare to because I'm scared.
Yeah. The only thing I wish is I held. I mean, obviously, I'm trading actively, so I'm not going to do that. But that 5,500, 5,600 short from the top, with calling held it this far down. That would have been beautiful. But I still got that's still 75% of the move off that.
I mean,
first
it's
drop.
to be fair. I don't know if that is comfort for you. You're the only trader I know who did this actually actively. So that was by all means, a brilliant call.
Yeah, and I like calling. It's the same when we had the prior tops at the 3,500. It sounds very almost Michael Burry-esque. I'm not that kind of trader at all. I'm very much the opposite, in general, because everything goes up and to the right. But yeah, there's certain times where it's just very clutch. So in the inverse of that, I think 3K, that would be ridiculous. There's no sense of that.
Yeah.
We won't be getting some of the central bank buying right now. There may well be government offloading of gold and that kind of stuff. There's heaps of background stuff you don't quite see of government treasuries and things that aren't fully public, and they have delayed releases, that kind of stuff, whether they need more money for oil purchases or redistribution of cash to, sort of cash in hand like we had in COVID, or subsidies, that kind of stuff. So you get this kind of weird cluster effect of some of that plus speculative trading. Gold has also been very highly liquid, especially of recent, since there's more participants in it, since it's been so hot for some time. And yes, you've had a cascade of liquidations. You also have things in other markets, like private markets, private equity, fringe assets, not like the primary assets that we're looking at, where there's various companies in certain levels of distress. And then you kind of get these small cascades, which are all those little hidden bits, and they're very hard to pull apart. This is why we have market crashes, because no one can quite see the whole picture, because it's very complex. There's too much. It's all pretty ridiculous. Now, that said, 3K would be too much. I think 4K to 3.8 is my absolute sort of bottom. Maybe get a kickoff extension to 3.6 because of the amount of volatility and activity in gold. But I think we kind of have this sort of story priced in of the higher inflation, input prices, rates potentially going up. Therefore, obviously, cost of carry for gold goes well up. And people have demand for dollars. So gold being priced in dollars, when you need dollars, you're going to sell your gold because you need dollars right now, not gold. Right? So you got those cluster of things coming in together. But at some point, once that starts to get priced in further, which would be that extra dip, we're now looking at crash scenarios like we were talking about before. Then you get the Fed, governments, central banks across the globe coming in to intervene or pump out QE or whatever new financial engineering modes that we get. Then people rotate back into it because you have dollars being printed across the board or euros being printed across the board, right? So it goes back to that sort of debasement type trade. And you're not quite sure yet on what the appropriate interest rate for, say, bonds should be, or treasuries, or whatever. Because you got the short end, the long end, a whole bunch of chaos with, I think, the next situation. So I think that's when gold will rip. So just like Dirk's showing through here, I think dollar cost averaging anywhere down through here is a very good idea.
Yeah. This is
overall.
the trade I entered this morning, roughly. Like my stop loss, my take profit, so it's a 5.7 R. Not trading this on the fivers. I trade this with like a spot gold instrument where I don't have overnight financing, so physical gold, if you want, so to say, because this could take some time to pan out. Trade I'll take any time. What is the reasoning for it? We hit the -4 sigma. Now, don't get me wrong, when we hit this and don't bounce off it, it can sometimes be also an indication that trend is actually flipping. So just because it hits it doesn't mean it immediately goes into the opposite direction again. But I'm already up a little bit on this trade. So eventually, when we go over the bull market support again, this is like a trade I would put to break even then, to see if we bounce off, go to the downside, or if we really recover then. But this is the type of trade, where you need some balls for, pardon my language, but if they succeed, it's like one of those 1, 2, 3 trades per year that really make you the bank. You don't see a risk reward ratio of 5.7 like really being executed on the take profit very, very often.
Yeah, not on obviously longer term stuff like that. That's big. That's big return. Yeah, you can trade something on a 5 minute and sure, but
I mean that's the trade
holds and without leverage. That's huge. Yeah.
And let me put that in numbers. This is a trade I risked $10,000 on this morning. So
there you go.
If that reaches, the take profit, this is a massive trade, obviously.
Yeah.
That's a good monthly income then already.
It's all right. We just got to stack some more. It's fine.
Yeah, exactly.
But yeah, guys. So as well, if you guys got any questions or like trades you want us to look at or charts or whatever, just throw it at us. Like we sort of run through some of this macro stuff. There's a bunch of things going on, so we try hammer that through sort of within that the first sort of 45 minutes ish or so to an hour. Hopefully update you guys with what is the current climate, what's going on through say the next week, the week after. What are the things you should look out for, and what might cause you some harm in particular. And then hopefully as well, obviously offer the solution to get the benefits from it. So from here, there's like probably just a couple more things eventually we'll run through. I just will need to jump up just for 1 second.
Sure.
My afterwards questions were going to be Bitcoin. Where does Bitcoin land in all of this? And so I'll jump up and come back. But yeah, guys, drop anything in the chat, in the comments, and we'll run through it. So back in a sec.
Right. See you then. All right. Let's. We have had there quite some questions about Nasdaq, obviously as well, because that's the one we see reacting as well. So first of all, like LJ said earlier, I'm a little bit surprised as well that we don't see much more reaction in general from the stock markets. I think Asia got hammered a little bit this morning, but not too bad. One little thing I'm actually concerned about here, just purely from a technical perspective, which is difficult, to see things just from a technical perspective today, because the markets are obviously driven by geopolitics, by the Iran war, by everything that comes from the US administration, especially gold. If you were last week in our stream, I said for me, we are looking like let me put this as a channel here, maybe, like in a sideways market defined by kind of this upper zone here. Maybe pull this down here. And the lower zone, which is like this one here. Now, we've obviously this morning broken out to the lower zone. So by definition, you could argue now, of course, that we have changed market structure, right? That we are now in what looks like at least a temporary lower downtrending markets defined by lower highs, defined by lower lows. So there are two things critical, in my opinion, now. From a pure technical standpoint, and that's dangerous. If you just look in a technical way at the markets at the moment, I'm not talking about scalping now, talking about more like swing trading, longer term trading. Like if you're looking at 1 minute charts or 5 minute charts, this is, of course, not an analysis that applies to your scalping strategy. But from a pure technical standpoint, if we close below this area now, this kind of, probably a lot of people would call it order block, technically we have made a new lower low, which puts us in a breakout from the sideways structure we saw here to a more downward structure. How long this is going to last is the different question, of course. But then if you are like kind of swing trading, you might want to look more at short trades maybe here. Now this is why I said like just looking at it through the lens of pure technicals would be a little bit a two-dimensional solution for a three-dimensional problem. But if we want to stay with a narrative of technicals, we need to close at least higher than this wick to the downside, preferably even up here above 24,000 US dollars points, of course, in the Nasdaq. And this is what makes this day so special, in my opinion, because it's all going to depend on what the USA are going to do tonight. And I don't know if they are going to make an announcement after the market close. There was this 48-hour moratorium, I think. I don't know when this one really will end. So might be before the markets close, might be after the markets close. I don't know really. So let's factor in tomorrow again. Let's say this comes out after the markets close, then you need to take, of course, tomorrow's candle also into consideration. However, like I said earlier, I don't see really any way how the USA can wiggle themselves out. So very interesting situation at the moment, and a good example sometimes how you might be tempted to look at like in a chart in a very technical way and say something like, well, we are making a new lower low today. So technically we've changed a market regime from a sideways range to an upways range, and probably we're going to trend higher. When in reality, like I just said, it would be a two-dimensional solution to a three-dimensional problem, because not technicals are the driving factor here. It's, whatever the USA, macro, geopolitical, whatever, Donald Trump is going to say this morning. I just told the audience I don't really know when the moratorium is ending. Is it before the markets are closing, or is it after the markets are closing? Probably after, I would guess. It would be stupid.
Whenever Trump finishes his round of golf.
His cheeseburger and golf, exactly.
Yeah. Then he'll decide,
But very interesting, because it aligns again, what you see very often. You have like a geopolitical driver, but at the same time you are at a decision-making point when it comes to looking at the market just in a technical way. And by the way,
this is where you get both. Yeah.
This is where you get both, and this is where technical things really can help you also to enhance your timing. So typically, and this is a very simplified example now, should you, for example, see something like after, let's say, they decide what they want to do today at 4 p.m. So like an hour before the markets close, and then you suddenly see markets moving up a little bit. Then you could play this like, and it's negative news, they are going to further escalate. Then you could play like, every time we reach a resistance level, you probably want to zoom, of course, into more granular time frames, like 5 minutes, like 50 minutes, an hour, or something like this. I want to play this to the downside. And very, very simplified yet. But you need to align your technical picture to, the geopolitical reality. Now, you said earlier you are interested in Bitcoin and how that fits into the whole narrative. This is a
Yeah,
question
definitely.
I'm asking myself every day at the moment as well. So the good news is, in my opinion, the reaction has become like Bitcoin is a little bit more actually acting like a risk-off asset in the last days. You know, it
Yeah.
seems like we are a bit kind of out of this window of what, in my opinion, was more driven by minor capitulation. Because once we fell, especially under the mark of 80,000, we saw a lot of miners turning off their data centers because the cost per mining Bitcoin on average is somewhere between 78 and 83,000, depending on the source you want to believe. So it was not profitable. So they shut off their mining rigs, and a lot of them said, we're not going to come back to mine Bitcoin. We are going to switch to services for AI data centers over, which I understand is the low-hanging fruit. And but something like this minor capitulation, we've seen a number of times. We've talked a lot about this as well. I don't want to go too much into it as well. However, the whole structure of Bitcoin is still a bear market. And it's a bear market that's probably going to extend until October, November this year. That would follow the typical pattern we've seen in the bear market as well as in the past as well. We are very much outside of what is expected at this time of a year already. So we are trading lower than the logarithmic regression, lower than where the Bitcoin power law sees us, which prices Bitcoin, I think, at 105,000 at the moment. So long term, these are pickup prices. Again, it's a notoriously difficult asset at the moment if you're swing trading it, because it's so weird in reaction. You see like in reactions where you think like, well, it should jump up now because stock markets are jumping up. No, it doesn't. It goes further down. And I think that's because it's very highly driven by flows. In comparison to legacy markets, it's still not going to say a small market, but a smallish market. So once you have those whales coming in and dumping like a couple of thousand Bitcoins, you very quickly see price movements. The good thing, however, is that first of all, we are seeing net inflows into the Bitcoin spot ETFs again, which surprises me, to be honest. Plus, on a whale level, we see more accumulation. So the large wallets out there that are not tied to exchanges, they are picking up Bitcoin at the moment again, which historically is also a good sign. That doesn't mean we cannot like quickly go down to 60 or 50,000. However, my strategy really is here, and let me quickly show you the logarithmic regression as well. This one, as we are trading massively below what, according to like really a standard mathematical model, a regression, in this case on a logarithmic price scale, this has in the past, whenever we were below that, like the last time we were trading as discounts like this was when FTX collapsed, and that was at $16,700. After this price went to $125,000. I'm not saying this is from these levels going to happen again. We see the alpha flattening there for sure. But I would be surprised if these are like 3-5 years down the road, not levels where people once again said, oh, I should have bought at 70. I should have bought at 60. I should have bought at 50 or something like this.
Yeah, because I was wondering, because I mean, BlackRock's been dumping a bunch of Bitcoin, right? So we've had some of that come through, and also curious as far as the worst scenarios for this, or if it right now it always seems like the base case, but that assumes it stays this way. And we get the eventuation of all the stuff we talked about, and then it's the question of how the dollar actually reacts this time, or is it going to be different, given everything? And then you've got gold there. Potentially, does Bitcoin actually get some kind of favor in this scenario for once? Or again, is it one of those, nope, it ends up linking back up to risk assets, the stock market, the NASDAQ, tech players, that kind of thing. And obviously running the network and data centers, and hence it gets sort of crippled with that measure.
Sorry.
You know?
But that's the thing, everybody who is into Bitcoin, and I consider myself obviously Bitcoin maxi, this is always the moment we've been waiting for such a long time. And during every cycle, bear market, I hear the same arguments again, it has failed. It's not what Satoshi wanted anymore. Yeah, obviously, because things adapt to reality, back in 2009 when this was like initiated as a... Yeah, what?
We definitely just got some kind of headline, because we are ripping right now.
Okay.
Jump over to the NASDAQ or Euro dollar or Aussie dollar or literally anything.
Ooh.
What do we have like a full... Because this is big. This is a big move.
So what do we get here? Let's see.
We're up almost 100 points on currencies in general already. Stocks absolutely ripping. Dollar yen in the bin.
What is happening?
Gold's up, basically $100 per ounce now as well. Currencies all roughly equally, every major $100 one way.
Checking Bloomberg.
I haven't seen exact headline just yet, so let me go over to Bloomberg and just check. This is big.
Massive. Yeah.
Fortunately, I wasn't in anything right now, so hopefully you guys didn't get hit. Sorry to interrupt you.
No. That's exactly what we want. No, I mean not.
Yeah, this is not small.
Pfizer. What is happening? I don't get anything on my.
Bloomberg hasn't reported anything.
Nothing.
Yet, so, okay, Trump on Iran. US and Iran have had over the last 2 days very good and productive conversations regarding a complete and total resolution of hostilities in the Middle East. There you go, and that's how we turn it around. Now, the interesting thing with this, Dirk, because this comes right into our 3 to 4 week timeline. You know?
It does really. Yeah.
And so this is some of the discussions we're having in the Discord, and I had some other DMs with people where we're talking about this today, and it depends.
Look at Ripple.
This is, like we were saying earlier, next 2 days or this week. If we don't get it by this week, then we're dusted. But until then, careful. So yeah, there you go. There's the gold pool right off that 200-day moving average.
Here we go. Look at that, man.
How much in profit are you now, gold, Dirk?
Yeah, a bit. It's not too bad for a day. If I earn this,
yet?
if I earn this per day, I'd be quite satisfied. Here we go. It's beautiful. Really.
Yeah, Trump saying, I've instructed the Department of War to postpone any and all military strikes against Iranian power plants and energy infrastructure for a 5-day period subject to the success of ongoing meetings. There we go.
9.5K, guys.
This is basically exactly what we were talking about this morning in the Discord. So if we don't see this kind of pause, and even just a couple of hours ago, if we don't see this kind of pause, de-escalation type thing, or
I'm
just
happy
like
they
status quo for now.
I'm happy they come out with this because it shows like that they saw the necessity because they knew if we are going to wait until tonight, until the markets close, we're going to see bloodbath upon closing.
Yeah, it's cataclysm.
That's cataclysm, yeah.
Yeah.
Yeah, here we go. This is, but of course, I'm betting still in continuation. As I said, I risked 10K on this trade. Up, almost 10K now. Almost reached 1-to-1 already. But as tempting as it is, I need to let this running. Because if you close this early, it's eventually going to bring you in trouble. But this is why I said earlier, these are one of these chances, where it takes a lot of balls to take the trade. Pardon my English here, but it's like normally at the end of a year, like when you look back, but you can say like, hey, this was one of the situations, where I didn't trade to scrape off pennies in front of a truck. But that really made me bank on this day.
And that's why we try and talk about macro, right?
It's why we talk about macro.
These are when you clean up these massive kind of moves because you're positioned well, which normally you're not going to get day-to-day trading. So
exactly, but it's the
day-to-day
combination
trading
of
is great, but the thing is you get that day-to-day and then you get these massive pumps and that'll clean up like 3 months, sometimes 4 really good times. You can clean up 6 months profit in a really, really solid trade. And that accelerates your compounding over the years as well. So.
And I love it really because this is, I'm probably going to talk about this for a very long time on the stream now. But it's such a good example of aligning geopolitics and technical analysis, because really the only reason for me was that, hey, if there is going to be something positive coming out now, and we are hitting with -4 sigma standard deviation, this is where you really need to risk something. But guys, again, also, I've been doing this for a very long time now, but believe me, I was also shitting my pants this morning when I entered this trade. Because it's like the kind of trade, when I come home, I'm stopped out on this one with minus 10K in this case. I'm like, coming home, explaining to your wife that you lost a lot of money today. I mean, she's used to, these numbers anyway, but it doesn't feel good. It potentially puts you in a bad spot on a psychological level.
Yeah.
Wonderful. That really makes my day.
This is good.
Here we go.
So I didn't have stuff on prop accounts. Fortunately or unfortunately.
This is on a private account.
Both ways. But I was going to say, I've got stuff on private accounts, like personal accounts, ripping right now. So this is
nice.
This is good.
Happy to see something like this happening in real time here while we are live. That's the thing.
Because some of the stuff I was going to bring, like I'll just show you anyway, because I was going to, some of the other things we were talking about with the S&P and everything, I was going to bring up some of these last week and didn't get to with things going on.
Yeah, but you saw, you shared this last week, exactly that. Yeah.
Was it? Yeah, I brought up a bunch of them that I sort of pulled up because I wasn't sure which ones I did get to show you or not. I've got like 800 of these screenshots of charts and stuff.
Especially this one I remember because we talked about, I know you were in a bit of a bad spot last week, so maybe it kind of slipped your mind.
Yeah, I wasn't sure if we got through it, on the Monday last week then. Okay, we did.
Exactly.
But yeah, so this was part of the stuff. And then did we go through the Amazon Walmart one?
Yeah.
I think we did as well. Yeah, okay, we did. All right, I wasn't
we had
sure.
to flip there now, no?
Yeah, okay, cool. I was just making sure because there were a couple of these that I've got bulk loads of folders all the way through. I can't remember.
Tell me about it.
I've got I need to actually. I've decided I have to get a second hard drive because I'm actually burning the hard drive of just too many. Photos and folders with this stuff.
I have the same with my mobile phone.
And trying to index it.
When I read something, I'm like, I need to take a screenshot. I want to talk about this or look into this further. And when I have like screenshots, I look at it, it's like, why did I save this like 4 weeks ago?
Yeah, exact same deal. Like I've got stuff up on my phone right now. Because that was the other one I was going to talk about, which was I don't know how you pronounce that, but Bab el Mandeb. Like the other sort of, it's around the other portion of the strait which goes past the piece through Africa, and that was basically on the cards for Iran to hit or target next. So with that gone, then it's 100% just around the Cape of South Africa, down the bottom of Africa, and then that would be all that's remaining. So that was going to be my next point of like further deeper escalation that was definitely on the cards from Iran, but I guess we can see we've actually
luckily
started to calm down.
I look at Brent coming down, man. $79.
Yeah, I know this thing is ridiculous. So I did have a short in here today, which the stop was actually through here just below 112. I was on personal account, and that got hit. I didn't realize it because I thought I actually had the. I mean, it's not bad. It's still a good trade, but I thought I had it at 86. Down through here, down through this base, 87. Sorry.
Lobster for dinner, mate.
Yeah, I'm not complaining. Look, I didn't expect this to hit anytime soon. I thought this might take some time. That was the
I think
inverse
this is
bet
the
on-
most profitable
on better.
session live streaming we ever had together,
Yes.
Really?
Yeah.
by far.
Yeah. This has been it's been very good. Dude, DAX ripping. We're up towards support at the tops through here now. S&P, similar deal. We've punched through the same sort of relevant equivalent tops that the DAX would have. The DAX, so Germany or Europe in general is not going to be quite as much out of the woods if this comes down. There is still disruptions to gas and some of the oil on their side more so than other countries. If this does come to a halt or some kind of agreement, then it won't be too bad. There's been a lot of I don't know if you want to call it fake news, but people just trying to analyze how much gas supply there is or isn't, not quite understanding what's LNG, what's pipeline gas and all that kind of stuff. So, but it still will take a bit of a hit. So you'll see European indexes not quite getting
Look
the
at
same
the
pump.
look at the S&P 500 VIX if you have it on the, just dropped from over 30 to 22.6. So if you just bought a put on the S&P 500, you are like getting double smacked, not only by price but also by volatility.
Show me yours. I think I must have the wrong, because this clearly hasn't updated. So
This one here. Just now when you
Yeah, there you
were
go.
like the way I was talking about this and I said
Yeah.
we're at 30, no, it's like super elevated already. Now we are 22.6. And that meaning like if you buy like puts and the volatility is high, the VIX is high, you pay like a premium on the volatility. So you're not only losing money because the S&P is going higher now, or Nasdaq also, same for the Nasdaq VIX for probably a little bit more even, but you are also losing even more money because volatility is coming down. So I just wanted to mention this because this is like the factor that a lot of people who start option trading oversee how much volatility plays a role in pricing options. Sometimes even more than price.
More. Yeah, I was going to say more than price itself. Often, yeah.
And it's like everything we said just 10 minutes ago is obsolete, guys.
Nice, dude. Great, beautiful.
Oh, I love it. This is one of the days.
Dude,
where
I'm smiling right now. I gotta say.
it's really one of those days. You know, you as a trader, as an investor, you have many days where you kind of doubt yourself. You're like, come on, do something, move. You know, I cannot get it right. And then it's like the moments you live for are moments like this, and it makes me so happy that it's not only me, of course, LJ, they say we get to share something like this with you live. It's rare, no? It's always easy to say I could have, should have, you know, I did this or did that, and opposite to really showing it live.
Yeah, so good. Because like coming in today, after last Friday, we had those dips and I did exit like some of the stuff on it's also end of the week, so like prop accounts, I'm gonna exit things. But I was sitting there with personal stuff going like, I can't, like every measure I put, like everyone is cooked, and this is GFC 2.0. So I held on to it and now I'm glad.
Yeah.
I literally had a week timeline from this that if we get towards Friday and nothing's really changed, I'm out. But here we are. So,
Yeah, like we said earlier, no, it's going to be a bloodbath otherwise on Friday, and it would have been a bloodbath tonight. Now we have to like keep in the back of our mind now that this could be also something like in Germany we would call it in Newsduck, Zeitungsente, like where the politicians feel like they have to say something or write something to calm down the markets, and then
Yeah.
reality is going to be something else, especially when it comes to Trump, you know. But for the moment, if you're on profit like this, you know, this is one of the cases, you know, what kind of makes sense for me to not let this trade slip into negative territory again, honestly
Yes,
speaking.
you got a safety barometer. Now
Yeah.
you pull up the risk and cover
Becau-
those headlines because Trump
Because
has
if it
definitely set
runs,
back
it will run really, you know. If it's a
Yeah.
fake news from Trump, this reality is something else, you know, then we are quickly going to see that the markets are going to doubt what is going on a news level again.
Yeah.
I
the
really
next-
have
the
to.
next-
Sorry, I have to
Yeah.
quickly go to the special place.
Yeah, that's
to-
right. Yeah. Go. Yeah, that's fine. That's all good. I'll jump over. Hang on. Let me swap. Here we go. There we are. All right. So yeah. So the next thing from this, guys, is obviously like this is the massive thing. So let's actually go to the Dixie itself first. So from here, we got to see that Iran actually backs up these tweets. Right now, it's just Trump tweeting. We don't know for sure, not 100%, but we need Trump to actually back that first of all. Iran to come out and back that first of all. Once we get that further deeper confirmation, then this will start to stick. So hence, obviously, right now we're seeing a bit of that rebound, sort of pricing that in. Obviously, as well, the points where we were stacked up with, this is right on that level for the Dixie, which I thought was very interesting. This sort of capture level that we've had through the past couple of weeks, and it was very much in this past couple of hours a question of whether we'd actually break through that and say, for instance, on the dollar yen, start looking to press 160 again as we'd moved up into the high 159s. So I don't know how much I'd be trading on this just yet. It's almost like a NFP day, right? I kind of wait for the chaos to calm a little, settle, and then try and pick some moves. If you're very bold, that is. So we can go to like let's have a look at 1 hour. What's the 4-hour structure? There we go. It's a tap into the 100-hour moving average on the 4-hour. See about the euro. Similar deal, overshoot, prior highs. Each asset is going to be a touch different with those considerations of even if this does end, what are the further blowout impacts? So we've seen the pound fall short just a touch. It's going to be interesting now going into New York today. It's going to be wild. Cam Bam saying, how many billions were lost in the last 2 minutes? What do I think? I also wonder how many were made. You know, there's always two sides of a market, right? Two sides. So you always have both. Shark was also asking before, are options harder than normal buy and selling like FX and futures because of the time factor? So yes and no. Like if you start to learn options, there's ways to trade them in very complex methodology and getting very in depth with all the math and everything like that. Normally there's also a bunch of sort of like platforms and calculators to work that out, so you don't have to sit there and do it yourself. But you might have to build sort of a Excel spreadsheet if you really want to do it profitably with your own custom stuff and input all the data. But there are certain options trades where they can be very sort of vanilla, very simple, and they can benefit you. Trading FX or futures will be much easier because essentially you have to, people sort of size up the charts, a lot more technicals. Maybe you got some macro in there, decide where the key levels are, figure out your stop, figure out your profit targets, and then basically hit enter. Options, you do have to consider volatility over the certain period of the option, exactly where you're buying, the correlation stuff, future news that is going to impact things like volatility. So you got to go through all your Greeks, right? So yeah, it's definitely more sophisticated, but it's not as complex as people think. But it can be complex if you want it to be. I think all of markets can be that way if you really want to get deep, or they can be much more simple as well. Just like stocks, you can get super like nerdy into the nitty gritty granular type stuff, or you can go a bit more of a Warren Buffett type approach. Is a company going to be here for a while? Are they cheap to what they're earning? You know, debt ratios, blah, blah, blah. Buy. Come back in 20 years. You know, so. Welcome back, Dirk.
Thank you. Thank you. Talking about options, nice. Going to the next level.
Yeah, we had a question basically just asking
harder.
Are options harder than normal buy and selling for FX and futures because of the time factor? So I was saying, I don't know if you caught the back of that. Like, yeah, it's definitely more, or bullet points. I'll jump up for a sec, but yeah, it's definitely more complex. Net from a base standard, like obviously FX futures, you can kind of just click a button, but you can also make options very simple for you as well. It doesn't have to be super complex where people get into all sorts of wild stuff. You can also get into wild stuff with FX and futures with like very dense portfolios and balancing and all sorts of wide stuff. So yeah, I'll come back and give you thoughts, because obviously
I'd love to give my thoughts on that.
Yeah.
So in a nutshell, it's not harder. Of course not, than FX, because you always need to have this direction. What I like about options is that you have a little bit more leeway. Now, I'm somebody who's usually on the writing side of options, meaning I sell options. And we can make an example for this. Let me quickly go maybe to this chart. So let's say euro dollar, we are now trading at 115.31. So for an options trade, I might, for example, say something like this, not a real trade. I'm going to sell a call with a strike of 116.50, meaning if I sell the call, I'm betting that price is going down because nobody wants to exercise my call, and then I earn the premium of this call. In a directional trade now, you would see the outcome immediately, right? Because if you translate selling a call on an option to a directional trade, it would mean you go short euro dollar. And you would see, like you see on your Fiverr's MT5 terminal or C-Trader terminal immediately, am I currently in profit or am I in loss when I close this position? With options, you have the opportunity to make things a little bit more complicated on the service, because you can measure based on the current volatility, how likely is it to that I'm going to be executed on my option. Meaning, in this case, I would lose money, and usually you measure this with something called delta. So I usually aim for something like 25 or 30 delta options. On a very shallow level, that means like there's a 25 to 30% chance that I get executed on this option and that I lose money. But even if I get executed, it doesn't mean that I lose money, because I can hedge the position. I know, for example, when I open the option trade and have a 30% chance of being executed from this trade, losing money, I can do a hedge trade in spot. So I could, for example, buy euro dollar in this case to make sure that I have a euro dollar should I be executed. And you have all those, I think LJ mentioned it probably, all those like terms or means of measuring this type of risk, not only in conjunction to price, but especially also in conjunction to volatility, for example, Vega and Gamma, that you're at any time and point can be pretty sure, how do I need to adjust my position right now that I hedge some of my risk, hedge all of my risk, and so on and so forth. So it's usually a long-term games. I know on social media, when you see option traders, usually they do something like, they are on the buy side, meaning they buy calls or buy puts, and when they share like, wow, I bought this on Robinhood like for 2 cents this call, and I sold it for $10 and made $1 million of it. But of course, this is not professional, realistic option trading. It's more mathematical. This is also why I'm not sharing it, but only let me put it like this: the learning curve of getting into it is a bit higher because you need to get an understanding of the math behind it. But once you're into it, you'll thrive about it because your means of managing the risk of your position are like much, much more refined than you can do with any spot or futures trade, where basically the only means are like, am I closing the position? Am I partially closing it? Or am I hedging it, And you cannot adjust really for something like, how is the volatility curve developing at the moment? How's my Gamma, my Vega? I said delta matched to the price, and so on and so forth. But it's I think something, if we ever want to do that, the learning curve in the beginning is steep, but once you've mastered that, it's like, whoa, it gives me so much more tools to manage my risk than when I just trade directional long or short with a spot or futures position. Welcome back, LJ.
Exactly. Yeah, and you can hedge them out with that because you can create defined risk, right?
Yeah.
So you can use them as basically like insurance contracts to your spot trading. So I haven't traded as much options as I used to do in the past these days. Shuffle all my portfolios around a little bit different, but still, time and again, I'll jump back in. And
Yep.
yeah, when you start options, like it seems confusing. It's almost like learning math from the start. When you're like a young kid and you're like 5 or 6 years old, and you're like, what's a plus symbol and a minus symbol and multiplication and division, and then you got derivatives, and eventually get into algebra and all that kind of stuff. Like what's a square root? You're like it's confusing. But once you know it, it's actually fairly easy. Like, right?
Yeah.
So when you look at option strategies, you'll hear like names of certain things like iron condor or like a butterfly or all this kind of stuff, or like a straddle, and you're like, oh, what's this? And then you got to go long, short, and there's calls and puts, and is that buy or sell? Was call buy or was put buy, or like what? Like, but eventually you'll get it, and then it's very easy. And then there's just the math part on top of that of actually doing the numbers. And then once you've got it, it's very simple. So it's sort of the really good thing, like with math in general, I feel like people are always very scared about math. People think like math is very like, you got to be really smart and that kind of thing. Thing is, math is fixed. Once you get it, you've got it. So it just takes a bit of time to sort of work through that. Some people have a greater intuitive plantation to that. But once you do figure it out, it's the same, right? It's almost, like science is sort of harder. Markets are harder. They change all the time. The rules change on you. Math is the same rules. So don't be scared of the math part of options. Yeah. So if you can get through that, you'll be able to apply that then to markets, and you'll be good.
For me, I just remembered this actually. When I first got into options, I felt like the same moment that I had back in school when we first had to do quadratic, what is it called? Quadratic equations, I think.
Quadratic equation? Yeah.
Polynomial equations, second degree ones, where you have ax squared plus bx plus c is 0, where a is not 0. And sorry, getting super nerdy, of course, here right now. And back then, I had a very hard time understanding those. And I felt first when I got into options the same way. But once you get over this first hurdle, It's like, oh, okay, this is like this. Oh, well, that actually gives me a nice tool set, how to measure things in a different way. And kind of like opening up, like viewing financial markets from 2D. Oh, I'm just going to rely on my indicators and technical analysis to more 3D. Oh, maybe I should look at those 25 delta risk reversals, for example, or where the max pain right now is for Nasdaq options. And so it's worth it, but many people don't do it, which I can understand to a certain degree, because it's work a little bit upfront. And many people are thriving for this. No, I just want this one indicator, whatever, that works for me. But sadly, trading is not working like this.
Yeah. So that's one of the things, like, because, I think that's one of the main things where I've talked about people about options, and they're just like, oh, math, yuck. Right. But the thing is, it's not going to be rote memory where you got to turn up to an exam and remember things and you fail. Like, if you do forget something, like, you can just use Google, you can use AI now as well, and just sort of update, and then you're like, oh yeah, that's right, and then work it out, right? You're on your own time frame, time scale, that kind of stuff. So yeah, don't be afraid anyway.
And it's so great, I wish, like, not even with AI, but like my wife once commented on this, and I think it's very to the point. She said, you know what? If you ever nowadays as a student, if you have a math problem, you can be sure there's a YouTube video by an Indian guy explaining it to you in detail and in a very good way. And it's true. I wish I would have had something like this back then, but instead I had like books of equations where it's like, I don't want to read through this,
Yeah,
and,
same deal. And you're highlighting the pages and you got sticky notes and everything.
Really,
you're like, and then you've got like a photo that you took on your rubbish flip phone or something. Or at least I used to do that, of like a friend who had done a bit more work, gotten ahead of you. You take a screenshot of his workings out, and then go to like the printer shop, print that out on a piece of paper, and stick that in the textbook as well, so that if you forgot, you can kind of reverse copy that and go like, oh yeah, that's what I missed. That was the part, and then do it. Yeah, and we always used to like share that. So yeah, great.
Trying
times.
to
It was fun,
keep up with a teacher on a short board, like writing. Like, oh, I need to write this down so I have a chance of learning it at home.
Yeah.
Oh man, those were the times.
Yeah, definitely wild. Akram, you along?
I think he's happy.
Please tell me.
Woo.
Please tell me. Please tell me you're long.
US 30. I bet he's long. I hope he bought at 45,400.
Oh, Akram. Never mind. Damn. Never mind. That's okay.
What?
No, it's right. No. I was talking to Akram about something else before. I just remembered.
So, okay.
Yeah, something separate. Unbiased Trader was also saying, Dirk, but can you trade options as normal for day-to-day? Also good if you're right most of the time, but get stopped with long options. Your stop is premium, so you get another chance if not closed. No?
Yes. Absolutely. So I don't use it as a day trading instrument. For me, I usually trade options that are 3 months before the expiry. Why? Because if they are out of the money, or even if they are in the money, the premium you pay for volatility gets like, what's the opposite of, sometimes I'm missing really the English math words. Exponential, the opposite of exponential. So it doesn't go like to the upside, it goes like to the downside.
Oh,
like nearing
like
in a speeding up way zero, so to say. And
I don't know I don't even know what the exact I don't know, you just say approaching zero?
Yeah. Like exponential is something like this, and I mean the opposite of, so something like this.
Dude, that's actually something I've never thought of. What is the opposite of exponential in English? And I think we just say approaching zero, or at least that's a math thing, obviously.
Something like this. and this happens usually 3 months before option expiry. So I want to capitalize on this as an option writer. And I agree with you. Like, if you just look at the paper, people will say but with if you buy an option, your upside potential is limitless, and you are just limited to the risk of your capital invested in this option. But the design of the option is skewed against you because of volatility, or the price you pay for implied volatility approaching zero. But you have to be very, very precise and dedicated and to your risk management, because otherwise this potential unlimited loss you can have when writing options is of course going to eat you up alive. And I've seen that. Really, maybe I shouldn't say that, but I've seen some very rich people losing hundreds of millions of dollars trying to play the writing option games and not thinking about the risk side of it. As sad as it is.
Yeah. So exponential, it's just exponential decline.
Yeah, thank you.
Or decay.
Exponential decay, yeah.
That's what I was saying. I'm like pretty sure there's not like a...
Actually, yeah,
Normally when
volatility
people-
decay, you say, yeah.
In general, people talk about exponential being positive in general. So I think that's why I've never thought about it.
Exactly,
But I
yeah.
was like, hey, what is the negative about just decay? Yeah, there you go. Decay, decline, that kind of thing. Yeah.
Negative,
That's interesting.
exponential,
Yeah.
decay to zero.
Yeah, it's just negative.
Exponential decay to zero, yeah. Exactly. But again,
But there's
guys,
not- there's
it's
not a
like
special
very
word.
specialized. We could go on hours and hours and hours about just how to not even set up your strategy, but how to manage your risk with options. Because this is the key point, really. Trading options, in my opinion, at least the way I do it, it's not about, I need to pinpoint now where the price reversal is. It's really about managing the risk.
Indeed. I'm just trying to see headlines. So we did have Iranian embassy saying Trump backs down from attacking energy infrastructure after Iran's firm warning. So I guess they do seem to be echoing that news. We did have some other questions around like why the drop, that kind of thing, from a couple of you guys.
What drop?
What drop? Yeah. I think talking about oil and some other bits and pieces. There's another from one of you guys as far as why no news today. I can't find it. But yeah, there hasn't been headline news.
Yeah.
Here we are. Yeah. But we do have. Sorry, there hasn't been fundamental data news, but we do have headline news. So, for any of you guys wondering where to find this, one of the best places is financialjuice.com. Right? It'll give you updated headline news. It'll pull in stuff. You can look at bonds, commodities, crypto, equities, FX, indices, macro, market moving stuff, risk, headlines, everything. Right? So it also has a economic calendar on the left-hand panel as well for your yellow folder, orange folder, red folder news, major events for the fundamental sort of data coming through. But yeah, this will have all the headlines that you guys might be missing. So when we get Trump tweeting, or Iran has done something, or someone has hit another tanker, or whatever's happened, that will come through there pretty quickly. They do also have like a squawk element as well, which will play it through headphones. And to have it on the second, you have to pay premium. But the free version will basically be like 10-15 seconds delayed. Right, so it's not too bad. So if you guys are wondering, financialjuice.com. So it'll look like basically like this. So that's the one up there. And then you'll see all of these coming through, and you can see these headlines as they roll in. And then they often as well post the charts and what headline led to that move. And then you can link out here. There's a little link out which goes out to like sources, or you can copy and paste those bits and pieces. And they'll post, any of the Fed meetings. There's often bits and pieces like this, like currency strength scores when we come into London and things like that. A whole bunch of stuff. And you get all the minor little bits said from, Japan, New Zealand, everything. And basically at the top, you can go up here and like curate that with the options and select exactly what you want. So you've got stuff from Benzinga, Bloomberg, Sicyon, CNBC, CoinDesk, Daily FX, Der Spiegel. Is that how you say it, Dirk?
Which one?
Der Spiegel.
Der Spiegel. The
Der
Mirror.
Spiegel. Yeah. ET Markets, Finance, you can see Federal Reserve, Forbes, everything, FX Street, blah, blah, blah. This is basically what it combines, Yahoo Finance, Wall Street Journal, all this kind of stuff, all in one. Reuters, everything. So, very good website for you guys to use if you're looking for live, real-time news flow. So yeah, like you can see right now, we're seeing this stuff coming through. So that's backing up what Trump said. And you can see in the past while, after that dip, we've kept rising up. And you'll get little summaries like this. Sorry about that, guys. Summaries like that coming through as well, for you guys to get a bit of a catch-up throughout the day. So yeah, very powerful utility.
I'm trying to sign up for it right now, but it says I already have an account. Seems like
I feel like you might have, because I've definitely mentioned it in the past. So you might have
probably
signed
it's
up.
one
I
of
had
the
that
things
same-
I signed up for after you mentioned it, and then I
I had the same problem trying to put it on my phone, and I was like, pretty sure that's my sign-in, and it just wouldn't let me come in. But
Anyway,
eventually I did get it right, so
I look at it later and then probably forget about it and come back in a half year with the same problem.
but yeah, so is it free? Yes, it is free. So to use what I was just showing you guys, that is free. There is a premium version which has other stuff. You'll see up in the corner it says Go Elite. It's probably reasonably expensive for most of you guys. I think how much does it cost now? I forget. Annual I think is, yes, it was something like 2K US. So it is somewhat expensive, but I think they've adjusted the prices. They often have kind of like TradingView, where they have certain periods where you get they had a thing for like lifetime access before for $150.
Oh man.
For everything. So
The thing is, these APIs to the good news outlets where you really want to get the real time
Expensive.
things, it's really expensive. I tried to build something like this myself once, and I was like, okay, the API costs are like crazy for this. Maybe I can find something, where I pay a fraction of a price. Well, $150 for lifetime for something like this is.
that's what I was going to say. I don't think they're doing the lifetime thing for that much anymore.
No, you do that
I
as
think
a
it's
brand
big
normally
now.
when you just
Yeah.
start, to get this first batch of customers in.
Yeah. So this is what I've been using for the past while to get all the updated stuff on Trump. Any time he tweets, everything comes up through there, through whatever channel, whether it's X, Truth Social, White House tweet, he spoke at a interview or anything, it'll come through. Because like I've tried putting together my own combination of outlets, but it's very difficult.
Yeah.
There's so many avenues that people can talk through. So that's definitely the best place I've found. But yeah, I'll consider the elite thing later. I'll have to have another look.
I'm trying to sign up now, and it says I cannot because I'm a robot. I'm really manually typing it in here. It says no, you're a robot when I try to.
I found that. Yeah, I found that so many times recently through even just using a VPN, even though your activity is normal, right?
Yeah.
It'll just auto robot. I think that's
yeah. You know why that is on the technical levels? It's usually with those captchas where you don't have to select things, where you just click, I'm not a robot, and behind the curtain, your browser, so to say, needs to solve a proof of work puzzle. And if they don't integrate this for the browser of your choice, or they do it in a sloppy way, then you get this type of message. It's like one of those things that was supposed to make things more comfortable and automate things, but ended up like hindering potential paying customers from using your product.
Yeah, it's very annoying. Exactly, because often then I'm just like, all right, close. Like,
yeah, of course, yeah. You never go back.
I'm not going to bother with this.
If I even cannot sign up, how's the product going to be?
Yeah.
Volatility normalizing a bit.
Yeah, how about pound? Look, pound, euro dollar, Aussie dollar, dollar yen, everything right now, it's all in the same boat. Literally moving synchronously, correlations to 1 just at the minute. Even with like the NASDAQ, everything, stocks, everything to 1. So they're all going the same direction. The thing will be at what certain assets find kind of a bite point. Obviously, we had this gap today from the NASDAQ from Friday. Gap down here into Monday. We've traded down lower. This is the options level from today. We're definitely punched right through that now. And we've come up to this, some of this sort of prior activity up here. I think NASDAQ is a bit no man's land. It's nothing significant, but we did hit these top levels that were capping us for some time through here. So basically punched through that, now come off. The euro, pretty similar. We've come up and met those same highs through there. So just a touch above last week's highs. Pulled back, I would say now, the prior high from Monday here, just towards the open of London, would be my tops I'd be looking at. After the recent dip, it's very much like an NFP day where you get that massive spike higher, you go all the way up, come back through, crush through the 200, the 100, get towards the 50 on, say, the lower time frames, like the 5 minute. Then you pull back up, start coming up through, normally about to 75-80% of the top of the move, pull back again, and then the next test is if this can hold and keep going up, or we start running right the back down. Right? So this key level now, we got the 15 minute as well, 200 climbing, 50's come down, 100 has sort of come down. They're sort of moving in sync at this point. That would be my crux level for this to hold over the next hour, 2 hours right now. It's about
I think when New York
45.
comes in later, it's going to be also a bit like shaping
we need to see
for the rest of the session,
Yeah, I mean, what's the time in New York now? Like, it must be AM.
Yeah, it still is. I think it's like
Yeah, what's the
8 or what is it now? We still at summertime, They changed already. We're changing in Europe next week, I think. Next weekend.
So it's 8 in the morning for Trump. We need to see him come out later on TV or
He's
whatever.
Having his breakfast egg McMuffin right now.
And a round of golf.
And a Diet Coke.
Yep. And then once it comes out through that, like obviously see how he goes through there. I think as well, there's always the tells, like when you watch body language, enunciation, that kind of thing, with just how, where he actually is, whether this is solid and he's confident, or he's kind of like, oh yeah, this is another thing, and he's trying to just massage the headlines, you know. So we did have Iran coming through and saying like, yep, they're sort of confirming it. So we'll see.
Here we go, unbiased trader. You are very much welcome for the reminder. If you don't need it anymore, you know, I'll happily take it off your shoulders.
You might have. We've been, unbiased trader. Like I've mentioned it a few times in the past. We were using it for ABL as well.
Yeah.
So there might be some of you guys that did sign up and then forgot. But yeah, it's great. First thing when I open my computer, I open my trading charts, platforms, all that kind of stuff. Open up Financial Juice and Bloomberg, and then start the day. So, yeah. Gold-wise, however, so this is the 15. Basically come up to these prior tops, which are about the peak activity through Asia today. So this is where, just like when we get London open and New York open, for Asia, that's about 10 o'clock my time. So through here, you got the dump first, then the pickup. Starts to calm down initially at about 11:30. We get somewhat continuation through there of whatever established move that we've had. And by midday, around this period, about 1 to 2 p.m., very much calmed down. Then we had further headlines, some other stuff coming through. We got that massive dump. So right now we've come up to the peak liquidity position of Asia. Basically met that, plus those prior lows from Friday. So you guys can see this will say like Saturday, Monday for me. But that's obviously Australia. So Friday for me rolls over into Saturday. So this is the gap that we had. So we basically hit that the top of that gap once again. And similarly, I would say these prior portions, sort of dividing the lower cluster of that trading range and the higher cluster, that'll be my main point of control, to see that we actually hold that and then go higher or not. Trouble is, none of it's technical. It's all headline driven right now. So if you guys want to trade this volatility, I would say go down to the 1 minute, 5 minute, and basically play it from like moving average to moving average overall. Just like NFP. If you guys have traded NFP, like in the post aftermath of NFP, that's how you want to do it.
Sorry, had to leave. Let the lunch guy deliver my lunch.
No, it's all right. That's all good. Unbiased trader saying Iran says no talks held.
But they just
Yeah, they haven't had any
confirmed
talks
it.
yet. Trump said earlier that they still have to have talks, but they've got like they've had like a call like, yep, let's have a ceasefire, send an email type thing. They haven't had talks yet. So that's different to communication. They haven't had a sit down little discussion on the couch. They'll be friends, you know. Right now it's just like, okay, let's chill out. This is getting kind of bad. So yeah, that doesn't mean it didn't happen. Like Trump said that before he announced the other portions as well. He said we haven't had talks, but this is the general agreement across the way.
basically really to calm down markets, I think, a bit.
Yeah.
Because it's unusual for him, no, at this time that he already shares stuff.
And the time that it is, China is still awake.
Correct.
So I wonder whether China went the nod like, hey, Iran, you need to chill out and just at least come to some kind of calm for now. And then we'll see where we go. You know?
Xi Jinping calling him, "Ni xiao!" Crazy.
Stop it! Stop it now! Terrible. But yeah, guys. So hopefully, you guys didn't get crushed. Hopefully, no one was running empty, naked trade on that. Naked
That's my
stock.
concern as well, that there were maybe margin calls. I mean, on the way down there for sure were, because otherwise we wouldn't have seen this type of volatility. But in gold, I'm talking other assets as well, but most
Definitely.
prominently at gold, because that's like one of the favorite assets of the traders here at the Fivers. And if you got
I
crushed by this, don't beat yourself up about it. Tell yourself, it's like, one of those lessons you sometimes have in life and luckily it happened on an account where the account balance did not equal your investment into the account. And so that is, I think, kind of comforting, but let it also be a lesson in risk management.
Yeah, I'll say even myself, when I do scalp, right? Like often I scalp somewhat similar to Saul in a certain way where I won't run a stop. It'll just be, be watching the charts, layering in positions, and then manage them from there. But even these days, given the current climate, regardless, I'll just put a stop in. Because you can get a headline and just blow out. So, please do use stops, honestly, regardless. You need it.
That's the thing, if you're a beginner, use stops, not trading with stops, but layering into positions, layering out of positions. It's not something I'd recommend to you if you are still in the beginning of your trading journey.
Yeah, exactly.
Welcome back.
Use stops.
Richard and Wilhelm, welcome back.
Well, hello there.
Hello.
Hello.
Did you guys catch
Man.
rocket?
It's been one of the most amazing trading days of this year for me.
Yes.
Is that
I
sarcasm?
remember
on,
you mentioned you were in a gold buy this morning, weren't you, Dirk?
No, I was stop out of the one I was in earlier, but I bought.
Yeah.
Then again, when we touched the minus
4 Sigma.
4 Sigma, which
I
was
remember that.
down here, and I didn't trade this on a 5S account, I have to admit, but I risked 10,000K on this trade. So I'm obviously happy. That was a very good entry.
Hang on, Dirk. You said 10,000K.
Sorry, 10K. 10,000K. That would have
10,000K
been
is
like 2% of my account balance. No, just kidding.
2%.
10K, of course.
That would have been great. 10,000K. Yeah,
Man.
nice. Dude, do you want to? Do we want to go on holiday or do you want to pay for it all? You wanna come on?
I'm going on retirement.
Yeah, retirement.
And when I'm going to point at you and laugh from my villa up in the skies, peasants, take this.
Wait, hang on. Did we all disappear?
Yeah.
Can you guys see
What's
Rich?
going on here?
Why is Rich just massive?
Rich's
Yeah.
ego just inflated suddenly.
What happened?
It's just me, Will, and Dirk. We're going on holiday, and Rich is going to be left here. That's
Yeah, exactly.
it.
Yeah.
We're taking Dirk is retiring, and he's taking us on a holiday for a bit. So there you go.
Where we go? Oh,
There
we're
we
back.
go.
Here we go.
There we are.
Where are we all going, Dirk? We can take us Bahamas.
Where do you want to
or-
go? The world is open.
Can we go to Mars?
Ah, damn it.
The one place I
But the one
did not
place
intend to go.
I don't want to go because we have to, take Elon Musk with us.
Fair.
There's a TV show
Oh, dude.
called Love,
Yeah.
Death, Robots.
Oh, I
It
love
has
it.
an episode
Yeah.
that has an episode of how cats went to populate Mars.
Yeah.
And
The ending.
yes, and then at the end, it's Elon Musk sipping
not
on a
Elon Musk.
martini. Well, it's the cat version of Elon
But
Musk.
he says like, whom did you expect, Elon Musk?
Yeah,
I feel like I need to watch this now. Like I've
Yeah, I was
said
just thinking
before,
of
like
that.
I've heard it's good.
It's
And
really good.
We've mentioned
Especially
it
the
a
first
number of
season.
times, and other
What's it
people
called?
have as well.
Love,
Yeah.
Death, and Robots.
yeah, it's really
Yeah.
good. Love, Death, Robots. Watch it. It's really good. It's short. Each episode is a short animated, different animated styles as well of animation. And then there's another one called Secret Level, which is on Amazon, I think.
Yeah.
Amazon Prime. And it's also animation, but it's well-known games. Like, for argument's sake, Warhammer 40k. So they have
I
an
saw that.
animation of that. So yeah, those are all also pretty good.
That's good. All right, I'll have
Yeah.
to check it out then.
Yeah, do whenever you get time, mate. Watch it. It's pretty good.
All right, guys, I'm going to catch my lunch now, and then I'm going to see you guys again on Wednesday. Hopefully in a world that is still as risk on as we are leaving the session.
Yeah, we'll update on Wednesday, Dirk, and we'll see where this current spurt plays out, and then we'll get the text and the new macro kind of position where we are
Exactly.
overall. Interesting. I'm very keen. This is good. I'm liking this. So
It's a good kickoff for the rest of
Yeah.
the week. Yeah, really.
yes.
I don't think that this is going to continue like this.
Can you just not spoil the party for once, Richard?
come on.
I think this is going to push down ever so slightly, and then maybe come back down to somewhere over here, and then decide if it actually still wants to do this. This oof. Would have loved to have been in it, but I like volatility, but this is a no-no.
It was a bit a game of
It's
luck.
beautiful.
I mean, yeah.
Yeah. I could just as easily have been trying to sell this. And
Yeah.
then it would have been a nightmare. You would have been slipped so bad. I'm getting like flashbacks of a UJ trade that slipped because of Trump's first tariff announcement that he made. I was selling UJ, and then UJ just to the moon.
But, like,
and I was just
This is like what we were saying before. Like, this is where the macro thing comes in. So we're pretty much come into this week fully pricing downside and further escalation, and everyone
Yeah.
expecting more deterioration. So where's the trade? The trade, as far as risk reward, is the reverse, and then you get those
Yes.
pumps, and that's where the macro
that's-
thing meets technicals.
Yeah.
That's beautiful.
That's all good and well.
lived
Do
it.
you have the cojones of this size willing to go and buy, well, unless you're Dirk, buy gold right now, not knowing this information?
Yeah, that's why we're both smiling. We're like, yeah, this is great. This is good.
This
Are
is
you
one
also
of
a
these
gold trader?
days, I said it earlier,
How's it?
where all the pain and suffering that you go through as a trader finally pays off. One of those
Yeah.
rare days where you go home and you think like, yeah, this is why I'm doing it, man.
Yeah. Precisely.
Yeah, and then you get people
So
like Shahrukh that unfortunately loses their accounts because of this. So it's
Swings and roundabouts.
Sorry,
Swings and
guys. We
roundabouts,
don't.
mate.
Yeah. Sorry,
We don't
sorry,
mean to
sorry.
celebrate in that kind of
Yeah.
yeah.
All right,
Um,
Dirk, you go and enjoy your lunchable
I will.
and your $10,000 trade that is now currently in profit.
Exactly. It's all on paper right now. So come back,
holding
guys, and see me crying on Wednesday.
Where price just goes. on gold.
Anyways, take care, everybody, and yeah, see you on Wednesday.
Have a good day, Dirk.
Bye bye.
Have a good one, man.
See you guys later.
Yeah.
Or see you, Dirk, later. I'm not going yet. I'll hang around for a bit. Yeah, no, I'm gonna jump up for 1 minute. I just gotta put the. I've got washing, so I gotta put it in the dryer. They'll come back. I'll be here for a bit.
He's got to go
So,
stuff
give me
all
1
those, all those dollars into that bag, into under his
Yeah,
mattress.
I was waiting if one of you guys would get
Laundered.
that. Yeah, that was,
Laundered. Also,
that was the point.
we'll see you in a minute, mate.
Alright, I'll be back in a sec.
Sweet.
This comment from Judza is exactly like that's what happened to me. I was in 1K on UJ on a long from 3 hours ago, only to watch it hit my 1,500 stop loss in 1 second. Yeah, and the worst thing is, it closed quite a bit lower than what your stop loss was. You would most certainly have been slipped.
Slipped on that, yeah, definitely. Dude,
Most
that
certainly.
sucks, man. Yeah, that sucks. I was looking at my chart and I realized that my EU trade had done what it did when I wanted it to do what it did, then I would have been positively slipped in a fantastic way.
Where was your stop loss?
Just below the Tokyo low.
You would have been knocked out in anyway.
I was knocked out ages ago, and I would have been continuously knocked out for quite some time.
Yeah, it would have knocked you out for quite a while, and they taken all of that back.
Yeah, literally.
Yeah.
But look,
mate,
Joe, I
it's one of those
do
days.
like. Yeah, literally. You know, like, when I see price move like this, I'm like, you know what? Not too mad about it. You know, it's like,
Okay.
uh,
Okay.
sucks, of course, but
I was having a
Sure.
look at 1 minute, and I was like, if this move that we had here really wanted to continue, we probably would have seen somewhere around here price actually just start pushing up. We just didn't. That impulsive move, that impulsive move ended up being just, I don't know. I think there's maybe some people that try to buy and try and push this price up now. They're kind of sad as well.
yeah,
moves
you
like
imagine
this-
all those FOMO buyers.
To me, is a no-go. Just absolutely no-go.
Yeah, screw that.
I
man.
don't.
No.
Yeah, I don't trade. I want to mention something. I don't know if it is my PC, my internet, or what, but our platform, the one that we use to stream, is struggling, and I feel like every now and then I'm like stuck, and then whatever movement I do here
that's fine.
pauses.
Yeah, you are.
No.
I thought it may be me. Because I was about to wait for a few more freezes, and I was going to make a pretty similar announcement. But it's you. Okay, that's fine. If it's you, that's fine then.
Yeah, no, it's me. I think it's the platform.
Yeah,
It's either that or it's my internet. Not entirely sure if I'm getting packet loss. Actually, let me do a speed test quickly.
Speed run. So I've just seen one of the comments now. Waiting for the next tweet. JK, the war is back on. Hashtag gotcha.
Haha.
Yeah.
Psych.
You thought. Oh man. Yeah, so let me know if anyone actually did catch that. I didn't. I could have on gold, however. I'll just bring my chart up real quick. This was quite interesting, guys. I was looking at this on gold, and then I bought here, being the break and close above, sold here because I thought, nah, screw it. And then if you had the break and retest, you got the break close, retest, you would have been a bit nervous, I'll be honest, but you could have made this work. You know, you got the break and retest here. As I said, stop was at the low of the consolidation. You could have been targeting this area here as a 1 to 1.5, the equilibrium here, the highs for a 1 to 2, or the highs just up here, and you had two areas. You had the lower the high for a 3, or the higher the high for a 3.5 R trade. Would have actually been quite a nice trade, and that would have worked. But truth be told, like, would you really have the guts to hold if that happened? But I mean, yeah, look, you know, set and forget and that. So had you have entered this trade through a set and forget strategy, dude, you would have been like, oh shit, you know, you would have gotten a notification on your phone and like sprinted like flash to the charts. But you would have been pleasantly surprised. But yeah, you gotta be so careful. And this is what I mean, man. You gotta be so careful trading on times like now.
Well, I'm going to restart my stream. It's not my internet. I think it might just be the platform itself. So
Yeah,
I'm going to log into a different browser and then try again. So see you in 2 minutes or so.
Dim problem, my friend. Awesome stuff. Ciao for now. Meanwhile, I'm gonna enjoy my black coffee with a splash of honey. Although I think I put too much honey in, it's a bit sweet. Ugh. Anyway, yeah. So let me know who actually caught this, dude. Mike or Miko FX. Awesome stuff. I was buying gold, got a nice surprise. Now going on holiday with Dirk, dude. That's super cool, man. Let me know where you were buying from. Give me your coordinates and I'll place it on the chart. But dude, that's absolutely sick. I'm assuming you've closed now. You're not holding still. But mate, that's mega. Well done. Big congratulations to you. To those of you who lost accounts, dude, just how the cookie crumbles, man. Just share out of luck. You know, it's that's the thing when you have, you know, geopolitical turmoil like this. You know, wars breaking out, presidencies. You know, so like if like new presidents coming in, like Trump last year was very volatile beginning of last year. So you know, there's going to be times where, you know, it's a little bit more difficult to trade when it comes to the fundamentals. That is why fundamentals are important. I'm not a fundamentalist. I'm not like LJ and Dirk. They are absolute legends. I'm not quite like them, where I can't analyze and predict the way that the fundamental markets are going. So but I do know enough about my fundamentals that when certain things happen, I step away and I'm like, you know what? This is a good time to say no, thank you, dim diolch. So today was one of those occasions. You know, I got stopped out on EU and I thought, you know what? It's just clearly price action isn't doing what I want it to be doing, and for that reason, I'm out. I was done for the day. Oof. Oof. US 30 blew my $1,000 whilst in a sell position. Oh, dude, that's unlucky, man. Was it $1,000 stop loss, as in like maybe a 50k account, 100k account? You know, was it a funded $1,000 stop loss, or are you talking like $1,000 personal account? Because, ouch.
Yeah, dude, days like this can be brutal. If you are like Dirk and you're on the correct side of it, then yes, that's great. But like,
yeah,
some days, this is like the kind of event that make people really question whether or not trading is for them. You know, 100%.
You've got to be so careful with trading, and this is what we mean, guys. You know, like, you've just seen guys in chat blow their account, guys in chat, you know, go on holiday with Dirk because they've been on the right side of it. You've seen the stream, the guys behind in the stream, you know, they've, you know, profited from it. They've done well. Myself and Rich, you know, we've not participated. I took a stop earlier. You know, there's so many varieties and different outcomes in streaming. You must be so careful and take this seriously. And yeah, guys, look, I'll be honest, there's been occasions like what happened today, except I wasn't on the right side of it. I've blown accounts, I've lost money. And I've seriously questioned whether I should be a trader or not. I've seriously questioned. I've been like, dude, I don't know. I'm like, what am I doing? Am I really in the right industry here? You know, especially when you have external factors around you, like, you know, your parents may be negative towards it, your family members may be negative towards it, you know, your partner, your friends, your whoever, you know, you may also have self-doubt. And then when you have self-doubt and you have negative reinforcements around you, and then something like this happens today, it can be super tough. Super tough.
Yeah, it's the cherry on top, mate. It's the cherry.
Yeah.
It's that just like the last nail in that coffin, or at least that's how it feels. Like it's just it's usually like an
100%.
overbearing experience, mate.
Yeah, so you know it happens, but guys, you will recover. Like let's assume it's a $100,000 account. You know, $100,000 account, $500. You got a new account. You know, and this is the luxury about prop firms, and this is the luxury about what we do at the Fivers. $500, and you've got $100,000 to play with. You know, so this happens, and then boom, you lose 500 quid. Sucks. No one wants to lose 500 quid, but I've known boys to blow 500 quid on a night out before. You know, so sometimes it's about, you know, working out what that £500 can do to you, and do for you, sorry, or do to you. You know, you got both ends, and then just think, wow, instead of actually having, you know, $100,000 of my own personal hard-earned money into an account, and you lose like 10-15 grand of it, instead what's happened is you've lost 500 quid. You can replace it. It's not the end of the world. You're not going to struggle for the rest of your life for losing a $100,000 funded account or even challenge account, you know. So just remember, everything is perspective related, and you can pull through the other end of it. Like, rock bottom is a good place to be sometimes, you know. Like, sometimes you hit rock bottom and it teaches you a lot of lessons. Not saying that, you know, rock bottom's good. It's not. No one wants to hit rock bottom, but sometimes it does teach you, and there's a lot of lessons at the bottom. However, losing a funded account to stupid price action like this isn't rock bottom. It's not the end of the world. It's just price. It's just trading. It's just the game. You know, be strong enough, and this is why risk management is so important. Be strong enough in your strategy and your risk management that you know that if something like this happens, you will recover.
I love this. I will recover it no matter what. How I manage to get it, I will use the same strategy to get it back. I know it won't be easy, but it is possible. That's the right mindset, mate. That is the right mindset.
Absolute perfection.
Yeah. No, that's really good.
Yeah, perfection.
Primal Light saying, are you in that buy, Rich? This is Will's screen, so this is Will's marked up trade. But yeah, I'm not in anything at the moment. I was in a NASDAQ sell this morning, which I took 1.5% profit on, and since then I'm done for today. This move that we had now on NASDAQ has kind of like got me like, okay. Yeah, let's not give back what we've made today.
And that is also a very smart move. So, no, where am I? So there you go. So this is what I was potentially looking at this morning. Break and retest of this consolidation here. Entry here. You know, break and close above. Continuation. Looking at potential point of reversal and, excuse me, the previous highs as well. So there's lots of reasons how you could have gotten in on this trade. This is the only trade that I saw today. Had I have taken it and held through an analysis, would have been the only trade that hit TP. Had I have taken GU, let's say I took GU here, stop loss at the low, TP at the high, 1 to 1.7. I would have hit stop loss before TP. Euro I actually did take, and I hit stop loss. Then it hit TP at a 3R. Could have been a beautiful 3R trade. It just didn't happen. Gold, I didn't take. Well, I did, but I can't be able to go back into that again. I over-risked, and then it was a low probability, high-risk trade, and I just thought, what am I doing? This is garbage. So I took out. Had I have gotten in on the retest, though, that was just a break and close straight up entry, like market order. Had I gotten in on the retest, yes, I could have gotten out with a beautiful 1.5% if I was risking half an hour. Or technically, no, 2% because it's 3.5 hour. I would have taken out about 2%, so that would have been quite nice. But that's the only trade that we would have taken. So we would have lost 1% today and taken 2%, being up a net of 2%. 1%. Had I have taken every single trade that I would have potentially seen as valid today. However, took a bit of a loss, lost about 0.2%. So I'm still pretty happy with the fact that it's only 0.2% I lost.
Yeah, dude, no, that's really good. Here's a question from Bahar saying, question, hey mates, does it count this trade that I have been in while we have this spike, even though we did not have any news, almost past the first phase? So if you are referring to the high stakes 2-minute red folder news, let's call it limitation or restriction, no, this does not count. That red folder news only counts if it was planned news, predetermined news. If it is a tweet, or it was unexpected, or it was tentative, then it doesn't matter. Then it's not a problem. So I'll show you on the calendar for today. There was I should probably share my screen. There was no red folder news scheduled for today. So it's only the red folder news that's scheduled. My apologies. So if it was scheduled, like this event that's here, tomorrow at 8:30 GMT, if you enter a trade at 08:28, and this trade hits profit while red folder news is going on, then that one won't count. The profits won't count, and the stop loss is going to be it will be a soft breach. So you get a few of those soft breaches before you lose your account. But because this was news, and it was unexpected, well, it was this one, unexpected but not scheduled, no problem, mate. No problem at all. No limitations.
Yes, precisely that.
No talks with Washington.
Dude, I feel like we're going to have this now for the next 2-3 weeks. It's just going to be hectic.
I mean, we've had this for a while now. This tiptoeing, let's put it like that, where everybody's tiptoeing around the market because there's this underlying thought and fear that things are going to suddenly escalate, or that there's suddenly going to be unwarranted volatility, and it's going to push people in opposite direction. And on top of that, not everything has been like moving the way that it was expected. So in that case, I would say it's better to just kind of not try and participate if things are not going your way, or severely reduce your risk.
Yeah, just do all of it. So on the fivers, still on my fivers are open my trades and my.
Oh, you mean on the hub?
Oh, okay, fair. Oh, yeah, dude, that just may take a minute to refresh.
Yeah, that's just there might be a delay between the information between your MetaTrader and the hub itself. No need to worry about that, my friend. Just give it some time, give it an hour, go and leave the hub, go back into the hub and just see if it updates. My trades of this morning have already updated, so it's going to take some time. Yeah. We've got Darth Vader, Doctor Strange, and William.
Darth Vader FX.
What is the point of view on gold and the US30? It's a little bit difficult to say right now. I will have a look at US30.
Yeah, it's literally about to say, honestly.
So, we had unexpected news, this massive, massive candle that we had here. A solid, hey, come now, almost 3% rally off of news. So my sentiment during this morning was this on NASDAQ as well as US30 was the potential for price to try and push lower. If you go on to the daily where we were all the way down here, I expected us to try and test this low over here on US30 and on NASDAQ. We'd already been lower than that. I wanted to get to this area over here to try and push into it and then try and push up. So something like that. That's what I was hoping for. But yeah, the news kind of sank that idea very quickly. Anyway, So the idea was that we were going to continue pushing lower. We also had a little bit of consolidation down over here on 8th of August that I wanted to see whether or not price could get to. And if not there, this area over here, another, like, let's call it area of support/resistance. That's what I thought. That was my idea for US30 and for NAS, to try and push lower. Unfortunately, that's not always how the market moves. So yeah, we've had the nice deep. Oh wow! If this is actually, let's go down to the hourly. We just didn't make it. Maybe it's not all the way.
Yeah, what is annoying is when the markets really don't. You see a perfect trade, like a perfect setup, textbook, and then the market doesn't perform how you anticipate it to, even though it's A plus, triple plus, quadruple plus perfection setup, and the markets still just don't allow you to make that money. That's frustrating. That is really frustrating.
Yeah. So in this case with US30 right now, if I just switch off these two, we had this downward channel. We had a slight bit of consolidation, a break, a retest, and then a re-establishment of the downward trend. The last time we had bullish action was during this upward tick that we had, a volumetric breakthrough. So we're pretty much at this area right now where price has just wicked above. If we get a correction before continuation, I would expect price to potentially come back down again to try and pick up some of all of these orders. Maybe not necessarily in this area over here, but maybe a little bit lower. Just before the news itself started to push the price up higher, I would want to see maybe price come back down here just to retest, maybe potentially pick up some buys, then push up. Because my problem, and I will always refer to this idea, is news events such as this movement is not necessarily where the market's going to be going. Because there was price action down here, and without strong news, price was pushing lower. Suddenly news pushes it up. There's a lot of people trapped down here. There's a lot of liquidity sitting there. This is an impulsive move. An impulsive move generally has a correction. I want to see the correction and then see the next time price tries to push back up again, whether or not it's convicted. That move needs to show it really wants to go in that direction. Right now, this is impulse. Impulsive decisions, sometimes afterwards you sit back and you're like, maybe that wasn't the best decision. And then you see a bit of a push down lower, pick up more orders, and then push up higher. Okay, that was definitely the direction we did want to go in. So don't get trapped, is what I'm going to say. Don't get trapped on the idea that we're going to definitely push bullish because this was a very bullish candle that we had here. Wait for the confirmation that price definitely wants to continue going up. So I would say in that case, we need to start breaking these highs again. So price action needs to start developing, start making higher highs, higher lows again. Without the news, we need to break, close above this point, and then carry on going up. So I would say this is now the waiting game for me.
Yeah, I think if you can somehow find a trade in this, then good luck. Like, congratulations. You know, if there's strategy behind it, good on you, fair play. For me right now, it's like you said, it's a pure waiting game. Like, there's nothing in this I could think about wanting to trade, like, at all.
No. Darth Vader saying in USD, wait for completion of the fair value gap. So the problem is, let's go to USD. How big is your fair value gap? This is on the 5. If I go to the 15, it's slightly less. If I go to the half hour, it's slightly less. The hourly, slightly less. Which fair value gap are we going to wait to completely be?
At what point are you going to refine it down to, you know?
Yeah, because the problem is the 5-minute one is larger than the hourly one right now. That's why I say that the problem with these impulsive moves is where within this whole segment here do you test? At what point do you say? That's why I said I would want to rather wait for price to either come all the way down here to this area of slight consolidation, basically, or so you say on the 1 hour time frame. So the 1 hour time frame, this is a massive fair value gap. I mean, 1.62% fair value gap. $750, so 75,000 points. It's a lot. It's a massive move. So as I was saying, I would rather want to see price find its way all the way down into this zone over here and then reinitiate, not have a move like this one, but rather start showing the propensity to want to carry on pushing up. So when you get to this point, you want to see price slow down significantly and then attempt to try and push up. So you want to see then this kind of like action. It doesn't have to be perfect, but you want to see a general higher high, higher low, just proper price action. Where we are right now, if we do not get any of these moves all the way down and we do start continuing pushing up, I would want to see a clear, concise upward trend that eventually leads in us breaking this high point over here. And realize that this is also quite... This is even larger than the fair value gap that you've had. So there's a lot of price action still to be had in this area over here as well. That's what I'm saying. To me, this has become a no trade day for me.
Yeah, I think it depends where you're gonna put your fair value gap as well. So like, if I just move over to gold, you know, and this is why I hate fair value gaps and why I hate, because it's not fair value gaps that I hate, hence why I don't call them fair value gaps. I call them imbalances because it's an imbalance in price. But I hate what's been stigmatized around them, and there's so many different ways to trade them. So, for example, you know, you've obviously got this low here, which is where we're going to be putting the fair value gap low. Where do you put the higher the fair value gap? You know, where are you going to draw it from here? Because in theory, according to most, I believe, would say between here and here are the points of a fair value gap. But then others may count this pullback here, and then this is a retest. Although if you're coming in late to the game, this is a fair value gap, and this is a retest. And that's what I hate about fair value gaps, and that's what I hate about, having one confluence, because having one confluence puts holes in a strategy. Like, to me, yes, this is a baseline, basic fair value gap, but I'm with you. I would have drawn a fair value gap like this, because that's what's left to fill. That's what's left to balance. However, when people say, "Oh, I'd like to see a 50% balance of the move," okay, well, if you want a 50% balance of the move, you need to go from bottom to top of the move. Because a lot of people will actually go, and place it from here to here and go, "Oh yeah, I want 50% of the move." Well, let's get a fib up for a start and go from the moves. And here's another one. When it comes to fib retracements, where do you place the fib retracement? Are you going to go from the candle, or are you going to go from the swing low, swing high? I like to go from swing low, swing high. Then you've got the debate: do you use the wicks or the bodies? If you're going to use the wicks, then depends on rejection, depends on how high price comes. You may get a completely different to where you get the body close from. So you've got to ask yourself these things when it comes to building a confluence and building a strategy. Do not divert from them. I use bodies. I don't use wicks. I keep that very consistent. Otherwise, it'll just throw off my results completely. So there you go. Now you've got two areas of confluence stacking now. And like I said, I would draw from here and here, because I'm coming late into the game. Then I put a move on with a fib, and it brings me to here, which marries up perfectly with the golden zone. And then I put the equilibrium on, and then boom, you've got a potential entry criteria for buys. You've got a potential golden zone, which is like a 60 to 7-1 fib fill, which comes back into your imbalanced fair value gap. However, if you want to see a minimum of a 50% fill of the whole move, then you need to go to the fib retracement. Bugger off. There you go. You need to go to the fib retracement, you need to go to the whole move, and then you need to find your 50% fill, and boom, go to the 50% fill of the low, swing low, to the swing point of that whole move. You can see it has been tested already. So those who come in and go, "Oh yes, there's a fair value gap here, I'm going to put it from, I don't know, wick high to wick low and have the gap, I want a 50% fill of the move." Well, the 50% fill of the move has actually already happened. So what do you want? Do you want 50% fill of the remaining gap, or 50% fill of the move? And, this is where consistency in trading comes, because I've seen this so often where consistency in trading lacks and the results vary drastically. So when it comes to large moves like what has just happened, your best bet is to completely sit on your hands, join the live stream, and let's have a bit of banter, because that's the only productive thing you're going to be able to do right now. Because, or unless you have a very highly volatile volumes, fundamentals, and you understand what's actually breaking down right now. But as far as technical terms, in my eyes, I couldn't possibly trade this.
Yeah, I think it's going to be to each their own, let's rather say. If you have a strategy that relies on this kind of like stuff, then by all means, please don't let us stop you from trading. But for myself, I have zero edge when it comes to like massive moves like this. It's too volatile. I want directional moves, yes, but I want them to be within a very specific way. So I want a very mild, let's put it like that, volatility. So in this case, I'm happy with the win that I had earlier, so I'm going to sit out.
Yeah.
Primal Light saying it's from the previous high to the previous low, so previous candle high to the. So it's a three candle pattern.
Yeah.
Generally.
But you've got here a prior high to a new low. So your ideology of a fair value gap would be previous high, which we're on about the wick high. Let's just clarify that. So I'm assuming. So previous high to new low. Now, there are so many people out there that will aggressively argue, because I've seen it. I've been at events where I've watched people talking, and this is why I don't talk about strategy at events. I watch people aggressively argue with each other, saying, this is the correct way. And then other people have said, this is the correct way. And like you just hit the nail on the head earlier, Rich, it is all down to the trader.
Yeah, but okay, in this case, I think it's a 3 candle pattern. And I think where your new low is, I think that is way past 3 candles. So I think...
So you're
in this case...
Yeah.
I know I'm going with... I don't trade fair value gaps. However, I would say, like, if the original idea was that a fair value gap was an imbalance between 3 candles or an imbalance in a momentous move, then it would be the latter. If it is like yours, where it's pulled back, that to me is just a pullback.
And this is what sparks the whole debate.
But I mean, like, here's the question then. Here's the question. If it's open to interpretation, and it's you can decide how many candles you want before it's considered a fair value gap, at what point, where do you draw the line? At what point do you say these are too many candles, it's now no longer an imbalance? If you're going with the secondary option. If you're going with the first option, it's literally just a 3 candle pattern. Candle 1, candle 2, candle 3. The high of candle 1, the low of candle 2 must leave a gap in high of candle 1, the low of candle 3 must leave a gap in candle 2. That's like, that kind of like thing. To me, this is just a pullback. It's creating a bit of a flag. We had a momentous move. I want to confirm, let's rather say, that this is definitely the direction that we want to go. And to me, price action is king. So I want to see price start pushing higher, making higher highs. I mean, imagine this. You're in a gold trade right now, or you see gold absolutely rallying because of a news event, a sudden news event. And then when market really wants to start pushing price up, you're not going to be too worried about how large the candle was of the news event, because you're like, well, this is now the new direction. We want to go bullish. So you want to buy, and then you're going to just enter regardless. So the size of the candle doesn't matter to me the moment price action is established. In this case, impulse to me is not price action. So I can't trade that.
Yeah, literally that. Primarily interesting. I use wicks as it seems to be more accurate than bodies when I do fib for gold, on gold, for example. Bosh. Rest my. I don't really use fibs on gold, to be fair, so I can't really comment. But mine say the complete opposite. EU, GU, they are my fib strategies, and they show profitability. They show profitability. Don't know why I tripped over that word so much. Yeah, they show higher profitability rate when I use the body closers.
Yeah, for me, it's the full move. So I take candle
Including
high
wick.
to candle low. Yeah.
Yeah, nice.
But I use the same ideological thought pattern for when I look at my bases. I look at the full move in its entirety for that time frame. So in this case, my fib would be all the way down. This is gold, right? Would be all the way down.
Yes.
1240 GMT plus 2, so 1040 GMT. So the last 3 bearish candles and then the bullish move initiates. I would have mine exactly from there all the way to the tippy top. That would be my fib that I would pull. The full move. So you can think of it as one leg, one leg's movement. Wicks and all, the body, the everything. To me, that is what I would be looking at.
Yeah, nice.
And if it doesn't hit my 0.5 or my 0.61, to me it's 0.5 to 0.61 the golden zone. Anywhere in that area, if it starts pushing lower than the 0.718, it starts getting a little bit too deep of a pullback. Then I want to see price slow down and then start pushing up, and then it's also the idea of how volumetric was the movement pushing down again, how big were the candles, how large are the wicks as well, is it convicted? In this case now, gold is busy pushing up. It's already back up above where it was with the move, with the impulsive move. To me, it needs to close and start pushing above. It hasn't closed yet above on the 5 minute as an example. But to me, this kind of like falls in line with what LJ and Dirk were saying earlier, in the sense that if this is really what the market wants, gold is going to start rallying, and that's why Dirk is in his buy. But once again, I think at the end of the day, you have tested something, and you've tested it for years, and you understand. And it's in line with what you want in the market. And there's nothing wrong with that. Your approach is your approach. And your approach itself, you've tested. So you don't need to try and convince other people that this is the right way to do it.
No, exactly.
In this case, this works for you. And that's all there is to it. It's as simple as that.
100%, yeah, 100%. And I used to be the same as you. I used to use my 5 and 6 fill. So this would be my golden zone here, my 0.5 and my 0.6. They'd be my golden zone.
My golden zone, yeah.
But I started finding that price would pull back a little bit too deep in my golden zone before heading up. This would make it a perfect entry zone, but not a golden zone, because it would go deeper than a golden zone more often than not. It would still be a very valid entry criteria, and it'd still be beautiful price action, but it would just wick, and I'd be in a little bit of drawdown before going into TP. What I did find was it was always hitting my 6-1, and every now and then it just drop a tad lower than my 6-1. Any lower than that, and then usually more often than not, the trade sometimes would actually lose, or if not, it would end up being a low probability trade. It'd just mess about a little bit. It would go a bit deep. It would just consolidate and then either hit stop loss or maybe eventually TP. But long story short, it would just do nothingness. It would complicate itself. So I started finding that my golden zone, my optimal zone, was a little bit lower than the 6, or was a little bit lower than the 5. A little bit higher than the 7, but it would fluctuate between the 6-1. Now, yes, sometimes I would get missed when using the 6-1 fib fill. However, what I did do was get those perfect pit price moves. And do you remember when I used to get those sniper entries back London Live Trading Floor? That was with my golden zone. That was with a 6-1 fib fill, and it would more times than not be absolute sniper entry with very minimal drawdown. Now, however, doesn't mean it's less. It doesn't mean it's more valid than other people's trades, because as we all discussed, the markets go in cycles. Now, this is a little bit less valid than the consolidation strategy that I now currently use. Hence why I cannot use this strategy on gold. I cannot use my fib fills on gold. What I can do is identify that it may not be the most optimal in the world, and therefore what I have got to do now is try and find a way to optimize it. So yeah, like you said, it's completely personal, and it's up to the person who's going to gather the most data on that specific criteria. Yeah. And if anything, what we're now proving isn't necessarily the perfect strategy. It's the perfect mindset, the perfect risk management, the perfect tools that you've got to execute any strategy. But what's your thoughts on what's your thoughts on that? What's your thoughts on the whole ideology behind screw the strategy, master the rest?
The strategy is okay. Maybe it's because I view this a little bit differently. To me, the strategy is everything. It is, it's the psychology, it's the backtesting, it's the risk management. That's the whole strategy. That's everything. So for me, in that regard of your question that you just asked now, to me, the strategy is everything. It's everything encompassed into one thing. The specific confluences that you have forms part of the strategy. It's all inclusive. That's how I view it. Primal Light in this case saying, if you set your start at 2451.89 on gold, so that would be this candle. This is 2450.75, which is just roughly $1 away. And then you finish at 4463.18, so 4463.81, which is the high of that candle right over there, gives you a retest at exactly 50%. That is the 50% fill right there at 4357.28. We got a test there, but another test right there. So with this one, there's some differences, obviously. I mean, so 51.89, and then this one at 4463.18. Even with mine, it's still wicked deeper. So the thing is, that's the line itself to me is not the important thing. It's the whole area. But you see, now this is where the differences come in as well. Myself, I would not just use the one candle and say, okay, this is it. It's the absolute top of the movement, which is all the way up over there, and the last time we attempted to start pushing bearishly. So you've been printing higher highs and higher lows the whole of the London session, which is why I'm referring always back to price action. Price action to me is king. In this case, we failed to make a higher high, but we also failed to make a lower low in relation to these two areas. So if this was the high and this is the low, you've kind of like been stuck in it. But this area over here was the absolute last time before price tried to push lower before we had this volumetric push up due to news. So for me, the whole movement, so bullish candle, bullish candle, bullish candle, bullish candle, bullish candle, all of these bullish candles up until we have a retracement. That's the whole move that I will test with a fib as an example. And then based on that, if I just push this across, it comes into, it misses it over here, it misses the trade over there, comes into this whole zone. And the thing is, I would also not just take it blindly and say, well, when it gets to that point right there, I'm going to take my trade. I wait for confirmation. Confirmation for me would be a test and a break. And in this case, I would probably take the trade on this candle right here. So my buy would be somewhere over there. I would probably have my stop loss just below that, and then I would look for a 1 to 2 or something to that regard. The problem is how large of a candle this is in relation to the movement. This is where I'm talking about too much volatility, too much momentum, too much momentum within that move. It's too much. The candle itself is too large. Because just as easy as it makes a candle movement like this, it can make a candle like that all the way down here, as an example. Just as easy. There's too much volatility in this area right now. So even though you might have said that this is a new downward channel, this is just more of a pullback in relation to this whole move that we had here. But yeah, context is going to be different between people because your strategies are different. You're looking at different things. You approach the market differently. You've backtested different things. You know what works for you. To me, we're breaking above that high swing. This pullback that we had here was not even remotely close to the recent low that we've had. So this is the high, that is the low. This is a higher low. We're creating a higher high. We are in a bullish channel. It's as simple as that. That's how I view it.
The more I started simplifying price, the more I started finding higher profitability rate and just understanding the basic order flow of the market.
So in this case, it depends on which data feed you're using. For gold, I use Awanda. It is as close to the 5 versus gold, or at least it was. I don't trade gold anymore, so I don't even have the chart open. But the data feed was as close to, or like close enough, let's rather say.
Yeah.
So that's why I'm saying, for me, that exact point doesn't matter. It's the area, the whole zone. Much like Will always refers to us, it's the zone that you take into consideration.
I was going to say it's the idea behind zoning price, not necessarily pinning price to a specific level.
Yeah, so bottom of the low, like even here, like all of these are still, in my case, part of the current move. Even if I took it there and up to that point and then dragged it across, still the same idea. Still missed, still came into a zone. So that's why more often than not, I use a whole area instead of just a singular line. I use the lines for lower high, lower low, because that's the full swing. But if I want to see whether or not price respects an area, it's a zone. Last low before the bounce up. Yeah, for me, it's this area over here is the last low. Your line is not quite set to the low point. I mean, look, it seems as though we have different opinions. Yeah, it's the low itself to me is the last swing.
Yeah.
So if I were to look at lower lows, lower highs, that kind of like stuff, I'm not going to put a point there and then say, that is now my low, because that is not the swing. The swing to me is down here. So that's how I would mark it. You get what I'm saying.
Yeah, exactly. It's like range points, swing points. All names for a very, very pretty much exactly the same concept. Like you said, it's good to identify zones, because when you identify zones, you give yourself enough time to breathe and identify an area. And if you want to, it also gives the opportunity to refine on a smaller time frame. I'm not saying you may want to do that, but there's the option there. Zones allow you to be a little bit less pissed off with yourself if it doesn't quite go your way. And it's the most brutal way of trying to help people understand why I use zones. Is I have used price points like 3,409.62 bang on, and then I've gone into a bit of drawdown, or I've hit like a 30% drawdown before TP, or it's missed me by a fraction of a pip and it's wound me right up. I'm like, why? This was my price point prediction. I started using zones after I listened to a podcast with an ex-institutional trader, and he talked about how traders like to use exact entry points, and he uses zones. And he said the price isn't always necessarily at a specific point. It may miss data feeds, different reasons for missing the, fluctuation, volatility. There's different reasons why price may not come to your exact pointed area. However, if you use a zone, it allows you just to be that little bit of flexible with yourself. And then if it misses you, you're like, okay, it wasn't going to my point. You know, like I was just wrong. The trade missed me completely, and you have peace with that because it was not at the high or the low of your area of interest for entry. So therefore, the trade was just never yours. Leave it alone. You got missed. Get over it. You know. Whereas when you used when you use the sort of ideology of a zone, you're accepting that price may not come to yeah, we did, bro, we got shafted. You know, you're using the ideology that price may come to a particular area that you can enter from. Like once you get into that area, you're like, okay, now that I'm at this point, somewhere around here price is going to stop, slow down, reverse, continue, whatever. Oh, I was literally about to,
Yeah. So, Raphael, what we had was we did have news. It was a tweet from Sir Donaldus Trumpus.
Donald disappointment.
Donald Trump saying that there's going to be a hold on hostilities in the Middle East. And the moment he tweeted that, this happened. So, yes. Sorry if you got shafted by this one. Unfortunately, my friend, it's one of those things. It's
me and Raphael just got absolutely bummed by the markets there. It's all right, bro. Don't worry, man. There's another day tomorrow. Yeah, man. It's annoying, but just one of those things. You know,
as
some boys lost
the unexpected.
Yeah, exactly. So,
what specific EMA indicator is on your chart? Oh, very simple. I have two ones over here. I have a 50 EMA, which is this green one. But you can also have multiple ones as well. You'll see this purple one that I've just selected now. This one is a 20. It's a 20 EMA. So I generally only use the 50 on the EMA, and then I have a zero lag, quote unquote. It's not zero lag. Nothing is zero lag. In this case, it is just a 20 EMA that has a bit of a cloud. So it has an EMA, and then it has an EMA of that EMA. And it helps me see volatility very quickly without having to go and draw lines. It's just a visual thing. I generally, more often than not, trade like this. So this is generally what my chart looks like when I'm trading. When I'm actually taking a trade or entering a trade, it generally looks like this. But if I am charting or I'm just like watching the chart, this is generally what it looks like. So I use this just as volume. And then on top of that, sometimes this cloud does get respected. As you can see, sometimes you have this bounces off of this bottom portion of the trade, of this EMA. And then because it has a cloud itself, it kind of shows you more momentum. Or if they're close to each other, like over here, you generally have less momentum. So it's like that expansion idea. So visually, to me, it's just appealing. I like it. I like blue. I like the black color. I like the changes of it. I don't use it to trade, though. So it's just a visual thing.
Yeah, I'll tell you what, I'm a bit like you. I like my visuals, except when I'm trading. Like, I've just changed my, what do you call it? Discord colors. So that's now my Discord colors. You can't see it, can you? Yeah, fair. Don't worry. Ignore. I was gonna say I'll drop it like a screenshot or something, but I can't. Basically, I've got like a red and black sort of fade going across my screen. It just feels cool. In fact, guys, if you are in the Discord, I believe you can go onto my Discord username and you'll actually see my color tone. That's the color tone I use for my accounts. There you go. I don't know if can you see that okay? It's like black going into red. I just find it super cool, but when I'm trading, I'm the complete opposite, where I'm just grays, whites, and blacks, super neutral colors. But it's good to have your preference, and it's good to understand what your brain works to. Because if I had that color on my chart, my brain would frazzle. I don't think I could look at the charts. But when I'm on Discord, I'm like, dude, this is pretty cool. I quite like this. You know, so it's good to find what works for you. And this man, to be fair, I think was the first person I met when I started joining my and doing my streaming, who was very similar to me with this. You would like he'd be super specific with what he puts on his chart because that would affect the way he sees the market. And instead of having it all super boring, all super exciting for some gimmicky reason, he would have specific colors that he likes and that his brain enjoys to look at.
To me, this is just calming, and I can get super annoyed if I mark up an area and then there's overlapping stuff and then it's doing this, and to me it's just, it takes away from my concentration. I do have boxes that I put up, but they are once again visual reminders. That's all they are. They're just visual reminders. And if it gets to an area, then I want to, like, you'll sometimes see that, let's say if the information was something like this, I'll move it away so I can focus on what price is doing, as an example, and then afterwards I'll bring it back again. I'll draw it in, draw it out, draw it in, because sometimes it distracts. To me, it's distracting. Even though I want to see that information visually just quickly. Yeah.
Yeah, it's the same. In fact, actually, I'll bring up my chart real quick because you guys know that I mark out Asia highs, Asia lows, London highs, London lows, New York. Depending on what strategy. I haven't marked up London highs, London lows in a while because I haven't traded a New York strategy due to the fact that I'm in Asia right now. I have two that I use for confluence for my highs and lows. I use Lux Algo Sessions. I love this one, so let me get rid of that one. A friend recommended that one. I love this one here. I don't use New York, so I've only got London and Tokyo session, and I use this to mark up my time zones, my highs and lows, and then I get rid of them. And the reason I get rid of them, you know, I know Rich keeps them, and this is the luxury, or this is the amazing thing between like different people. I find this distracting. Because there's now, even though they're boring, there's now too many different borings, you know. So now there's too many different shades. So I'll mark up highs, lows. As we go into New York, I'll mark up the high and low of London, and then I'll get rid of it because then I only have the lines. Whereas when I have the indicator up, I'm like, no, just go away, because then I start putting boxes, and then there's like 3 different shades of grey, and I'm like, oh my god, I'm like, you know, anymore, and I'll turn into 50 Shades of Grey on the charts over here, and I'm like, oh, this has got to stop.
You're already on 50 Shades of Grey, mate. You're not Christian, you're William.
The name
to
is...
me, yeah, this is my room of shame. To me, the idea of having the colors is, once again, it's that quick reference point. If I want to go back, I don't want to have to go and guess. Okay, so it's 6:20. Okay, so that's going to be almost at the end. Okay, there we go. It's 8:25. Okay, that's the closure of Tokyo. I don't want to do that. I want to quickly go and reference and see, oh, okay, cool. Yesterday, Tokyo was flat. Day before, Tokyo was, a little bit more bearish. That's what I want. Quick reference points. Very quick. And then on the day, it's just... it's a nice little pink color. It's a nice little blue color. And it doesn't distract. To me, it's just... It's not over.
Dude, I will be honest. I do love that blue.
Tis pretty, isn't it? Tis pretty.
Tis pretty indeed, my friend.
Did you use Lux Algo Premium or Ultimate Indicators or other platforms? What do you think about? Do you have any thoughts about that? First and foremost, I would never buy an indicator for TradingView. Ever. Never.
Yeah. Took the words right out of my mouth. Yeah, honestly, No, I don't use premiums, or I don't even pay for TradingView Premium, which I probably should, because
Zero.
I probably should pay for TradingView Premium, given the fact that I use it to stream.
I've got TradingView Premium. I've got the Essentials one, but that's because I wanted more like back data feed.
Okay, fair.
That was it.
Yeah.
So I only have the Essentials one, but I won't buy an indicator ever.
Oh God, no.
Yeah.
No. William will transform into Christian, and most famous dialogue is that what you bought. Yeah. Instead of buying an airline, it'll be what can I buy? What can I buy? Someone give me something to buy to be the next Christian Grey. What can I buy? It's gotta be trading related, surely.
Cigars. You can have.
No, I already waste way too much money on cigars. Like, instead of, you know how like Christian Grey obviously has his room of excitement. My room of excitement is literally a cigar room. It's a room where I just go, chill, play some poker with the boys, do some trading and smoke cigars. That is my room of excitement.
Okay, but do you have a room of shame?
It's my bedroom. No.
Oh, dude.
No, I don't.
If you get a smack upside the head, like in the next few seconds, I won't blame CC at all.
Yeah.
Just a whah. No, dude. So I wanted to say, so we used to have a cigar parlor here in our town, and it was a barber shop in the back, and in the front it was a tobacco shop. So they had a air-conned, perfectly temperature-controlled, moisture-controlled room with all of like these hemp bags with tobacco in it for pipe tobacco. They had cigars. Like, it was pretty cool. It smelt amazing going into that shop, because the barber store also had like beard oils and like all of that stuff, and like all kinds of little gimmicky toys and like novelty items or whatnot. So your room needed to be something like that, where you walk in and you just have a whole wall.
Just like real gimmick, like retro gimmicks.
Yeah, like interesting, like just novelty stuff, like just cute little. Oh, okay, cool. It's a small little figurine, or it is a.
I tell you what, I am.
Yeah, whatever.
I have decided to change my office up a little. So when I go back to the UK, you guys will be mind blown. I'm changing everything around. I'm actually changing my office location into a proper office, and I'm going to be using a proper oak wood desk with proper leather on, like a vintage desk, wooden desk with leather. A nice. I'm gonna have a Chesterfield in the corner. I'm gonna have some nice sort of like wooden, what do you call it, like drinks cabinets and like bookshelves in the background, doing like that real vintage old money style look. So I'm redesigning my office, and to get all exciting, on all of my adventures that I go to a different country, I try my hardest to get two things: a souvenir, like a timeless souvenir as well, not like something that's going to break or lose or something like gimmicky. It's a timeless souvenir, preferably something vintage or something old-fashioned. So I love going to these charity shops and seeing if they have anything vintage or old-fashioned. And then I love to get a bottle of red wine, because I like to collect my red wine from different areas that I go to. So those are the two things, and what I'm going to be doing is having artifacts and vintage like pieces on my back wall, in my office. So that is going to be something a little bit like what you've just mentioned. So there's going to be a lot of wood, a lot of leather, a lot of cigars, and a lot of sort of vintage timepieces from all around the world. So that's what I'm looking at redesigning my office into.
Yeah, I like simple wood colorings and blues, and then obviously all of my wife's artwork will be in my. It will always be in my office. I won't go and buy extra things when you can have them made, and they're all unique.
True
This
that.
is like
Yeah,
each one
true
of
that.
these pieces here is a unique piece of art. You won't find it anywhere
Yeah, I
else
love
unless
that.
it's printed.
Yeah, I love that.
Do you use any automated bots for MetaTrader 5? I do not. I don't do algo trading. I've tried it before. It was just not for me. The only thing that I have is a... I'll bring it up. Is a position sizer EA that helps me help with my position sizing and executing. I still have to do it manually. I have to literally press this trade button over here. So I have to manually enter a trade, but that's the only thing that I would have up. And then obviously I have this, just the amount of risk that's on the table. If I have multiple other terminals open or multiple other assets open in one terminal, like in this case NAS, I want to make sure that I'm risking the correct amount across all of my assets across the whole portfolio. That's the only two things that I have, and this is just an indicator.
Yeah, same as that. I will get into AI trading, but it'll take a lot for me to trust it, and I'd want to manage it. I wouldn't want to just click yes, go, sell, buy, or I wouldn't want to click like turn on, turn off at the beginning and the end of the day. As exciting as the idea of me jet setting around the world with my missus for doing absolutely nothing, just turning a bot on when I leave and then turning it off when I come home, as exciting as that sounds, I couldn't trust my net portfolio in the hands of a robot that is just programmed to execute according to code, you know. So I will one day be automated when it comes to my trading, but when I say automated, I don't mean turn on, turn off. I mean manage an automation system. So therefore, you'll still be at the market for a couple of hours a day. You'll still be watching how the system's acting, how it's reacting, what's going on, news analysis. I'll probably turn a little bit more into a fundamentalist and I'll technicals to sort of execute on the strict code that's been given to execute on. My job then will be to manage the EA and make sure it's run in accordance. So that it would be my vision of automations.
Yeah, I don't think it's there yet. I would much rather want to be one taking the trades and using my discretion, because I think it's difficult to program discretion. I don't think we're there yet. Mechanically, yes, you know, rules, this,
Yeah,
this
100%.
rule,
If
this
you've
rule,
got a
this rule,
mechanical
this,
system,
that's easier.
oh,
Yeah, like all I'm saying is like if it was a mechanical rule set, that's easy to program, and then in that case, press button, enter, great, there it goes. But discretion, I feel like the longer you are in trading, the more discretion plays a role. When you realize I don't have to take this trade right now, where a bot cannot discern that. A bot's going to be condition met, entry taken, condition met, entry closed.
However, I think EAs and I think like automated trading would work for a lot of people who struggle with the mechanics and the mechanical system of trading. But if you struggle with the mechanical side of trading, then you're probably going to struggle a little bit more long term due to the market cycles, and you're not going to have the depth and comprehension behind the markets to understand what's going on. And therefore, I think you'd struggle. But I think trying to program discretion into an automated system is like trying to program a personality into a robot. It's not doable because they are literally, it's code. They're programmed. They're not living beings. They're not I mean, yeah, okay, I suppose self-teaching and all could come eventually, but they're not going to have feelings and personalities, and they're not going to have the depth and comprehension that we do. So to ask an EA or an automated system to have a feeling and a personality in the market would be almost impossible.
Abradolf Linkler, is it free? Yes. The position sizer, yes, it is completely and utterly free. There is a link a little bit higher up, or maybe Remy, if you don't mind posting it again, it is earnforex.com. They have that position sizer. It's completely free to use. They have a MT4 and an MT5 edition of it. There we go. Thank you very much. They have an MT4 and MT5 position. Just follow this link. You can go and download it for free. All of the instructions is straight on the website as well. You don't need to log in or anything like that. You don't need to pay for it. It gets updated ever so often. And the nice thing is the source code for anybody in chat that is more concerned with creating their own bots and EAs and stuff like that. The source code is completely free as well. So you can get the whole source code, MQL5 coding language, and then you can remove sections from it, you can add sections, you can play with it as much as you want. Did you just mute yourself, mate?
Yeah, I did.
Whoopsie.
Like I said, I can't wait to go back to my home office and have my big setup where I have my position size calculator on my terminal ready for me, and I can just do as I will on it.
Can you
I
not
know,
use it here?
Yeah, I can, but it's just effort and trying to do it, and all feels like a bit of a faff.
Okay.
I'm the most efficient, lazy person you'll ever meet. Like, sometimes I'll have massive waves of like motivation where I'm like, yes, today I'm going to reinstall and delete and do everything that I need to do. Other days I'm like, it's not broken, don't fix it. You know, it's.
Yeah, I get it, mate. Sometimes if you're not bothered to do a thing, it might seem like this is really not worth it, and then things just don't go your way, and then you realize maybe I should have, taken the time to actually go through that thing, Yeah, waiting game, mate. Waiting game at the moment. Sohel is asking for US30 indices. It's going to be exactly the same. Where is US30? There we go. It's going to be exactly the same as NASDAQ at the moment. We had this exemplary movement here, nice and strong. Created a bit of a flag, not like, body of the flag. And then we had the breakout over here and then a slowed return again. So to me, NASDAQ and as well as the US30 is a no trade at the moment just yet. I would love to see price break above this high swing point that we had. But first, before we get there, I would really love for price to come all the way down here again and test this area down here. That's where we were before this news event happened, before this tweet came out. So I would like to see price kind of like make its way down to this point, and then from there decide whether or not it actually wants to carry on pushing up. Will that happen today? Don't know. Will it happen tomorrow? Maybe. But yeah, the problem that I'm seeing is the fact that last week Friday's high and low were both swept. At the same time we swept Thursday's high, and we kind of like got to just the New York high of Wednesday. So we didn't get to this high point over here just yet, which happened to be basically that high point over there, and then a retest and then a sharp push down lower, which we didn't get as yet. So I would love to see price either break above and then continue up with the intention of testing this area over here, which is an area of consolidation before we start selling off, or making its way all the way down here and then deciding what it wants to do from there. I think the New York session is going to be very interesting, which is about to open up now. So,
yeah, of course it is. Yeah, we haven't had daylight savings in the UK, so it's literally a minute and it's open.
yeah. So I'd be interested to see. Interested to see if any of this gets taken up during the New York session, or if it's going to be this. I don't think it's going to be this though.
What are you on? Were you on? Yeah, US30.
Yeah, this is US30 at the moment. But the same thing for Nasdaq. If I go to indices and I go to S&P 500, it's going to be the same. So, when it comes to the indices, I expect the same thing. Volumetric movement. I want to either see this whole volumetric movement be taken back, get back to where we were prior to the volumetric movement, or alternatively, I want to see us break above that impulsive moves that we had, and then I want to see continuation. What I don't want to see is this sideways action, because that to me is going to be pointless. Can't trade that.
No, indeed.
Gold.
Good, sir.
Let's have a look at gold for you, my friend. Gold.
Quite
right
a good old
now,
chap. Take a look at the gold.
We had the low. We had the high. Now, I could have taken any low of the day. I could have taken the low of the day and then taken that as a high as an example. It doesn't really matter. I just took these ones because they were the closest. We had a higher low. We then broke that high with the volumetric candle, creating a new higher high. We came back down to make a a higher low. Then we made effectively a lower low in relation to this one, but overall it's still a higher low in relation to that one. Created a new higher high, pulled back a little bit. We've pushed through the 50% fib fill on this full move that we had over here, from here to there. We've already pushed through the 50% fill. So as of right now, gold to me needs to respect this EMA, not EA, EMA, the 50 EMA, and also respect this last bullish candle. So come down, not break lower, and then potentially start pushing up for me to say, yeah, we're definitely making now a higher low and then a potential to push higher. Then you can take a potential buy trade trying to push price up. But because New York session is opened up now, I want to see how New York is going to react first. Is it going to establish? Is it going to build? Is it going to just go into consolidation? Or are we going to try and push lower, taking up all of the space down here prior to the news event? Or are we just going to just carry on with this? If it's that case, then yeah, great, carry on buying. You know, good for Dirk.
Dirk will be a happy man.
Yo, Samir.
Yeah.
What's
Hello,
up?
guys.
How you doing, brother?
Hello. I'm doing good. How are you guys?
Not bad.
I'm
I'm doing well.
Amazing. I
And
can
you?
assume
How are
you
you
want
doing?
some trades already.
I had one trade this morning on Nasdaq.
Oh wow,
I
huge
come on.
candle, you can see.
Yeah, I have not traded since then because we had an unexpected news event from Trump, and then that led to us moving volumetrically higher, and I just decided, I'm done.
I'm
Okay.
out.
What are your thoughts on US30? I'm planning to buy, by the way. I just wanted to know what is your opinion on it. Of course, I don't have the confirmation yet. My buys can shift, but as of now, I am waiting for a kind of a
Where are you
breakout.
looking to buy from on US30?
This particular candle, if we break the high
Okay.
of this candle, this one, yeah.
5-minute candle or hourly candle?
Yeah, we just the open. So open candle. I think if you go to the.
Okay.
Okay, we have my screen here. Okay.
Yeah.
Normally, we have this trend line going on, which is indicating, we are gonna reject from here. But my experience is saying that we are moving. We had many touches, like 1, 2, 3, 4, 5, 6, more than 6 touches here. So I think maybe today we can break out from this trend line, and we have some fundamental things also. As Trump is talking about, we are gonna pause this war and things like this. So I do think maybe if we break this trend line, which I have on the 1 minute time frame, this small trend line, I think we can go to the upside, and my stop loss can be 400 points. Yeah, close to that. Something like
So
this.
okay.
But
So
if we
the
close below
assumption
this, I
that we're
think
going to continue.
yeah. Just seeing if we break to the downside, then I think this bias may not can play. Right now, I'm just assuming that this can be a liquidity move, and once we go to the upside, we can continue bullish. To be honest, it is just experience-based trades. We have more confluence for the price to go to the downside, to be honest. And again, I'm not marrying with my bias, but I'm just waiting for the confirmation to go long.
Yeah, so we were talking about US 30 just before you came in, or at least I myself was talking about it. So for myself, this impulsive move that we've had with the news, the unexpected news, obviously, being an impulsive move, I want to see one of two things. I either want to see whether or not that impulsive move gets completely disrespected, we come all the way back down to where the price was prior to the impulsive move, and then from there decide whether or not this impulsive move that we had was actually what we wanted. That was the one thing. Hello, Victor. The other thing is I want to see whether or not, as we're pulling back, we slow down and then potentially start picking up. So either go all the way back, retrace the full move, and then make a decision, or just pull back a little bit and then continue the move pushing up. So impulse to me is dangerous to participate in because you don't quite know whether or not that impulse was a fear reaction or if it was a well thought out reaction. And in this case, because there was news that came out, a tweet, to me it's more of a fear reaction. And then that potentially can be a negative thing. So I'll just wait for it to play out.
Okay.
I don't know if you guys are hearing this, but there's a little bit of feedback coming from someone's microphone. I don't know if it is... Okay, there it stopped.
Okay. I will mute myself and see if it goes away.
No, it's not you, Victor. It's Samir's. Yeah.
See what is causing this. I'll be back in like 2 minutes.
Hello, everyone. Hi. I didn't
Hello,
say
Victor.
anything. Hi. Glad to see all of you, my dear colleagues, my dear co-traders who are sitting at home with their hands scratching, their palms scratching, or maybe they're pulling their hairs out because they were in a short on that EU trade. I mean, not trade, but I mean that move that was out of nowhere. Only Trump knew this was going to come out, and that was quite a move. I mean, that's an understatement, but it's the kind of move Trump has been known for to cause.
Yes.
So completely unexpected and massive. It looks like how much is that on your that how much is that of a spike? Have you measured that?
In gold, it was a 4.2% spike.
All right. In EU, it was 132 pips in 2 minutes, in 120 seconds, and just having a comparison, the daily range or the ATR is currently at 108. So it made 120 some percent the daily range in 2 minutes, just to get an idea of to how bizarre that move was. And the market has been ever since either I was in a short, by the way, and I kept my head cool, but it wasn't comfortable. It was a scalp, by the way. Short,
Oh,
just got in. Yes, and it was kind of one of the last one for my session at that time,
oh,
and boom, it went against me big time. Um, and it didn't hit my stop loss, and eventually I closed it in. I had to, fix it and close it in profit, but it was not comfortable at all. Um,
I can
anyway,
imagine.
yes. So yeah, so I said, you know what, that was a bit too much of um, excitement. I'm gonna
Yeah,
slow down for the rest of the day. I'm
yeah.
I got away with this. I managed to get out in profit, but barely. And anyways, it would have cost
Hurt.
me like 5 days of profit if I closed
Yeah,
that position, something like that, or
yeah.
or
That
maybe
that
even more.
that would have hurt. I can
Ooh.
imagine, Victor, but like it takes a very special trader to see that, manage that, and still come out on the other side, either break even or with a small profit. So kudos to you. Well done. Congratulations. You've deserved a bit of a break. So
Uh,
you all will
yeah.
see Victor tomorrow. No, I'm joking. Victor is going to stay on stream.
No, it was. I mean, you wait all year for these kind of moments, but I do have to know my limits, and that was a bit too much of emotions or
Yeah.
excitement. So I know I need to, I said I'm not gonna do any trades, but maybe later on, I'm already you know leveled and I can participate again, because I do actually before I just came on. I was, I was in the background. You guys at home can't see us when we're in the background, but the guys here that you can see, I saw a scalp opportunity on NAS and I took it. So actually, I already traded already. But I mean, I think I'm not going to be trading that much unless I start seeing things, and I will see myself corrected later on. But we'll see. All right.
Should be
There's some
fine.
engine sounds. I
My
hope that's not
microphone.
my voice. Um,
Much better.
okay. Oh,
Whoa.
what was
That
that?
is that is weird.
What just happened then? Oh my
That
god.
is weird.
I see.
Uh,
EU continuing higher. We had.
yeah.
Maybe we can talk a little bit about that before you guys go off screen, because I
Yeah.
would like to see your. I'm not sharing anything, so let me share my screen first. I think
I
everyone
can
is.
tell you exactly what I want. I wanted that high of the impulsive move to be broken, closed above, and then continue higher. That's what I wanted to see. As of right now, we are still printing. Okay, well, I'm not on EU. I'll show you now. We are quite a ways away from it, and we do have a local high over here that we need to break. However, we are printing higher lows, reasonably strong all the way.
I
So
Go ahead. Sorry, I couldn't hold my
yeah.
my excitement. But go ahead. Go ahead.
So I would have wanted to see it break and then continue up higher. However, I first wanted to see whether or not New York, the New York Open, had the same sentiment in regards to this move that we had over here. Are we aligned? Is kind of like what I was waiting to see. If the New York Open was like very bearish, then I probably would have waited for it to come all the way down here during this little area of consolidation that we had there before it could potentially pick up. Because consider, if you're still in this trade and you had some sells down here and you adjusted your stop loss all the way above here, you're stuck. And you would hope to take profit somewhere. So the idea is, I wanted to see how deep could this pullback be with each one of these swing points being tested. And in this case, we haven't. I want to just see now whether or not we're going to actually respect the zone before we potentially push higher. But as you know, not a predictive trader, reactive trader. And right now I ain't reacting. I'm sitting on my hands.
All right, we have not
Yes.
old
Keep
12
on
asking a question. Go ahead, and actually, the question is already asked. Okay, go ahead. Go ahead, ask your question. We are already ready to answer your question. But while we're doing that, I'm gonna show my screen if that's okay with you, gentlemen.
Yes, by all means. Please do.
Absolutely.
This is the move, right? So the market did that huge, gigantic 132 pips of an impulse. And afterwards, so far, what we have seen is after that move, we have broken the high, the internal high after the move. And when we retraced, it was a higher low, right? So we have this, and then after we broke the high, it made it's not a confirmed low because it can still continue lower, but it is it looks like a swing point. It is a swing point, a higher swing point, and this looks like if you just take off all the, even if you just put the line chart, it will look something like that. That seems to me like the market is getting ready for that continuation move, breaking that high, that internal high, and it's going to have another high to break before it gets to the big one. But this is just the process of the market creating higher swing lows, and it actually did it in a very a level that makes sense from a order block perspective, right? There's an H4 order block there. The market comes back, and if we zoom in, you will see that it's not coincidence. Let me take this out and that one as well, and you can see that the market came back. Look at that precision there. Look at that precision, and we can actually zoom in with. That's not made up. Look at that. Right? That's the order block being retested once it's been, because that's a bearish structure that has now flipped and become a bullish structure, right? So that's a demand zone now. Price comes in and with perfect precision reacts off of them one last time and then shoots away. Beautiful reaction. To me, that tells me that the market is getting ready possibly for that move to continue. So there wasn't a quasi here, otherwise I would have taken that trade, not within the main strategy, but I mean the one that I'm a bit more flexible with my rules, because that's the kind of move I would want to get in, right? On the higher time frame, the market telling us that it wants to reverse, it comes back for the second time, and boom. What do you guys read? Do you have a read on the market already on EU, for example, or some other pairs, some other majors? Is the market ready to continue higher, taking into account that news from Trump of he's going to pause? It's not a ceasefire, but a pause in just to give negotiations some room to develop for 5 days. He mentioned, but right away. That release by Trump was I don't know, how would you call it? It was the opposite was announced by the other party. Let's put it that way. What do you guys think? Is this going to continue or not higher in terms of the technicals in the backdrop of that little drama on social media?
Should we go in?
I think you're muted.
He's muted. He's muted.
Aww. Like I said, I want to see highs taken. I want to see the high of this impulsive move taken. Ideally, what I would have wanted was to see price come back lower to that area where we had the initiation of that impulsive move. I would have loved to have seen that first. But if it doesn't happen, that's okay. For me, the confirmation would then be the highs gets broken, and then we start printing price action again, higher highs, higher lows, but not off of the bounce, let's say, off of this initiated impulsive move. Just want to see it go and take its time, start pushing up. So myself, I won't be trading anymore today. I've already got a trade on NAS this morning. I'm done for the day. I'm up 1.5% for the day, so I'm happy where I am right now. I'm not going to force it, especially since
1.5%. Look
yeah,
at
I'm
you, Richard.
yeah. No, it was quite the lovely trade this morning. So yeah, I'm just going to wait. I will wait until tomorrow.
Yeah, that's wise to do that. I mean, usually, it's there's a thing to be said when you're in sync with the market, when you're reading the market well, when the opportunity is there, volatility, and your read is good, is you should make use of that opportunity. But there's another thing as well, that the more you interact with the market on any single session, there's that chance that you deviate just because you're getting excited. You're affected either by
Yes.
your success, or the fact that you were reading the market correctly. Well, who's to say that the next couple of minutes, hours, you're gonna have the same synchronization or the same read?
Yeah.
Maybe the next thing the market does, you didn't see come, and things start crumbling down of that day. Instead of just closing that day in strength and say, I had a good move. That's it. I got my little slice of the pie. I'm gonna walk away and enjoy my day.
Yeah, I don't want to have too much. I don't want to get greedy. I don't want to be influenced by potential emotions. I got what I wanted, and I'm happy to step away from now and go touch some grass. I just wanted to address this before we head off. Selfie asking, were today's giveaways already announced? No, they were not announced today. It will be next week, Monday. So in the description box below, there is all of our socials. Go and follow us on Instagram as well as on TikTok, and then just join the gleam.io giveaway, and the announcement will be done next week, Monday. So we are giving away high stakes accounts, the brand new ones. So the 10-10-10, so 10 drawdown, 10 target accounts. So all of our giveaways on the high stakes for next week, Monday, will be the new accounts, the new stage or two-step program that we have.
What is your take, Will? Before anything, we see you very concentrated. I'm pretty sure, you're getting, you're making your cocktail of a setup here. What is your take on this move? Is this something that tells you need to take, not trade it and just leave things to calm down, or is this the moment you need to grab the horns and ride this bull?
I grabbed the horns. The bull bucked me off this morning. I was hoping to be buying. I did get. I got completely shafted by the market this morning. The overall direction was in the correct place, because we ended up taking highs, which is why I was buying. I wanted to buy up to highs. We got that price move. Unfortunately, though, price just absolutely tanked just before it did move to the upside, taking me out of the market. So I'm glad price did move higher because it's what I was anticipating. Unfortunately, I was not able to participate in it. However, same goes on gold. Gold, I wasn't quite feeling it, but price did move higher as anticipated. So honestly, it's what? 10 to 10, it's 8 minutes to 10 at night here with me. I'd love to trade NAS and US 30 and the S&P during the New York session, but that's just not going to happen for me. I'm gonna have some food, watch some TV, and go to bed and dream about hitting take profits tomorrow morning.
I like that prospect. Yeah. That's great. Good stuff. Samir, how's your trade going on? Did you get a chance to put it on? We see you're concentrating there. Looks like you did.
I got a trend line breakout, and I had to take a shot. And let's see
take
if
a look
today
then
my
at your
experience
screen, if
is...
that's okay with you.
Yeah. I just pulled up my black arrow. Previously, I was sharing trading view. So I do think this triangle pattern that I see can...
Samir, do you mind if I just interrupt real quick, guys? I got to shoot off. I've just been told dinner's done. So I'm going to love you all and leave you. Guys, thank you very much for joining. I shall see you all tomorrow morning. Thank you very much. Make sure, guys, you comment and you take part and you participate and ask these fantastic gentlemen all sorts of questions as we head into New York session. But for now, thank you very much. Good night.
Cheers, Will. I'm also going to take that moment to also just hop out, guys, as well. I'll see you all tomorrow. Please don't forget to follow us on all of our socials, like and subscribe to the YouTube channel as well, and then we'll see you all tomorrow. Have a good day, guys. Cheers.
Take care, Rich. All right, so we're back. Let's beg your pardon, Samir.
I said amazing. We had two wonderful hosts. Now it's us. So I was breaking down this trade. So I saw this triangle pattern. EMA was bullish, and we break out of this trend line. So I bought here, and there was also some kind of experience involved in this. As we can see, this trend line is showing you bearish price action, but I feel this trend line is 1 2 3 4 5 6 7, almost it is getting touched like 8th time. So I think today it may can break, and we also have some kind of fundamental catalyst going on. We have some tweets from Trump, and I think that may can push this price a little bit higher, or in short, it may can give the fuel for this price. This was the higher time frame, trend line. But normally what I do, I follow 15-minute structure, which to me is bullish. And impulse was very good, and we have a correction which seems perfect to me. So now it just come to the probability, and let's see if this triangle pattern is gonna hold, and we follow this momentum, which is impulse correction, and I'm expecting an impulse to the upside. On my eyes, it looks very cleanest triangle pattern that I can find, textbook type of thing. So now let's see if we hold this momentum or this pattern, or it is a some kind of fake out, or we continue the higher time frame trend which we have here. Normally I do give a little bit more preference to the 15-minute time frame, and for me 15-minute is bullish. Even if price has to go to the downside, I do feel we can take this high out, and then maybe we can continue bearish, because US 30 have this kind of characteristic. That's why, guys, I have mentioned this couple of times. Focusing on one or two pairs can give you some kind of experience, and then you can use it in real market. So right now I'm anticipating this thing. Let's see what happens. Maybe we can use this as a liquidity point, or this as a target. I still remember I made a mistake that day. I was targeting beyond this area, somewhere like this, and it was a daily high also. So price just spiked up, and it just completely hits my stop loss. So now I learned from a mistake. My TP is exactly where it should be, and I'm not extending my TP or anything like that based on my feelings. I'm just following the pattern here. So let's see if this pattern holds.
Perfect.
Which pair is that? Joking live, this is US 30. I am on the Fivers futures platform, trading live here with you guys. And on TradingView or on MT5, you can find it as US 30 in the Fivers MT5. So on this black arrow future side, we call it YM or MYM, which is similar to Dow Jones or US 30. Some brokers have DJI 30, some brokers have US 30. In the Fivers, you will find it as US 30. And yeah, this is the analysis behind this. And let's see, last week was really good, to be honest. I think on Monday I did a mistake, if I'm not wrong. Yeah, on Monday, this TP that I was mentioning to, my TP was a little bit here, and price just spiked up this high as a liquidity, something like this, and then it melted. On Monday I did a mistake. Other than that, the week was really good. So let's see what we get in this week. And as of today's session, this triangle pattern, again, if I see it 100 times, I'm gonna take it exactly like this. So I'm not really having any anxiety or anything like that. Oh, is this trade gonna hit the stop loss or anything like that? Because I'm gonna do the same thing every day, which I'm doing here. So let's see. Now it is just the waiting time, Let's see what
Yeah,
it
I think
does.
that's the place where everyone, right? Every trader should get to, where repeat the same patterns. It may not need to be the same pattern all the time, the very same one, but it could be different one. The same ones, like having a playbook, doing the same sequence of actions before what exactly you do before you take the trade, even after taking the trade. What are the things that you look at? How do you manage it? Doing the same thing, having that consistency in your process will help you have consistency in your results as well. So it's very important. Once you do that, there's very little new, very little that you need to be thinking about, because you're doing it all day, every day, all week, and you're just executing, checking, executing, next step, action, executing, etc. So I think that's where, as a trader, everyone should get the repetitions in.
Yeah, exactly. And yeah, let's see what today's session holds for me. And I
You're
think,
in the long.
yeah, I am in the long. Took this,
Mhm.
triangle pattern breakout. Once, we had this. Actually, on my MetaTrader 5, I took an entry somewhere around here. But as
Okay.
he was, rejecting. So this platform has a little bit better entry here. So on my other accounts, it is here on my the fibers, MT5, and stop loss placement just little bit slightly here and there, probably like 5-6 points here and there. Other than that, the trade analysis or the bias is same, just little bit entry difference, because you cannot copy the trades from futures account to MT5. So you know but
Yeah, the you have to do them separately because of
yeah.
the difference in price, right? The one is CFDs, and the other one is a future, which has a slightly difference to it.
Yeah.
All right, so what is your plan on managing this trade? What will cause you to close the trade before hitting stop loss or TP?
Okay.
When will you just let it run? When will you intervene? What is your plan? What are the options what are the scenarios you
Okay.
have in your trade?
Okay. I like this idea of the planning of the trade. What I can do actively. So if I see prices rejecting something like this, it is taking too much time to hit my profits, take profit here, and it is creating some kind of upward channel. Then the market is giving me signs that buyers are not strong enough to take the price higher, or the impulse that I was expecting is not coming. And this particular behavior, I have taken losses on this particular behavior. So by experiencing this, I have came up with this type of nature, if I see, I think I should close the trade. So I think trading is all about just collecting the data and seeing what you can do better. So my previous data is showing me that this type of behavior, whenever I see, I should close the trade in some kind of profits, or even some negative risk to reward, or whatever price is offering me in that particular session. So if I see this kind of behavior on the 1 minute, let me go to the 1 minute also. Okay, then I think I should close the trade, because I've taken losses on this one. Price reversing, probably like 60 to 70% before hitting my TP. So I think this is the only thing where market is giving me signs that I should close the trade. Other than that, if we have a V-shaped recovery type of thing, I cannot do anything. I have to take a stop loss, or something like this, unless we came very close to the TP and we just do some wild kind of thing. Then I will take a break even. If we reverse right from here, then I cannot do anything. I have to take a stop loss here. But I've mentioned three scenarios here. So let's see what we get. Actually, four scenario. Fourth can be the best case scenario where it just impulse to the upside and hits my TP. Other three scenarios are just some kind of managing type of thing. Two scenarios actually. If it is a
I like
V-shape
that.
recovery or kind of fall, then I cannot do anything. This is not my day. I have to accept it. That's what I can say here.
Yeah, right. We can't. We have no influence whatsoever, even though we might think we. Sometimes our mind tricked us, right? Thinking about if we do this, if we put extra indicator, we'll be able to, that doesn't work like that. The market will do whatever it will.
Yeah,
Um,
actually,
so
this point that
so
you are mentioning, I was we was having Hyderabad event, by the way, guys. The Fivers is maybe it can come in your city if you're from India, in upcoming months. But in this particular event, I was mentioning that the point that we are discussing, this if price is showing you some kind of thing, then I think you should close the trade, and you cannot force the outcome of that thing.
mhm,
Uh,
for sure.
so yeah, whatever
It
I'm
it
mentioning here.
Yeah, it's very easy to have that. It's ludicrous. It's Of course it can. It's not logical, but we still sometimes have that idea, or we fall into that trap, that psychological bias of thinking we it will have any effect. Of course it doesn't. So the earlier we can get rid of those silly ideas, the better. um
Yeah.
So, Samir, the market is having a pullback after that breakout. Are you? I have to say I'm also long on NQ after that breakout. After the open, um, and
Let's see.
it's
You
not very unsimilar to what the market is
okay? It
showing.
is very similar. Yeah,
Ba- Yeah,
almost same
basically the
pattern.
same. Yeah. So, what is your we can see your TP, you put it right above the high. It looks like above the high, or is it at the
It is
high?
just the high, little bit below the high, as we are having
A little bit below the
very
high.
tight spread. So I placed it a little bit below. I'm not
Hmm.
sure if it. Okay, let's place it something like this.
Mm.
So yeah, it is right at the high, as I mentioned. If we have to go to the downside, I do think we can treat this as liquidity point,
Hmm.
where we can spike and then maybe we can continue to the downside, and we have a trend line also. It is the eighth touch of that. So I do think today, if we have to go to the downside, actually there are two scenarios. Either we're gonna impulse to the upside and we can shift the trend and we can correct this whole move, or we're gonna use this as liquidity and we can go lower, even more lower. Tomorrow session is gonna be easy actually after this particular session, because we will know if this is a liquidity or a continuation of that move. But today's session is 50-50 type of thing, whether that trend line that I have drawn for you guys, if you are new, maybe some guys can be new, this trend line that I'm referring to, today is the session we will know if this trend line will hold or it is gonna break, like with the volume, and then I think we can shift the trend right from here. We can see more higher highs in upcoming days, and yeah, this is really the make or break. We will know what the price is gonna do today. Either we
And
liquidate this.
we um, we do have from on the news side, we have just a couple of minutes ago, Trump telling us that talking about that communication that he's been having with Iran. And so that's quite
Mm.
interesting. And actually, I'm gonna switch to my screen to look at the news. Just a couple of minutes ago, actually, like 20 some minutes ago, not very long ago, giving more details about that these discussions that as we know in the news and the headlines, it was
What is this
announced.
platform?
This is financial news, financial Jews, I should say.
Financial
Crashing to
juice.
start.
Okay.
Yes.
Okay.
So we can see here how the Trump is giving more information, and I guess giving more credibility about his, because you have these two statements, and conflicting statements. So which one is actually happening? The foreign minister of Iran, I believe, said that, they're not talking. So if Trump here on the reply giving more information about that, that communication, and about the deal, possible deal that is in the making, which is actually very, very influential or impactful for the market. That's what created that big move that we can see here. That move on EU as well, and probably on every pair out there. So that's just wanted to show you guys those news for our viewers to take into account. All right, coming back to the market. The market is that's the opening range of the 15-minute on NQ, and as we can see, if we go to the lower time frames, you can see that the market. This is the range of the first 15 minutes, which is the orb or the open range breakout or opening range. That's the range, and where people are very popular strategy where people are watching the break of that range to indicate whether or not the market is going to go in that direction for some time after the break, right? And we did have on if you look on the 15-minute, you can see that the market is above that range right here, so that some people trade that differently. But the assumption is for those orb traders that the market is going to continue for some time in that direction, because you have you have a breakout. But it doesn't do that all the time, of course, right? It depends on how strong that breakout is and what kind of momentum you have. And in this case, you do have a huge momentum, so it is quite likely you could see a continuation of that impulsive move and eventually see some move to the upside. We're going to go to EU to see what is happening here on the higher time frame, just to put things into perspective from the higher time frame, from the panoramic move or view or bird's eye view. We are, we kind of not kind of we recovered because we were getting near a week, and some days getting near to the end of the month. This is the monthly time frame, and market has recovered. Right now left a wick that was squeezing that monthly order block. But if we're close like this, where we are, and we're around here or a bit higher, it would look like something. It would look bullish, because it would look like the monthly order block, was not able to be invalidated eventually. Although this does look that, it's not very strong, but eventually it came in and rescued at least the month. That doesn't mean for sure it's going to go up, but that's a bullish sign in any case, right? See, if it closes right here by the end of the month, which we still have to wait a week or so before the end. So we have that line being this line, which stands at 115.78.2, which, where it flips, where, it will be perceived by the market to be bullish, and or the opposite if it's below that. On the weekly time frame, we created last week a bullish order block, right? That's another thing to consider, because the market has created a structure on a huge time frame, like a weekly, that might we already retested immediately this week. So that looks good for a push much higher. That's good. We have the impulse today, which already sets the tone for the next coming days, of possible good news coming out of the Middle East conflict, which could push EU much higher. So you have that fresh order block being created. This is the old one. I like to keep them there because the market reacts to them, because they become flipped structures. But this is the area. This is now the structure that was retested, that we can look for possible patterns of reversals pushing back, bullishness coming in and breaking to the upside. So let's take a look on the daily. We did have a beautiful retest of, a retest for sure of this quasi, right? That's the external quasi. We did have an internal here, but that internal didn't hold. And it came back to that last order block there beautifully and reacting off of it, right? So that's beautiful. In terms of the quasi, it didn't activate the quasi itself. So there is no signal, at least not for me, for us to get in and push all the way to the highest point or to some structure that makes sense on the daily time frame. So the quasi didn't signal, but you can clearly see that the order block was nicely respected. I mean, it would change price, right? People can say whatever they want, but that order block, I mean, is very convincingly is what that was the level. That order block was indicating a level that the market reacted for whatever reason, but it reacted to that level quite convincingly and changed direction. So let's go deeper to see if what we can see. So we have the daily time frame here. We have the first order block on a fresh order block on the daily created. We had actually on Friday already. It was retesting today, retested even deeper. So that's also good. And you can see, right? After the creation, you can actually see this on a lower time frame perhaps, but after the creation of the order block, so you have, this is the creation, comes back, it hits that level, and where's that level? That's the daily order block. So you can see how the market goes from one level to the other one, or one structure to the other one in the same time frame. And so I guess that is the way to discern what is likely to happen next. When it's no longer respecting that level to the opposing level in the same time frame, but it starts breaking one side. Okay, so then you can understand. All right, we're going to maybe a higher daily structure, or maybe we're going to retest something on the daily much lower, which would be that same level we talked about just a few moments ago. So that's the daily. We have the fresh order block right there on H4. We didn't have a retest of the H4 we had before, which is right here, which is inside the daily order block. Didn't get in, but we did create, and this is quite interesting, we did create a fresh H4 based on this huge impulse that also creates an outside bar, right? That's the outside bar right here. You can see how it takes out the high and the low of that candle and pushes much, much higher. So I will be looking, doesn't look like it's going to do that now. I'll be looking at this structure for possible price. Today that may not happen or maybe it will, I don't know. But the market is all, focused on that impulse, that good news. Yes, and especially if Trump is, giving more details, coming over, confirming that those talks were happening, even though they were being denounced to have happened by the other party. That's still a good thing, right? If there are talks happening, then the market will likely be reacting in the same way for a couple of sessions, couple of hours at least, if not a couple of days, at least, if not longer than that. So it does not seem like it's going to come lower. However, if it does happen, then that's the area I want to be taking my trades on, right? Waiting for price to come back and retest this level. On the H2, there's a tighter area, a refined area. So let's mark that as well. That's the H2. And how big is this? This is 45, which is actually too big of a structure, according to how I trade. That means that I will not be able to trade that. I will indicate this structure as possible, but because it's the H1, I don't see myself taking any trades based on the structure that are currently visible. So if it comes back, it will have to create something else that will trigger me into the trade. The way it looks now, I will probably not take that trade. All right, so that's EU, and it is pushing higher as we We talked about that not long ago when price was over here, indicating that price is likely to be going and continue this push because it's looking that impulsive candle, has held quite nicely, and been creating higher levels. Let me mark them, higher swing points ever since, breaking the highs, the internal highs, creating other one, and again taking out that high, and you can see that bullish order flow, right? Taking the previous highs and creating higher swing points. That's exactly what you want to be seeing, and the market, continuing to push higher. It hasn't taken that line yet. It's not a very good looking line, I know. I mean, mark that like that. But you get the point, right? It's really going for that high, and if it closes the previous high, I mean the impulsive high, if it closes above that and it keeps there, it may come back. But I mean, if it convincingly holds above that level, then it's just a matter of time. The price will continue to go higher. Everyone will understand. We're gonna have a continuation move to probably. That's the next question, to where. Let's clean this up a little bit, right? How's the trade on your Dow 30 coming on?
You're not seeing the impulsive candles like I was expecting.
Okay.
So again, just a waiting game. Haven't seen any sign
Okay.
yet. So let's see. We still broke this trend line. We are creating some kind of slow momentum here, but that is not that much information that I have. So that basically it is not convincing enough, so that I can take this information in note and I can close this trade. Still, this trade is valid to me. But the fact is that I'm not seeing that impulsiveness that I was expecting. We are at the NYSE open. So I'm seeing some impulsiveness. We are like 51 minutes into the NYSE session, but still that impulsive momentum is not there. Let's wait for 10-15 minutes more. We will see what kind of nature we are gonna get here. So I think in 15 to last, I think 20 minutes, we will see what this price is gonna do, and we will get some kind of information where the price can go. Right now, information is less. Of course, we have a trend line breakout, which is indicating we may can push higher, but this bias for me is still bullish. We don't have any information right now for shorts. The information that I mentioned, I'm talking about something like this, something like this. If it is doing this, of course it is going to take a lot of hours, probably like 3 hours or maybe 1 hour. Then we will see what we can do. But right now, still hoping for the best. Let's see, this trend line breakout is there. Yeah.
All right, I'm gonna switch to my screen quickly. Samir, we're gonna come back to yours. We had the breakout of the swing high. We had after the impulse as the news came out, and the market has broken, at least on the 1 minute, looks very convincingly took out this internal high, and then eventually took the high of the day, which was standing at 1.1620 round. And we'll have to see. Price will likely come back, retest perhaps one or maybe both of these highs and push off of them, and might even come back into the range for a little while. But we have plenty of structures. Let's take a look on the. Got an order block there. You got two actually. So you have to go to a higher time frame. Let me take these out, and let's go to the 15-minute. I don't see any. Maybe on the 30 minutes. Yeah, I don't see any there. All right, so actually there's an H1 that will be closing in 36. We'll have to wait for that to be closed, but that would be a nice structure to be created. If we can close above here, in let's say, in that 36 minutes, that would be you could put your stop there and get in any retrace that we get to that level as price will continue to go higher, likely. That's something. It's a 1 hour, so it's a bit too big of a structure, to be fair. But you know, it is that's what we have. Let me see anything else we have. Well, actually, you could also take the bearish order block here that was retested and broken. If price were to come back, if it eventually closes here in 6 minutes, that could be also a nice area to put your stop below that, below this. You know, take a trade. Even if it comes back, put your stop below that area. It's likely going to have a reaction, a nice reaction, and you can target, you know, something of you can measure, you know, how big these are. You're talking about 69 pips there. It's not going to be as big, right? So you can see this could continue to push higher to 69, a little less probably, or no, we'll have to see, right? So 70 pips, that would be from this low, would put us 79 to 1648 more or less. So that could be a nice area, or a little bit before that, for price to come back, retest, and then continue to hit that, you know, measured move. And maybe even taking 100% of that measured move is, you know, asking maybe a little bit too much, especially if it's later on during the day. So you could be targeting maybe 87% of that move, meaning 70% of that 69 pips move we had on EU. Nice breakout, by the way. Looks, you know, solid in terms of the, you know, look at the body of these candles. You know, that's the kind of move you want to be seeing, convincing as well. Like when it took out this previous high, look the candle that actually took it out, and afterwards it had followed through. That's what you want to be seeing. You see the big candles telling us, you know, there's really directional, there's intention, there's volume, and you want to see it not just in one candle in 1 minute or 5 minutes. You want to see it in a couple of them, right? So you want to see it hold there for some time, and even if it comes back later, maybe in half an hour, 30 minutes, you will still, you know, see that it spent enough time above the level to be considered a proper breakout, and hopefully it will hold. We'll have to see. Going back to your screen, Samir, is that okay?
Yeah. Let's do some analysis on gold. I know many people trade gold. Let's see. I don't know why we don't have more information here. I'm just talking about 200 EMA here. But let's throw some levels and let's see what price is doing around that level. Basically, I like to observe the nature of the price, what it is doing in that particular level. Right now we have these two levels. I think we have this level also. I'll draw just one last level, which can be, let's go to the 1 hour. Okay, we have 16 minute here. Okay, yes. Okay, there is a very small level right here, and we also rejected right from here. Okay, so as you can see, we was breaking these levels, but now we are breaking to the upside. It should have reacted this as a resistance, you know, but it is breaking and it is acting like a support here. So which means now this strength is shifting somewhere. And if I draw some trend line so that we can have more information, let me draw one from here, but let's use the recent one. Okay, we have this trend line right here. So now we have to see how price reacts in this area. Of course, the momentum is really good if we go in the 15-minute time frame, because that is a very good time frame according to me. Okay, on the 15-minute 200 EMA is bearish actually. So still I am not considering this impulse as a strong impulse unless we close above this trend line. Let me change the color for you so that you can see it. This kind of line that I have, this blue line, if we can close above this area, I can consider maybe gold is showing shift in its strength. But as of now, I do think based on the 15-minute EMA and, you know, this huge structure that we have, we can reject this area, and if it comes under this, that will also break this trend line. This one, I think we can revisit these areas. Let's go to the 5-minute to see it more. Okay, yeah, it will also bring under this 5-minute EMA. So I do think if we can close under this trend line and this EMA, we can revisit these lows. But we have to be mindful, this trend line is here. if we can close above this, I think we can gain the strength back, and we can correct this. At least, no, I'm not even expecting the whole correction of this move. Maybe we can correct at least to the next level, which is at least till here. So let's see how this EMA or this trend line reacts from here. Again, this is just a waiting game here. If we close under this trend line and this EMA that we was seeing on the 5-minute, I definitely think there is a shorting opportunity here. And yeah, that is it for gold. I don't want you guys to take any impulsive decision right now, because we have some areas from where price can reject. We have to observe the nature here, and nature is some kind of, we are squeezing here. And how will we know that we're going to continue to the downside? Once we close below this trend line and this EMA, it's okay if you can have some big stop loss. I think it is fine. At least the confidence in the trade is going to be more. That will allow you to have a little bit more wins, waiting for more confirmations here. So that's what I do. And if I go to the M/M chart, still it is some consolidation and all. If we go to the smaller time frame, let's go to the 3-minute. Yeah, we still don't have any information so that we can take any decision. Still we have to hold the trade. Let's go to the 1-minute time frame. 1-minute time frame, still this trend line is not that convincing so that we can close the trade. This nature is still intact with the higher highs and higher lows. So let's see the US30 side. Gold wise, let's see if we break this trend line again. I think if we break this trend line, then look for buying opportunities. This range that you have, this let me give you a price here. It is 4,460 to 4,560. I think this range you should not do anything. Just wait for price to react from this area, and then either close above this or close below this, then you can take your action. So yeah, let's take a look at M/M here. Okay, MNQ is, the breakout here was a little bit strong. As we retested, we sustained here, but M/M we are kind of not having that strong momentum here. I think price used all its energy here. That's why we are stuck in this range. But as we have this theory that is impulse, correction, and impulse to the same side where the previous impulse was, that theory is still intact. So let's see. This is in correction phase right now. We are expecting an impulse. So we have entered at the correction phase with a decent stop loss below this 200 EMA. Even if this 200 EMA prints like this, so still it is below that EMA. So stop loss is at very logical place. Even if we liquidate this area just little bit, still I think the stop loss is okay. Maybe price can continue bullish again. Maybe it can also hit the stop loss. I have to take that. Then we move on. We come back the next trading day and we do the same thing. So that's why I place the stop loss at this EMA, because the price is going kind of consolidating. In this case, EMA is also moving candle by candle, so it is not gonna stay here. It is also gonna go to the upside. As we, even if we fall from here, we see some kind of falling reaction here. Prasad bro, how are you? Welcome to this stream. First of all, I am from India.
Yes, Samir is our Indian Johnny Bravo.
Yeah.
All right. So Samir, do you have anything to do we have to, is there a time stop on your trade? Because are you going to be holding this for more than a day?
Actually, this should ideally play out in a day, but if I have to hold the trade, If it is, consolidating like this, then there is a chance we can expect the impulse. But again, that nature that I explained, only that is the concern where I have to close the trade. Other than that, even if I have to hold the trade for tomorrow, I am okay with that. And this platform allows me to do that. The Fivers futures, you can hold the trade, for the next day. So I think I'm fine with that. I have to pay a little bit swaps, so it's okay. But let's do some more analysis, guys. I'm gonna just get out of my black arrow. I can put out trading view for you guys. I'm just gonna stop my screen here so that I can share the trading view screen. Just give me
Yeah,
like
I'm
one
gonna switch
second.
to mine in the meantime, so you can get a chance. We can see that EU has been breaking out nicely from that high and is holding. You see on the 5-minute time frame, it
Okay.
had retested that breakout right here and is pushing higher. That's beautiful. That's what we want to be seeing. This is the breakout. That's the retest, and it continues. That's beautiful. That's according to the plan. And this is the measured move all the way. If it's going to be doing that 70 69 pips again. Let me check if that's the one that I did, right here. This is what I measured, right? 69.2. That's the measured move. You don't have to take, the whole 69.2.1. That's the, if it is going to make the same kind of movement that it did last time, and you could argue it has a bit more reason to go even a little bit more, because now it's confirming the breakout. Before, it didn't have the confirmation yet of the breakout, but here it does. But then you have the stretching of the range, right? The more it stretches, the harder it gets to continue to stretch in the same rate, right? In the same speed, meaning you automatically, at a certain point, the momentum will get overtaken by the stretch in the range of the day, right? So you'll have a mean reversion kind of an effect, but the market is very strong still and pushing higher. It looks very nicely that it could be reaching that level in a short while. But even if you did not use 100% of that move, you use 70%, I think you would have already been hitting TP. Let's say 49 would be 70%, 80 would be what, 60, 56, which have hit already as well TP, and that would be 100. Or maybe if you took 90% of that measured move, we're talking about what, 60, 63, which would be just a little bit, maybe what, 4 pips ahead. It looks quite convincing that it will hit it quite soon, but you never know. Go ahead. You wanted to show us
Yeah.
some analysis. We have another 24 minutes to go on our stream before I switch back to Samir. I want to remind you that this is the moment. This is the best moment for you to consider, look back, reflect a little bit. If you enjoy this, if you bring you any value at all, consider that like button. Consider our subscription button, because that's what you can do as a token, as a gesture of appreciation back to us, showing us that this is good for you, this is nice, you like it, and that will allow the algorithms, the algos of the social media platforms to suggest our stream to more people, so more people can get that same value that you are getting out of us. Go ahead, Samir.
Okay, let me do some analysis on some forex pair. I'm gonna do step by step. I'm just gonna go to this daily time frame and let's see what pair is at the most interesting area, so that I can give you some potential entries here. I'm gonna start with Aussie Cat. Not looking too interested. We bounced off this support. We already missed the buy, so nothing. Um, we we kind of are respecting this area, so I'm just gonna do some Aussie CHF analysis. We are already bullish. We are respecting this order block, something like this, going to the 4 hour, using this as liquidity move. We are at the 200 EMA, going to the 15-minute. Let's see if we have any pattern going on. We have some trend line right here. Let it reject, let it break. I think that can be a trade. You can place your stop loss here, go for 1 to 1. And I know you're gonna say only 1 to 1, it is not gonna make me profitable. Maybe you have to reevaluate this thing, because I'm taking 1 to 1s, and this thing is working well for me. Aussie CHF trend line breakout, that will be good. Let's move to other pair. uh, AUD JPY, we already left the train. This was a support and resistance test, and we already bounced way too high. But let's see if we do have any trendline breakout. Okay, we already have broken this area. So now your entry is gonna be little bit far. Your risk to reward will be sacrificed. Your original entry was somewhere around here. Stop loss can be here. TP can be something like this, and you are also kind of expecting this trend line is gonna go. And we broke this tree downside, and we again gained back in that channel. So I do think we can break out of this. AUD JPY looking good. I think AUD pairs is breaking the same structure, so I'm just gonna be a little bit quick. Okay, AUD NZD, we are coming to these areas. I don't like this pair because of spread, so let's just skip the analysis. AUD USD, okay, we are rejecting from this area, and we have also respected the support area. Let's see if we can find some buying opportunity here. Yeah, as I mentioned, AUD pairs are printing the similar type of thing. It was a kind of triangle pattern. We break out of this, and now we are pushing higher. So if you get a retest, you can still enter, place your stop loss, I don't know, maybe somewhere around here, and you can expect these highs going for 1 to 1. AUD pairs looking good. So let's move ahead, going to the let's move to the major pairs. I know a majority of the you guys are trading these pairs. I think I was talking in the stream where everybody was convinced we are gonna just go lower, but by just seeing some kind of support and resistance areas, we knew that we are at a very major support areas. We might can get a bounce from here. So we did get a bounce from here. Of course, there was some news catalyst which was going on. So yeah, going to the 1 hour time frame. Yeah, from here we got a trend line breakout. This was a good buy. This trend was a little bit shitty, but this was really good. But again, this candlestick was pretty wild. So if he was about to enter, stop loss could have been, let's say, below this area, going for 1 to 1, something like this. So that's how I think you should play these support and resistance areas. So still I am bullish now. Why? Because we have respected the support. We can come to any next area, which is we have also about to close above this area. So we definitely can see these fair value gaps in upcoming days, or at least this high. So keep Euro USD for buys only, in my opinion. But you just need to get some nice entries. Let's see. I think if we can pull back and we create some another trend line breakout, that is still valid. You can place your stop loss in any structure, let's say below this EMA. So I think that is still valid. Let's move to other major pair, which is GBP USD. Okay, we already have some levels here. GBP USD is very tricky because this is very choppy. If I draw some level like this, I don't like to draw some levels like this. Why? Because to me it is a consolidation, and I cannot see an established trend. I could have say that this is a bullish trend, but if you see just wider picture, then it is a consolidation. Euro USD is closing to the upside, so you also can keep this thing for buys, but we need some good entries. For that, I think again the similar thing, pull back and just trend line breakout. So let's go to USD JPY. Okay, I already have this level marked here. Okay, let me go to red.
I wasn't watching. I was I didn't know this, Samir, but our colleague Dirk, according to to this viewer, Abradolf Flinkter. It says Dirk. I suppose he's referring to Dirk from the
Yeah,
morning,
yeah,
right?
yeah,
That
yeah, yeah,
Dirk
yeah.
that opening the session. He won 10K on the EU candle, or at least the candle. I don't know if it's EU, maybe it's another pair. But that's one of our colleagues. Nice. I'll have to
Okay. Let me see.
nice run, Dirk.
You was referring to this candle here. Yeah, it is just
I suppose so.
120 pips, 4 hour candle.
I was
And even if you
actually
see,
I was actually in a short, and it was a scalp, and I got in just a few minutes before that candle came out. Maybe 5 minutes,
hopefully you
and
didn't get slipped.
no, I got in before the move. Oh, you mean on my stop loss? Didn't hit my stop loss. And I went after the let's say after like 15 minutes, it made that one single wick there to get out, and that's, or not to get out, but to me that was my way out, and that's when I got out um, of that trade. I don't know if you can see it, but
That is really wild momentum here. I'm just, on the back of the mind,
yes,
if anybody was having stop loss, it was gonna get slipped. I'm sure. Let me see a 1 minute candle. Let's see how. Okay. Look at this 1 minute candle. There was
actually,
100 and.
actually I can show you my screen. I
Yeah, yeah.
I can show you the let me show you just a little bit, just to get by. That's the trade. I just got in on a short. It was supposed to be a scalp, and my stop loss was wide. And I capped it until this is in the 1 minute, says there. And I got out, but barely barely got out.
That's
That
an
was not
art to me.
comfortable.
That's an art
Yeah,
to me
and
right now.
this is I did finish in profit, but that's like almost break even. It's not really that much of a profit, but anyways, go ahead. Let's go back to yours.
That was really awesome there. You just, sold here, and again, you fixed the trade here. Amazing. I think if I see by my eyes, it was also coming close to the 200 EMA. So, yes, definitely there was a closing point here, just based on the 1 minute time frame. And why you decided to short here? Because of this area? Or you maybe assumed that this is a liquidity move here?
Why did I take the short?
Yeah, yeah.
Well, the first one was it has nothing to do with the impulse, because the impulse didn't happen yet. The first trade I had. Let me see if I can bring it back up. Let me change to mine.
Yeah, yeah.
That trade, this first trade, had nothing to do with the impulse, because of course it didn't happen. That happened like 5 minutes before the move. And I was waiting for price, and I was looking, what did price react to? Does it make sense that price? Because at that moment I'm at damage control mode, right? I no longer am
Okay, yeah.
interested in my TP. What I'm interested is getting out at as less damage as possible. That's what I'm thinking. I'm on a defense right now because this totally blew up in my face. So at that moment, I'm no longer thinking whatever I was targeting below, because that's history, that's past, that's not gonna likely to happen. So I look back and see what did price react to, right? And we can go to on the higher time frame, and I see that we do have a higher time frame daily order block, and we did push beyond these swing highs. Now they are not exactly like huge levels, but I assumed, the market already took out these swing highs, which were, where the stops would be, where the liquidity would be, and it would likely, instead of just continuing, it likely need to come back and retest either something all the way from the beginning, or at least create some structure. And so I basically, this is in my fixing mode. So I
Okay,
got
okay.
in a second trade when I started seeing that it was breaking. Actually, it was on the second bar, It was this bar that I saw that was breaking down from, and I assumed, this is any as good as any moment to bring in my average entry point and see if I can hit that or at least come close to it. I can close it, and then I'm probably gonna be. I actually thought I'm gonna be taking the loss. I'm gonna be taking all. I'm gonna be taking. Let me go back. Actually, this is not a bad thing. So let's go to the 1 minute and show you on that's on EU. But that's this is my thought, right? So I had one trade that I got in there as a short, had nothing to do with anything else, because I was looking for price to break that level and have a little reaction, little continuation, because the market was very, very weak. And then I saw, let me see, this is where I got in the second trade, right, in that candle. Not exactly there, but on that candle. And what I saw was that the market reacted on the daily order block, right there. And that's what I saw on the daily order block up here. And I understood that, it's likely that the market is going to push through that level later on, but it hit a major level. So it's likely it's going to need to come back to hit some level, because it hit a daily, a bearish one. It might need something like an H4 or a daily to push, to continue up. So as you can see here, we have multiple order blocks where price would likely come back to retest before it continue higher. And that's exactly what it did. It got in and it moved in, hit the order block, and it moved away. And that was all it need. And then when I saw that, I thought, well, this is my moment. This is the best moment I'm gonna get to get out. And I got out, I believe. I can actually check what the exit was. This is on the, actually I can put it on here. Right, my exit was, I'll have to estimate it, but actually I can check my terminal. My exit was at 27. So I got out at 27. So that means my exit was 27 rounds. So basically this is the level I got out. And I got out there because, I was expecting price to come back and hit some order block, not the EMAs, although sometimes that, if you don't have anything else, those EMAs will work just fine as a possible area to get your position out. So it got in, and I got, hit the order block, and when I just saw the micro reaction, I got out, and that's it. I closed those two positions, and it happened to be that I was in profit. But if I weren't in profit, I would have still just closed it out, because it made sense to me. It came back. If it's not going to, I already understand that I'm likely to lose this trade, and there is a small chance I might close it in profit. And this is all I want. Just want to get out with my clothes on, and that's it. Move on to the next trade. That was the trade basically. But it was, it's the importance of keeping your risk low, because if you're in a position and it moves 130 points against you, or pips against you, and you're trading too large, you're never going to be able to handle this. You're not, you're going to hit your, depending on your risk reward ratio, but you're likely not be able to let it run against you so much before you take an action. Right? I didn't panic here. I wasn't panicking or anything, but it was not comfortable. And I understood, I have to close it at this moment, or I start seeing that it start breaking these highs. I'm getting out and taking my loss and move on. But anyways, so that was the my little pushback
fixed
from
yeah.
that was a
I think
fix for
sometimes
my
we can do that. Sometimes we can do that, the thing that you mentioned here, coming to a major level. Of course, it also has its own probability. Sometimes the level is gonna be broken, or sometimes you are gonna have a chance to fix your trade, as you did here. And I think this is also a nice way to control the risk, But if you took so much risk on the first position, then you will not have a chance to fix the trade. So you have to be mindful about doing the things in trading. Actually,
Yes.
one thing came in my mind when I was at the Hyderabad event. It was the Fivers India event in Hyderabad. There was one session where he was talking about, there was a guy, a profitable trader.
Hmm.
10 years he was in green. He pulled out some charts, some data. He made a very good presentation. He mentioned that in 1 or 2 months of bad psychology, he lost it
Hmm.
that 10 years profit that he made.
Really?
Yeah. So I'm just coming to
Okay.
that point. What bad psychology can do to a person trading account. And there was also very amazing stats. Lot of people have basically they can win if they don't have the bad psychology, and these type of things can happen. So that's why I
Mm.
think diversification and all these things plays a good role. When you make some profit, you can invest in some safer things, like maybe property, or some
Yeah,
gold or anything like that.
yeah, you do have to diversify and
Yeah.
build your portfolio. I mean, outside of as an investor, and not just trade your whole net worth, so to speak, on your trading account. You do have to diversify when you
Yeah, that
grow.
is very
Um,
dangerous.
but if someone after 10 years, I mean, it goes to show how important it is to keep your psychology in check, right? It can be very, if you don't have a mental stop loss. I mean, not a mental stop loss on a trade, but I mean a mental stop loss on your whole account, right? If you're seeing days after days, weeks after weeks, that you're decimating, what you've been working for 10 years, at some point you should have some kind of mental stop loss that say, well, I lost 10%, I lost 15%. Some bells needs to be ringing, saying, double check everything. Are you still sure that you should continue with this strategy, or the risk settings, or whatever it is? And
Hmm.
when it starts hitting 20, 25, that's a very good moment to say, I really should stop. Most of the time you hit 20, 25%, that's already beyond the tolerance of a lot of people. You should definitely stop and reassess if this is before you blow up the whole account, everything you worked up for 10 years. You should have these mental equity stops on your trading capital, um,
Yeah,
to
exactly.
stop you in to stop you at 20%, which is a huge loss, but it's still recoverable, right? You can, in a couple of months, you can come back from 20% loss, responsibly, by the way. And we're seeing EU coming, retesting the. I'm gonna show back. I know I'm switching from one topic to the other one very quickly, but that's live trading. You can see how the market broke that level. We talked about it, broke it, had a first initial retest, and then come back to retest the other one, right? Look at that reaction. That's not coincidence. That's the market reacting of that broken level. And it may still come back and break it, go deeper. You know, that this can still happen. But this little reaction here, um, I don't know what's going to happen next. I don't think you should be, this little reaction is what you want to be seeing. That's a good sign. Doesn't mean it's gonna always gonna go up from here. It can still go a little bit deeper before actually going up, or not go up at all. But you want to be considering these signs, or these cues that the market is giving you. It's holding up. It's behaving as if it's going to continue higher. We will have to be watchful, patient, and see it continue. But coming back to the person, very I would say very very, give him a lot of credit to share that experience with everyone,
Yeah.
because you know you know that's how we learn, right? We learn
Yeah,
from.
there was also a YouTuber actually. I saw
Okay.
probably like 2 years ago.
Hmm.
He showed his verified stats
Hmm.
in a stock kind of a broker, where he has made, if I'm not wrong, probably like 150-ish thousand in 3 years, and he
Mhm.
lost it that money in about like probably 6 months or something like that. So the point
Okay.
that I'm trying to tell here is psychology is really a big thing in trading. It doesn't mean if you are making profits and if you are ending a year in a in some profits, psychology cannot be messed up in upcoming years. We are humans, we have some emotions. Maybe we are not feeling well. No matter how much professional you are, these things do happen to every trader. So I think we can take lesson from these people who have done really well, who have shown verified stats like this, and convincing or confessing, I'm sorry, their mistakes. So I think we should learn from these people. Of course, we all are gonna do things on our own, but at least have this thing in our head that we also are gonna get to some point where we are increasing our numbers in trading, because at the end it is just number game. Right now, if you are making $100, probably next year you are going to be making 1,000, and probably next 2 3 years 10,000, and then 2 3 months of bad psychology can wipe out lot of gains. So I think we should have
Actually,
some parameters. Yeah.
no, go ahead. Sorry.
Yeah, I was just gonna say we should have some parameters where we can control the exposure in the market. So yeah.
Yeah, I think there's a couple of things to be said. We sadly we don't have enough time. It's already time to close our
Oh yeah, we
stream.
are.
But
I
one
forgot.
thing is certainly so true about the psychology, how important it is, because it can be so destructive once you get on this path, on these revenge trading or these getting back at the market or whatever it is that triggers you. That's for sure a major thing for everyone. Um, but there's also something that is an eye opener, that these traders are very successful for some long extended period, and they somehow they lose their edge, right? They lose their edge, and this also is a real thing that needs to be talked about and considered, that because you are a month profitable, even 6 months profitable, may not necessarily mean that you're ready for all kinds of market regime, all kinds of market conditions. You are good in that condition, in that market condition. But what if the market changes on you? What if the market is less impulsive or more ranging or whatever
Mhm.
other market condition? Are you still able to be profitable on those conditions? And that's why do I ask this? Not to be difficult or to be critical. It's because it's a real thing. If you're not ready, no, you will be losing, and then the psychology will be showing. If you're in the psychology sense, you're not ready yet, then it will show, right? You will see that you're not able to handle your losses, and it trips you into going to revenge trade and all those bad things. So that's very important to have that idea, that you want to have uh, a good period where your market has changed and shift um, uh, over an extended period, to give you confidence that you're ready for that. You can be confident, not be falsely confident just because he has 3 months or 6 months of profit. And you can see
Yeah, exactly.
EU bouncing off of that level nice and beautifully as we are finishing our conversation. Samir, the other thing is, it
US 30 is
may or may
also
not be.
showing some. I'm sorry. You can speak. I was just saying US 30 is also showing some impulsiveness. Maybe in about some minutes, I may can hit my take profit. But guys, we are also coming at the end of the stream. Tomorrow, I will share the stats of this trade, whatever happens. So you were saying something. I interrupted you. I'm sorry.
Oh, no, no problem, man. I was gonna say, besides the psychology, which is very important, for everyone all the time, every day. There's the second one that I remember, that I mentioned, that you want to not be falsely, naively confident about your performance because you're doing well in a month, 3 months, 6 months, or even a year. In the greater scheme of things, it's great. I congratulate you, but be aware that you may not have seen everything. So don't be too overconfident about the future. Make sure that you're still monitoring everything nicely. So that's the second thing. And the third is, it also shows the importance of your risk management, because if you are sophisticated in with your risk, you shouldn't be able to blow. I don't want to say this because everyone who blows, and people blow their account all the time or lose everything they win for some period. It happens, not all the time, but it does happen. And I don't want to I don't want to say anything uh, that might not, it's not directed to them. But the reality of the thing is that your risk management should not allow you to lose everything you've earned. That shouldn't. There should be system checks in place that will stop you way before you leave even half of what you earned. Right? Something like 10%, 15, 20%. You should have clear levels, alarm bells ringing, mechanisms that tell you, if this happens, I'm going to take the day off, I'm going to take the week off, I'm going to take the month off, just to cool you off, because something is not right. And I cannot keep myself in this destructive path, because I'm going to be burning through everything I work for. So that's part of risk management. Managing when you see things going wrong, you take action, you intervene, you stop yourself from hurting yourself even more. So those are all great. Sadly, we don't have more time to talk about this, but I'm sure we can talk more about this tomorrow. For those who are interested in more of the fivers, we have a session coming up on the Discord community, the greatest community on the Discord level in Discord world, which is our trading community. It's free, it's available, it's open for everyone who has an account with the Fivers, and you're all invited. It's starting in about 40 minutes. Yes, Samir.
Yeah, it was a lovely stream, and definitely we should learn from others' experiences, and we should be mindful about the risk when it comes to trading, as trading is risky. So you should find every way to control the risk involved in trading. Can be taking the lower position sizing, can be doing some mental practices and all those things. So we are here. You can learn from others mistake and the experiences that we share. With that being said, guys, again, lovely spending time with you guys. We'll see you tomorrow same time. And my trade is still running. Let's see what this particular trading session offers me. So right now, I'm just holding the trade. Tomorrow I will share the stats of this trade, what happens, how much I made, or whatever you want to know. Completely open about it. And with that being said, guys, we'll see you tomorrow. And thank you for joining the stream. And make sure, if you're not subscribed to this channel, you can subscribe to stay tuned about all the updates that we have. So with that being said, take care, guys. Bye bye.
Perfect. We'll see you guys tomorrow. Take care and have a good one.